is now EBITDA positive. They have mentioned in the shareholder letter that Q2 volumes could be impacted and the volume picture could be a little hazy compared to Q1 as well, which was already down substantially on a YY basis. So we will have to continue to monitor the progress as well as the con call that's also scheduled at 1 p.m. today and get you all the key updates. But watch out for Ola Electric as a stock because, while they have mentioned some key other commentary for the new venture, Ola Shakti, I think the shareholders will continue to focus essentially on the automotive margins as well as the automotive sales because they have been under pressure in terms of market share. Let's quickly look at the market now. The Nifty 50 has continued to be under pressure even today, and we mentioned at the start of the trading session that 25,500 is a key support. We are very close to that mark now, and it'll be very important if we can maintain that because the other one goes all the way down to 25,300. Quickly look at the heat map for the Nifty 50 and you'll see some key names popping up, something like a Hindalco that wasn't working and something the street wasn't happy by, down almost 7.5% in trade. Something like Grasim is also under pressure. The CEO of its paint division has resigned and he subsequently moved to Britannia. So while we are seeing something like Asian Paints having a huge positive run, largely in the back of an upgrade from Nomura, maybe some positive trigger coming in from him, the Birla Opus CEO going on, that'll be something to watch, Mahima. But overall, in terms of, that's the key performance on Nifty heat map. It's a very weak picture to say the least. Quickly look at, the advanced decline ratio before I toss to Mahima for the broader markets, because we have seen that a crisscross day, but then consistent decline. So it's a weak trading session to say the least. But Mahima, the mid cap and the small cap, which has been a strength for the market, is the other one that we're watching out for.
Yeah, I mean, look at that advanced decline ratio, right? That clearly indicates the kind of pressure that's there on the broader end of spectrum as well. The mid cap 150 down by about 0.7 odd percent. The small cap 250 also down by about the same percentage. In fact, down by about 1% now as we speak, and at its stays low point. If we can try to pull up the BSE 500, while the Nifty 50, there are big names that are tanking around 7%. To say about Hindalco. And on the flip side, you have Asian Paints, which is doing very well. In the broader end of spectrum, you have specific counters that are doing well in terms of earnings, in terms of news, and some counters that are also seeing pressure on the back of earnings and news. You have CCL products on the back of the acquisition up 12%, Reddington up 11%, Privy, Spec Chem up 9%, Gujarat Pipar also up around 8%. But on the flip side, FDC, Asahi, India Glass, Home First and Delivery down by about 7 to 9% each. But with that, let's also welcome in our guest for today, Shahina Mukaddam, independent market expert, and Kush Bora, founder of kushbora.com, joining us now. Good morning to the both of you, and we'll go to the first caller of the day. Pradeep is calling us from Visakhapatnam. Pradeep, hi. A very good morning to you. How can we help you today?
Yeah, very good morning, and thanks for taking my query.
Our pleasure, Pradeep. Go ahead and ask your question.
I have 100 stocks of PNB Housing, bought at 931.
Okay.
Can I average it more? The stock is down a bit today. And what is the short-term outlook?
Okay, short-term outlook. Okay. Then I'll take this up with Kush quickly. Kush, your view with regards to where PNB Housing stands and what are the charts indicating?
Sure. First, very good morning, Mahima. Hi, Shaina. Well, the stock's struggling to hold on to the 200-day moving average. It's been trying to do that for some sessions now, was successful, but today, along with the market, correction or profit booking, you can call it, this is also seeing some pressure. No, I would not advise, averaging, as I usually don't. But here too, because the 200-day moving average has been broken again on the downside, I would still suggest you can hold on to this with a stop loss at 905. That's where the near-term stop comes in for PNB Housing. If that's broken, the stock would slide further and test the 200-day moving average at 890. So hold with a stop loss at 905. You could exit at your cost or maybe slightly higher.
Got the view, Kush. But let's quickly look at a key stock, IMFA, and pull that up on the screen because it was in focus in the back of the Q2 earnings, down almost 4.8%. And we actually got a chance to speak to the management on the acquisition plant for Tata Steel's ferrochrome plant at Kalinganagar for 610 crores. And let's quickly listen what the management had to say, and then we'll get you the guest views as well on this one. Listen.
The company in focus is IMFA. The company has announced an acquisition of Tata Steel's chrome plant in Odisha and its earnings as well. Joining us to dissect this important acquisition and also the earnings is company's MD Shubhrakant Panda at IMFA. Very good afternoon, sir, to you. Especially the first question is the acquisition front. Can you identify what are the cost synergies coming in and what will be the actual benefit coming into your company after this important acquisition of Tata Steel's chrome plant in Odisha?
Hi, certainly I'll be glad to do that. So as you know, our existing facilities are in Therubali and Chodwar in Odisha, where we produce about 260,000 tons per annum of ferrochrome. And we are in the process of putting up a greenfield project in Kalinganagar, Odisha, which is a 100,000 ton per annum project, which will commission in June of 2026. Now, the unit for which we have signed an asset transfer agreement is located very close to our greenfield project. So that in itself leads to a lot of operational synergies, because eventually we will have about 250,000 tons of capacity at that location, 100,000 greenfield, and the unit which we are acquiring will eventually produce about 150,000 tons per annum. Now, in terms of cost savings, Kalinganagar is very well located. It's close to our captive chrome ore mines in Sukinda. So, the logistics costs, inbound logistics costs are going to be more competitive than as compared to Therubali. And we are also, while we're looking primarily at the domestic market in terms of future growth, but we are also close to Paradip port, so exports will always be an option. So lots of operational synergies and cost savings as well coming in from this unit when we take control, which we hope to do in while we have indicated about 3 months, but I think both sides are aligned on expediting it, and we hope to be able to do that perhaps even before the end of the current calendar year.
And Mr. Panda, any kind of additional capex we can expect from this Kalinganagar facility? And if yes, could you just quantify that?
Right. So as you know, the base purchase consideration is 610 crores. And what that brings us to our fold rather is 4 furnaces adding up to 66 MVA, which are good to go pretty much from the start. I mean, of course, it will take time to scale up. But there is a 5th furnace, a 33 MVA furnace, which is under construction, which, we have only done a due diligence, albeit a very thorough due diligence. But our current estimate on that is roughly about 50 crores of capex and about 8 to 12 months time to operationalize that. And that's where I was mentioning that what we will achieve in terms of output is to scale up the unit first to close to about 100,000 tons and then commission the 5th furnace.
Well, the other one which wasn't focused today is Motherson Wiring, and that's largely again on the back of quarterly earnings because we are in that season. We actually caught up with the CEO Anurag Gehlot and the CFO Gulshan Pahuja as well, sharing insight into the company's growth driver. Let's quickly listen into what they had to say.
First question is for Anurag. Revenue has jumped almost 19% on a year-on-year basis. I have taken the calculated numbers and 2 reasons coming in. One is premiumization and the second being new model launches. Now, will this rate of growth sustain going ahead? What other levers of growth would be there for revenue, Anurag?
Thank you for taking us on NDTV Profit. As you rightly said that we have done 19% and outperformed the market where passenger vehicle is only growing by 4%. We have outperformed, and this is because of premiumization as well as the new launches availability. As you see that in Q4 also there are new product launches are happening and we are available in those launches as well. And it's a regular business that we are working on the models which are coming into the further quarters or further year which are going to be launched, or the facelifts or the regular businesses growing. We have to just see if the consumer is kept on buying the high top models into the passenger vehicle, into the SUV categories, then obviously this benefit will directly come to us. And as I said that we are already available into the new launches. So I think the H2 looks promising. It looks to be positive, and we have to just wait and watch. If the volume grows with a single digit, we should be outperforming the market once again.
That's pretty interesting coming in from Anurag. But Gulshan, the question remains is the calculated margins, which were a tad bit lower because you spoke about premiumization growth. One number took my eyes into consideration is almost a 60 bips cut coming in the margins front. I know it's a very smaller amount, but if you're talking about premiumization, then why the margins pressure is there? If you could just give us a reason for it.
Right. I mean, if you see our expansion in greenfield units, they are currently for the last 1 year, we have been expanding in the three locations, comprises of 5 plants at the same time. So that's the reason, one of the reason which attributed to a lower margin, because there are customer delays as well, because certain volumes which are committed in the Q2 and the Q1 of this year have been pushed to Q4 of this year. And out of the greenfield unit, only 1 unit, Kharkhoda, is going as per the plan. So some of the delays on the part of the customer side, I think that led to the decline of margins which we have been seeing in this current period. And one of the reason for that was also that increase in the employee cost. The product we have, we need to hire labor well in advance to upskill them and then deploy on the production lines. So that could be the one of the impact which is driving the margin. If you just remove the net startup cost, which is being incurred at the greenfield units, I think our margins are being very consistent and have been improved quarter on quarter as well. We are standing at 12.7% versus last year at 12.7%, and marginally improved, I would say.
Interesting. And Anurag, one of the 3 greenfield projects has actually started their production as per the schedule. Now, which one is this greenfield project? And I suppose 2 more projects are there. Just give us the timelines for these projects, where they're actually standing, and if possible, what's their progress?
Okay, as Gulshan has said, that one of the greenfield, which is ramped up to the complete volume, I think utilization is more than 80%, and product has been already launched in Q2. The other side, this one is Kharkhoda. The other site, which is our Mandal, Navagam, I think one of the EV product has been already launched. Volume is going up. They're not yet to 50% also, but they are going to be ramping up the volume. The other product which is going to launch in the same plant, or the ramp up, is going to happen in the Q4, which has been delayed from Q2. And coming to the Pune, I think one of the product which has been launched in the last year in Q2, those volumes has not picked up well. And the other product which has been come on the volume ramp up, that has also not reached to the 80-90% out for that. So 2 of the plants have not reached more than 50% of utilization, except Kharkhoda, which is more than 80% at this moment.
Shaina, do you have a quick view on something like a Motherson wiring? Is it one of your preferred picks in the auto ancillary space, or do you like something else?
I think it's a good stock to be invested in for the longer term. We saw a lot of correction that came in last year because of the performance that had not kept up to expectations. But I think things are stabilizing now. And even in the quarter numbers, I believe they have maintained the margins. And with new capacity coming on stream, I think going forward look better. Valuations are fair. I wouldn't say it's cheap, but maybe you could keep a stop loss, but otherwise you could continue to hold it for the long term.
Okay, all right. So that's the view with regards to where Motherson Sumi wiring is concerned. We've got our next caller. Sai is calling us from Hyderabad. Sai, a very good morning to you. How can we help you today?
Yeah, I have RVNL.
Okay.
500 shares.
Okay.
I bought it at 419. I want to keep it for 2 to 3 years.
Okay,
Is
Sai.
it a good decision or not?
Okay, got your question, Sai. I'll take this up with Shaina. Shaina is sitting on a loss of around 49,000 odd rupees and wants to know if he can continue to hold for the next 2 to 3 odd years. And would this be the counter that you would want him to play the railway theme by?
Yeah, I mean, but in the shorter term, he could see some bit of softness coming in. But I think if he continues to hold it for the medium to longer term, he should actually recover his losses that he's made. They have got a lot of orders on hand. Order book position is pretty strong. So I would say that he could continue to hold and hold it for the 2 to 3 year period that he's talking about. Because I believe the orders, once the execution improves, they should do better. So he could continue to hold. It's one of the stronger stocks.
Got the view, Shaina. But we also have another long-term query coming in on something like a TCS. And Mohit from Ludhiana in the regular viewer. So thanks so much for writing into us. Mohit is asking a quick view on something like on TCS. He's bought at 3,166 and asking a 3-year view. Shaina, would you recommend that trade or buy into something a little more with a higher growth in the mid-cap space?
Well, if you're a long-term investor, I think TCS, is something that you would hold in your long-term portfolio. Further, if you're looking at a shorter term or you're looking at a higher growth stock, you could look at something like First Source, or you could look at something like a Birla Soft. I think these in the smaller cap stocks will show a higher growth over a 3-year period. But otherwise, TCS, if you're a long-term investor, a small part of it could be part of your portfolio.
Got that view. But we have another query coming in from Hyderabad, and Kiran is dialing in for a stock query. Kiran, very good morning to you. What's your query?
Hi, sir. Good morning. So my query is regarding Kainst Technology, sir. I'm holding 28 shares.
Okay.
6680, sir.
Okay, and is it a long-term view that you're looking for the stock?
It is a short-term view, sir.
Short-term
I have actually a trading perspective, sir.
Trading
On
perspective.
this query.
Okay.
But it actually posted good results recently, but it is unable to go higher.
Yeah.
So should I shift to something like JSW Infra or ICICI Bank? Should I shift my money for a short-term trade, or any other trades are suggested from both the experts is my query, sir.
Got it. Got your question, Kiran. Kush, let me come to you. First, a quick view on something like Kainst, because while the results were strong, revenue slightly below estimates on the fundamental side, and the net working capital was very exceeded in terms of receivables. On the charts, it has, of course, fallen from its highs. What would you recommend? And would you recommend getting into something like ICICI or JSW Infra, as Kiran is asking?
So as far as Kainst goes, I think there's a near-term support at 6,400, and in the way the stock has slipped, in the recent month and a half, there's a possibility that that support level could be tested. So on the whole, I would suggest it's not a bad idea to continue holding on to Kainst despite this near-term selling pressure, because now the stock's starting to approach over sold territories, and perhaps could see some sort of sideways consolidation or even a rebound as well. So hold with a stop loss at around 6,400. And on the flip side, neither of the two that he's mentioned, ICICI or JSW Infra, look really well poised for the short term. So I would avoid both of them for now from a short term perspective.
Okay, we've got our next caller. Barney is calling us all the way from Canada. Barney, hi. How can we help you today, and how's the weather there in Canada?
It's getting cold here, and good morning, everyone.
Good morning.
So I have Capital SFB Bank, right? I have around 300 shares at the rate of 240. And I want to know what is the long-term view, and if I can add more stocks on this one.
Okay, Barney, I got your question, and I just want to confirm as to what was your thinking behind buying this particular counter?
I saw the fundamentals is really good, and it has a long-term potential. That's the reason I brought it.
Okay, all right. I'll take this up with Shaina then. Shaina, his question is on Capital SFB. He's sitting on profits of around 8,000 odd rupees right now. Should he continue to hold from a longer-term perspective and maybe add more to average out?
Well, in terms of value, it's a very small cap bank. In terms of valuation, it doesn't look too expensive with price to book less than 1. The numbers also look pretty okay. There's a small growth in terms of profitability as well as turnover. I would say in the shorter term, he could see some bit of a correction going forward. But otherwise, for the medium to longer term, given the fact that the valuations are not expensive and it's a small cap, we could continue to hold.
But viewers, let's take a deep dive into the derivatives market now, and let's bring in Sharad to give us some snapshot for the trade today. Sharad, over to you.
Well, interestingly, the trade setup, it still looks like, there is a congestion. That means there is some sort of consolidation happening. But let's just pull up the heat map for Sensex, how things are actually panning out. It's even Stevens, but look at the numbers. Asian Paints, Reliance, they're having a higher weightage as well. They are up almost 5% for Asian Paints, and Reliance is also up almost 1.5%. But the fall happening in Eternal, again, the selling has resumed in this counter. And post this Q2 earnings, the numbers have been on the weaker side. And Bajaj Finance, Tata Steel and Power Grid also, we are seeing profit booking happening in certain counters as well. Now let's pull up how the Sensex 30 has actually moved in today in the futures market. It is, you could say, in a spot market, it is on a flattish levels, and the open interest is coming at roughly 1,000, almost 60,000 open interest contracts coming in. And let's just look at the congestion levels where the call options are most active at, and currently it's coming in at 83,900. That's the number which I'm looking for. But in the put segment, that's where it's pushing in, and roughly at 83,400 and 83,500. It's equally there where the congestion is happening in these contracts as well. Let's pull up the BankX, how that has been working around, and the key top trades moving in from BankX. We see still SBI technically very sound on the charts as well, and a major major puller in terms of points also when it comes to the BankX, apart from this IDFC First and Yes Bank on the lower side. Interestingly, if you see the heavyweights, they haven't participated much in the top trades today when it comes to the overall volumes. In the call options, if you look at the pickups, that's coming at roughly 67,000, and that is where the congestion is there. On the lower side in the put option, we can see the numbers coming in at roughly 62,600 where the put buildups are there. But the stocks, which is very important to actually understand in the day's trade, the first of all, I would like to point out the key longs which are in focus. There are 4 counters. Paytm, Britannia also are making it to the list where the key longs are being developed. If you could show that, Asian Paints and Astral is also there where we are seeing longs developing. Key shorts, Delivery, Hindalco, Grasim and Indian Hotels. These are the stocks which we would be focusing on, and this also includes Indian Hotels making it to the list. Now let's get the long unwinding stocks as well, especially BSE and Inox Wind. These are the 2 stocks, if you could just fire that, where you can actually understand the overall long unwinding happening, and BSE is also trading at its day's low level. And lastly, short covering, we see Piramal Pharma and Nuvama Wealth also making it to the list. So this is the entire FNO snapshot at this moment.
Well, thanks so much for that, Cheryl. But it's that time of the show where we take the first round of the rapid fire with both China as well as Kush. Both of you keep your answers as short as possible for buy, hold and sell. The first query is coming in from Bengaluru. Venkatramani is asking for Reddington, bought at 1,000 shares at 245. Kush, your quick view?
Yeah, Reddington is a hold. You might want to keep your stop losses at the 260 mark. Okay,
the next one is on GIC. Anupam from Hyderabad is asking this question. He's holding 192 shares at the levels of 433. Should he exit or keep holding? Kush, your view on the charts?
433, is it GIC RE?
No, GIC, General Insurance Corporation.
Okay, I would suggest that this is an exit, but he wants to give himself an outside chance. Keep a stop loss at 355.
The next one's GMDC, and a short-term view is what Kanan is asking from Kerala. Holds 80 shares at 609. Kush?
Oh, GMDC is very much a hold. Keep a positional stop at 555.
Okay, Brain Bees is the next one. Amit Kapoor has been holding since IPO. Wants to know if he can continue to hold. He's sitting on a loss of over ₹1 lakh. China, your view?
I would say that it is better to switch.
Aether Energy, a long-term view is what our viewer is asking Nagaraj for the next 2 years. Shaina, would you recommend that trade?
I will pass this.
Okay, Hindalco is the next one, and this is for you, Kush, specifically. Bhav from Gurgaon is asking whether they can continue to hold this counter for the next 2 to 3 odd months. Your view? Down 7% today.
Yes, he can. Keep a stop loss at 755.
The next one, something like a Suzlon, and our viewer is asking a long-term view. Roy from Kuwait is asking a long-term view on the stock. Results came also in the last couple of days. Shaina, your view?
The results were good. I would say you can hold, but hold with a stop loss. Hold with a stop loss close to about 55.
Okay, BEML is the next one. Aditya from Hyderabad is holding 12 shares, bought at the levels of 2187. Is it a good counter to buy on the dips? Kush, your view?
No, I wouldn't suggest that.
All right. Okay. So that's brings us, of course, that brings us to the end of this first round of rapid fire. But viewers, we'll try to answer more queries on the other side of this show. So do stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही profit लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty. Occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है और
Welcome back to Ask Profit. Do keep sending in your queries. We'll try and answer all of them in the next half an hour of the remaining part of the show. The first query that we have right now is on Canara Bank. A viewer has bought roughly about 57,000 shares, if I got that right. Yeah, 57,000 shares. So it's a big position, bought at 139. And the question largely is, will it go up from here in the near term, or will there be a pullback? And he's asking Kush, to you specifically, if the target of 148 can be met in the first week of December. So it's a specific query for you. Your quick view on something like a Canara Bank.
Yeah, with the caveat, that the timings are obviously the most difficult part of, technical analysis in terms of, when it'll be hit. But yes, a couple of points. One, I have been extremely bullish on Canara Bank for some time. 130 was the resistance level. And I did maintain that, beyond that, the move will be very swift. We've already seen that. Will there be a pullback? In all likelihood, the stock could actually slip to 137, 136 zones also in the near term, because it's now hitting overheated territories on the weekly and the daily basis. The volumes also, if you see day on day, are starting to wane off a little. But do I remain constructive on Canara Bank? Yes, I do. Is 148 a realistic target? I think it is. My only concern is I'm not sure whether December 1st week will really be the time when it hits or not. But the trajectory does suggest that 145, 148 are definitely good targets from a near-term perspective.
Okay, all right. So that's with regards to where Canara Bank stands. We've got our next caller. Kirti is calling us from Vijayawada. Kirti, hi. A very good morning to you. How can we help you today?
Hi everyone. I would like to buy Eternal for the short term. Is this the right time to buy?
Can you define short term for me?
It's like 2 to 3 months.
2 to 3 months. Okay, I'll take this up with Kush then. Kush, we've seen a lot of volatility around Eternal since its earnings, There have been days where it has, performed well. There have been days that it's seen profit booking. Do you think from a short-term perspective, this is the right time to make an entry?
So, Mahima, let me start with the broad view, which is that I'm constructive on Eternal from a medium-term perspective. And I would take this dip as a buying opportunity. Do I go out and buy now? My suggestion would be wait up a little. Couple of reasons. Multiple support zones being broken. 320 was a strong support zone that has been broken. Plus, if you see the revival of the stock from 195 odd levels, the rising trendline support has also been broken, and that has happened just today. So the fall has not abated yet. The volumes are also pretty steady on the downside. So once the volumes start to wane off and the stock starts to consolidate is when you buy. Yes, it's a good stock to keep on your radar for a buy on dip strategy, but do I go out and buy now? I would be a little cautious and I'll wait. Perhaps 300 is the zone where the stock would find support and halt and consolidate. That's when you go out and buy, but not at the current juncture.
And it's definitely one of the retail favorite stocks, to say the least. Eternal down almost 1.6% today. But the next one that's coming in is on SJS Enterprises, and it largely operates in the auto ancillary space. Ramana from Bengaluru is asking if it's a good time to buy the stock right now. Would you recommend that trade, China? Because it has seen a decent run up, but the growth continues to be very strong for the company. Your view?
Yeah, it's been a one-way up, as you said. It's done pretty well in the shorter term. A small cap auto ancillary stock. Yeah, he can buy it because it's doing pretty well in terms of performance, also in terms of the numbers also. He can buy it. He can keep a short-term, a medium-term stop loss of 1,500, and he can hold it for the medium to longer term. Here, in terms of numbers, they did quite well in terms of the profitability as well as revenues in the September quarter. So he can hold it and hold it with a stop loss.
Well, that's China's view on SJS Enterprises. Definitely a one-way up for the stock, up almost 40% in the last 12 months. We have another caller coming in now from Hyderabad, actually. Snigdha is dialing in for a stock query. Snigdha, very good morning to you. What's your query?
Yeah, hi, good morning. So my query is regarding HDFC AMC. So I have 43 shares at 5710.
Okay.
So, we are getting a 1+1 share in this month. So I just want to know if we can buy more shares at any corrected at what price, any corrected level at what price, and what sort of targets could I expect in the next 1 year?
Next 1 year. Okay, got the views, Snigdha. Shaina, let me come to you on something like an HDFC AMC. Your view on the stock, and is it advisable to buy into the stock before the corporate action to get the bonus shares?
Yeah, the bonus shares is going to come up very soon. So definitely you hold what you have and take that advantage. In terms of pure valuations, it is slightly on the higher side. But if she is looking to have some tax break using the bonus shares, then she could buy it. You could buy it, keep closer to about 5,200 if at all it corrects to those levels. That would be a good level to buy it. Otherwise, keep that as your stop loss.
All right, okay. We've got our next question from Kuku, who's writing us from Kerala and asking about Apollo Microsystems from a longer term perspective. Wants to know if this is the right time to buy the counter or not. Shaina, your view on this one?
Apollo Microsystems is a concept stock. So if I'm buying it, I would buy it for the, really longer term, because in terms of the medium to shorter term, valuations are extremely expensive. But I would add it at dips and hold it for the long term, because it's a concept, is the future. If I would say if you really want to hold stocks that have the potential to be multi-baggers, but near term it looks very expensive.
Okay, all right. So that's with regards to where Apollo Microsystems is concerned. We've got our next caller. Manav is calling us from Gurugram. Manav, hi. A very good morning to you. How can we help you today?
Hello, good morning, everyone. So today I have a query on cement space. So I'm looking to invest in some good cement option. And I have a perspective for like 3, 4, or maybe more than longer term, basically. So I'm looking, I have not shortlisted any particular counter.
Okay.
So I just wanted some good picks from the experts in the cement space.
Okay, Manav, I got your query and I'll take this up with Shaina then. Shaina, your view with regards to cement sector and your pick in the space?
Yeah, I think the cement sector will do pretty well over the next 3 years. It is a good domestic play. In the smaller cap, I would go with something like a Dalmia Cement. In the larger cap, I would go with something like Ambuja Cement. There, they have done pretty well in the quarter numbers also that came out, as well as given the fact that capacity expansion both organically as well as inorganic is likely to continue to be there. EBITDA margins are likely to be better. Cost, optimization in terms of using of with the power cost being coming down over a 3-year period. I think these are factors that will be positive. So I would take these two stocks as my pick in the cement pack.
And viewers, standard disclaimer, Ambuja Cement is actually part of the Adani Group, and so is the channel that you're currently watching as well. But the next query is coming on something like Astral. And, our viewer is Sarath from Chennai, is actually holding roughly about has bought it at 1,507 rupees per share and bought 200 shares. He's been holding for more than 7 months and is asking a quick view on the stock from the long term. We also had the management today at 9:20 on India Market Open. So do catch that on YouTube if you haven't. But Shaina, would you recommend continuing to see that momentum on something like an Astral? Because this might be the first time in terms of earnings growth, PVC volatility is also reduced, but stock's still expensive. What would you suggest?
I think the numbers were decent, but even the stock has run up quite a bit in my view, and makes the valuations for the next couple of quarters expensive. So if I want to add, I would add it at least 10 to 15% lower levels. I would not be buying it at current levels. And PVC prices, while there is expectation that there would be some anti-dumping duty coming in for the government, but this is going to take some time to actually impact in terms of the prices, average revenues and profitability going forward in the next 1 to 2 quarters. So I would not be buying it as of now. Better to buy it at dips because of expensive valuations.
Buy at dips, and definitely that's, Shaina made a very important point of the anti-dumping duty. November 12th is what Mr. Savlani is expecting some kind of news flow to come before because of the deadline. So that'll be something to watch. But we have another caller dialing in. Rajiv has a stock query. Rajiv, very good morning to you and welcome to Ask Profit. What's your query?
See, my query is for IDBI Bank.
Okay.
I got it for just a day back. I purchased it for 99.50, 200 shares.
Okay. And do you want a short-term view or a long-term view?
Like it can be long-term also, short-term also, depending on what I get.
Okay, but it depends on you also, Rajiv, right? If you have the capability to hold it for some more time, because there are multiple news flows in terms of its privatization, in terms of sales as well. So would you be okay with holding it for a long term so I can get you a long-term view?
Yeah, I am okay for that also.
Shaina, would you recommend IDBI Bank? Because the numbers generally in terms of provisions are quite decent for the company. Your quick view on the stock?
Yeah, I would say that you continue to hold. With the M&A activity that is picking up steam in the overall banking, IDBI is next in the list. So hopefully there will be a strong buyer coming in. And so it's better to hold. Even numbers were pretty strong in terms of, as you mentioned, provisions were a bit lower as well as profitability was strong. So continue to hold. I think valuations also just about price to book of I would say is 1.8 times current year, which doesn't make it too expensive for M&A prospects. So continue to hold.
Okay, all right. Sticking with the banking space, the next question is from Vishnu Darus, writing us from Trivandrum, Kerala, and asking about ICICI. He's saying that the stock is down despite of a decent set of numbers and wants to know if he can average out, planning to hold for the next 1 odd year. Shaina, would you recommend that?
Well, I personally also hold it, but it's in the long-term portfolio and for many, many years. So I would say, yes, you can add, but add it at dips. I would say at current levels, there seems to be some bit of softness coming despite the good numbers. I would say if you want to add it and hold it for the long term, better to buy it somewhere close to about 1,200, 1,250, which is not much lower from current levels. But yeah, it'll give you a better buying price.
All right, we've got our next caller then. Ravi is calling us from Hyderabad. Ravi, hi, a very good morning to you. How can we help you today?
Yeah, very good morning. I have a query on Indus Towers.
Okay.
Is it a good time to buy or can I expect any correction going forward?
Okay, and Ravi, how long do you intend to hold Indus Towers once you buy?
Yeah, I can hold for 6 to 8 months.
6 to 8 months.
Hmm.
Okay, then I take this up with Kush. Kush, your view with regards to where Indus Towers charts are concerned?
So the stocks rebounded sharply in the last three sessions, on the back of support at the 200-day moving average. Volumes also healthy. I think now the stock is coming up at the supply zone of about 399, 400 odd levels. In fact, yesterday and or rather day before and today also, if you see the stock's high is fairly close to those levels. So I wouldn't buy it now. Perhaps on declines, and there's anyway a gap that was created day before around the 385 mark. So if the stock does dip and comes close to the 385 mark, that gap gets closed is when you buy, and then you keep your near-term targets at 400 and perhaps even at 415. A stop loss for this one comes in at 360.
Got the view question, but we have another short-term outlook on something like a Praj Industries. Our viewer Rajesh, who's writing into us from Kashmir, has a 90 shares at 346 rupees per share, and he's asking a 3 to 6 month view on this counter. So Kush, would you recommend that trade? Because we also had the management being quite upbeat today on India market open at 9:30. So what would the chart suggest for Praj Industries?
Yeah, so look, the stock's in a massive downturn. It's lost a lot of ground, in this calendar year alone. But the good thing is that, his buying price is not very high from the current price. And now the stock is starting to see a rebound. So what I would suggest is keep a very tight stop loss at 330 and continue to hold. The momentum indicators are picking up. The volume is starting to pick up. There is this 200, the 20-day moving average resistance at the 343 mark, which the stock is facing for the last 7 odd sessions. But I think once past it, the stock could actually zoom to 350 and 365 kind of levels. The risk reward ratio extremely favorable. So all in all, I would suggest a hold with a tight stop loss at 330.
Okay, so that's with regards to where Praj Industries stands. We've got our next question from Khurshid, who's writing us from Delhi and asking about Hindustan Zinc. He's bought 100 shares at the levels of 499. Wants to know if he can hold average at the current level, considering it can go further down. Kush, your view on the charts?
Yeah, well, overall, I don't, I still feel that the stock's, medium-term view is intact. It's had a very sharp run along with a lot of other metal names. Now it's starting to see some profit bookings. The volume on the way down are thinning, and the 50-day moving average and the support zone of 465 is kicking in. So while I don't recommend averaging, because the stock right now is seeing some downward pressure and has not really halted its fall, but yes, you could continue to hold, since the fall is not on the back of very high volumes. Positional stop on this one at 450, and the stock could start to see some rebound. But yes, there are resistances around the 495 and 510 mark. So maybe as the stock approaches those levels again, you want to start lightening your positions.
We have a lot of queries from the banking space, but before that, viewers, do dial in for a stock query. Number flashing on the bottom of your screen. Pick up the call. Give us a query and we'll take it with the guest as well. But the next one's on Indian Overseas Bank, as mentioned. Our viewer, Madhu Babu from Hyderabad has bought it at, he's asking if it's essentially a good time to enter at 39 rupees per share. And he's asking Kush for a quick view. Kush, would you recommend Indian Overseas Bank?
Well, very honestly, no. I have a lot of other preferences in this space. So if you're looking at slightly, smaller names, you could well consider something like a Maharashtra Bank or, even a Bank of Baroda on the rebound right now. The reason for, not choosing an Indian Overseas Bank is because we've seen the banking pack move quite smartly in the last couple of months, and when a stock does not participate when the overall sector is also doing well, suggests relative weakness in the stock. So it's not really gone anywhere, and there are a couple of other stocks which have started to turn a corner. So you could consider a Maharashtra Bank or a Bank of Baroda as well, and on declines, Indian Bank. So there are a few options for you to consider.
Okay, we've got our next question then, which is from Piyusha, who's writing us from Jaipur, asking about Kayfin Tech. Bought at the levels of 1124 and 58 shares is what she has in her portfolio, and wants to know if this is a right counter to continue to hold from a longer term perspective. Shaina, your view?
Yeah, I think she can hold with a longer term view because while shorter term, I think valuations are expensive on both price to book as well as in terms of other parameters like PE, etc. for the shorter term. But with so many new issues coming in, and Kayfin Tech is at the forefront of getting this business. So I would say you can continue to hold for the long term.
Got the view, Shaina. But we have another query that's coming in on something like a BSE. Another key, retail favorite stock bought, P. Chinna from Andhra Pradesh has bought roughly 35 shares at 2,838, asking for, a 5-year view. So, Shaina, would you recommend buying into BSE, or if you are currently holding it, is it a good buy?
Yeah, actually, I do hold it, and so while profit booking is always something that one does, but I would say that since her price is pretty close to the current levels, and it is a good play on the long-term capital market, I would say you can continue to hold. I would say that I continue to hold it, and I would suggest that a long-term investor can be invested in BSE. Also, with NSE coming up with the IPO in the next 1 year, I think that also could be an additional positive for BSE, both in terms of new business as well as in terms of valuation. So I would say hold it. It's not cheap, but if you're a long-term investor, it makes sense to continue to hold for the capital market space.
Okay, all right. We've got our next caller then. Anchal is calling us from Bengaluru. Anchal, hi, a very good morning to you. How can we help you today?
Hello, very good morning. So I have a query regarding Nazara Tech. I hold about 324 shares at an average of 190. So currently I have some profit. So my thought is like whether should I add more for a long term of around 1 to 2 years. I'm ready to wait till that time, or should I book my profits right away?
Okay. All right. Okay. Got your question, Achal. I think I'll take this up with Shahina then quickly. Shahina, with everything that's happened with this counter, right, would you still recommend her to continue to hold or maybe book, whatever profits she's made?
I would say it's better to book profits. I classify this as a very high risk story. There's a lot of government intervention in terms of the taxation for Nazara Tech and for gaming as a whole. So I would say it's better to take your profits and use it as a trading bet to exit, and then maybe look at lower levels to again re-enter if you're using it for trading. Exit now, relook to enter somewhere close to about 230 odds, but I would say exit.
But we have another stock query from Yash, and that's on something like Tata Motors. He's holding 16 shares at 790, keeping a long-term view, but share price is dropped to 408. And Yash, that's largely because the commercial vehicles or the truck division has actually moved out of Tata Motors. So you will be eligible for a 1:1 share. One company that you have for Tata Motors passenger vehicle, you will get one more for the trucks business. That listing will happen sometime in mid-November. The date is not out yet, but watch out for that when it comes out. Shaina, in terms of Tata Motors, would you recommend, if someone's holding the passenger vehicle business, to continue to do that? And what is actually your view on the more profitable truck business, essentially? Would you ask viewers to switch into that business when it lists?
Yeah, see, in a way, I think yes, their CV business is going to do better than their PV business. So, when it lists, I would say it makes sense to switch from Tata Motors PV into the CV business. But I think even current levels PV, it's a hold. But as the question was, should she switch? My view is yes, she should switch because the domestic business is doing much better. Of course, there is some stability that is coming up in their international business, which actually accounts for a major chunk of the PV business. But I would say, as of now, you continue to hold and then you could switch.
Got the view, Shaina. But we also have another caller dialing in from Andhra Pradesh. Man Singh has a query. Man, very good morning to you and thanks so much for joining in. What's your query? Hi, Man. Am I audible to you? Sorry, I think we've lost Man, but we have a stock query flashing on the screen. He's wanting a long-term outlook on Transrail, and we've also done a KYC very recently, so you will be able to find that on our YouTube channel. But Shaina, let me come back to you because it's a long-term outlook that he's asking. What's your view on Transrail?
No, I don't track it. I'll pass the question.
Kush, on the charts, would you recommend that trade getting into it right now because stock's done decently well for its investors? Your view?
Yeah, not from a near-term perspective. You're seeing the slide, from those high levels of 850 to about, sub 700 now. And even as we speak, the stock has, slipped below some of the key support levels, currently as we speak on the day itself, it's at the low point of the day. So I'm not sure if the fall has really halted. I think medium-term support zones for this one come close to the 670 mark. If the stock does consolidate around that level, then you're perhaps better off starting to start to nibble into the stock around those levels. So 670 is the level that you need to watch for.
Okay, all right. We've got our next question from Savio, who's a long-term investor, and says that his question is on Indian hotels and the fundamentals. If this is a good time to make an entry, China, with the kind of earnings that has come in for the counter, the stock is also down 4% as we speak. It's because there has been a lot of pressure in terms of RevPAR, occupancy, and this is also because they've taken a lot of renovation this quarter as well. But your view from a longer-term perspective, if he wants to enter IHCL right now, is this a good time?
Well, it's an expensive stock, but it's the leader in its space, and the plans also going forward to the number of rooms, the addition that they're planning on hotels and rooms, I think is pretty aggressive. So yeah, I would say for a long-term investor, you could look to add Indian hotels in the overall space. I think it is the leader and will continue to be so. It is expensive, no doubt, but yeah, you can add, I would say.
Okay, all right. So that's with regards to where Indian hotels stands. But viewers, it's time for our second rapid fire segment. Question China, you both know the drill. Try to keep your answers as short as possible. The first question is from Shiv Kumar, who's writing us from Bangalore and asking about BEL. Is this the right time to enter for the next 2 to 3 years? China, your view?
Yeah, I am invested, but the stock is seeing a lot of correction in the last couple of days. Valuations are expensive. You're looking at the shorter term. So if you want to add it, but you have to hold it for the medium to longer term. They've got a huge order book position. So I would say it's a long-term investment, but shorter term, you could see a bit of softness.
The next one's NHPC on a rapid fire round, and Biswajan is holding 155 shares at 104. Kush, your quick view?
Yeah, it's not doing well. Better off exiting.
Okay, the next one is on CDSL. Rajan Das is asking this question and wants to know if we can continue to hold this for the next 2 odd years. China, your view?
Long term, yes. Shorter term, no.
The next one's JSW Steel and SBI, and Vijay is asking if it's a good time to enter from next 1 year. Kush?
JSW Steel, you could hold up a little. SBI, yes, can be considered for an entry.
Okay, so as long as the next one, Ashok Bansal wants to know if we can continue to hold from a 3 to 5 year perspective. China, your view?
Yeah, 3 to 5 years, you can continue to hold. Yeah.
Bajaj Consumer is the other one. Sridhar is asking if it's a good time to enter. Kush?
Bajaj Consumer right now overheated. I would actually suggest booking profits, and entry can be considered on declines close to the 280 level.
Sky Gold is the next one. Neha from Bengaluru is holding at the levels of 305. Next 1 to 3 months, your view on the charts, Kush?
Yeah, no, it's a better idea to perhaps book some profits, at least partially right now. And if you want, you can hold the rest with 330 as a stop loss.
Infosys 150 shares at 1375, accumulator over 5 years and frustrating. Is it a good time, Kush, to hold or get out right now?
No, the stock's in a consolidative phase. If she's run off the patience, then better off exiting.
Well, Shaina as well as Kush, thanks so much for joining in and giving us perspective across a bunch of stock queries as well as sectors. We've also got some corporate conversation into it. So viewers, hopefully this has been a good hour to watch as well as learn a lot. But thanks so much for joining in. We did manage to get 37 queries and a lot more on the other side. KYC comes up next.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Channani. And you'll be watching a stock which is in focus, that's Metropolis Healthcare, and today's KYC's radar. And of course, a lot of questions regarding this company, why we have taken this company. Is there a business, especially in this lab segment, which people think it's a commodity business, but are there any green shoots to it? But let's just first figure out what are the questions, why actually want to get them in KYC first of all. We want to know what's the EBIT margin visibility going ahead. Is it going up? Will it sustain? These are the questions we'll be actually asking the management, and also via research, we will be coming with this new numbers. What is the outlook looking like for the radiology segment? Is it a commodity, or we see some margin offshoots coming in this sector? Target contribution for True Health, which is their bundling of the products, which of course Varsha will also explain. Outlook on the core diagnostics business, the recent acquisitions. The company has become like an acquisition company as they are acquiring a lot of companies across their verticals. The capex outlook regarding this expansion, where will the funding coming from? Will it always be internal accrual, or in future we can expect some kind of fundraise happening? And are there more acquisitions on the cards? Out of the 6 questions, 3 questions were on acquisitions. You can imagine how important that has become right now. Acquisition, acquisition and acquisition. But what are the other things apart from acquisitions?
Yeah, you know, just starting about what does this company do, I think it's just into diagnostic business. So they own chain of diagnostic center across South Asia, Africa, Middle East, and of course India. You know, talking about the contribution, the B2C, if I were to talk about, contributes almost 59% to the overall sales, wherein B2C specialty, if you see, contributes 16%, B2C True Health, which is their product, contributes 20%, and B2C revenue from Mumbai contributes almost 13%. Now, you know, talking about B2B, so B2C 59%, B2B 41% contribution, and on that, if you see, the B2B specialty contributes 15% to the overall revenue of B2B, and True Health contributes almost 30% to the overall revenue. You know, talking about the revenue contribution across geographies. Now, for a diagnostic business, opening a diagnostic chain or diagnostic outlet is very easy, but expanding is very, very difficult. Operating at a pan-India level is one other thing, and that's one of the reasons why all these diagnostic companies grow via acquisition, because they cannot just go and open chains everywhere. So they grow via acquisitions, because to scale a business when it comes to diagnostics is very difficult. So one of the reasons, you know, why every company into diagnostic is growing through acquisition. So talking about their geographies, West contributes almost 50% to the overall business. When it comes to South, it contributes 27%. When it comes to East, 4%, and North, 19%. Even though they do have plans to expand their operation when it comes to other geographies, for example, North. Now, you know, talking about how was Q2 FY26, because this is an earnings season, overall inline set of numbers that the company has seen. The revenue growth that you're seeing is led by their organic business, that is Metropolis organic business, and acquisitions. Also, if you see the core diagnostic, now this is actually a very important acquisition for the company, because this has been dragging EBITDA, overall EBITDA level at the group level, but overall in this quarter, the EBITDA margin has inched up because of core diagnostics. EBITDA margin were up to high single digit from a low single digit. Now B2C, if you see, revenue grew 11% year on year. B2B saw growth of almost 14%, while True Health revenue, if you see, grew 21%, which is, you know, in line for Q2 FY26. So overall, you know, a good set of numbers, I would say, when it comes to Q2 FY26.
Well, that's pretty interesting, Varsha. But then coming back to the show, why we are doing this KYC, there are important rating parameters which we judge a company on. So let's get the rating parameters in, and after that we'll start the income statement analysis. Varsha will start. The first one is, of course, income statement, balance sheet, cash flow, return ratio. These are the numbers which you'll be looking out and giving the ratings to the company. Also shareholding, street cred, how the stock has performed, valuation, and company's outlook going ahead. These are the 8 parameters where the overall ratings will happen. And to start with, Varsha, income statement, that's the most important thing to actually start with.
Yeah,
so what are you picking up?
Actually, you know, overall, if I were to talk about the income statement, I mean, look at the revenue, 3-year CAGR revenue is just up 3%. There's a reason to that. EBITDA 3-year growth is down 2%, and net profit is also down 9%. Now, of course, there's a reason, because if you see, there was a time when every diagnostic company grew, which was a COVID time, and FY22 for that matter had been an exceptional year for Metropolis when it comes to the COVID income, contributing almost 16% to the top line in FY22, and non-COVID business also grew a robust 35%. But after that, in FY23, if you see, the number looks subdued now because of the very high base when it comes to FY22, and this is one of the reasons why you're seeing not interesting numbers when it comes to the 3-year CAGR. But if you see the EBITDA margins also, over the years they have dipped, because of the raw material inflation, and the post-COVID recovery was overshadowed by the aggressive capacity expansion that the Metropolis has taken. And one of the reasons why you're not seeing that jump, in the Metropolis numbers vis-a-vis the other diagnostic, if I were to compare about. So because of the aggressive expansion plans the company has been doing, one of the reasons why you're seeing that subdued numbers overall in the past few years, and that's the reason we have given an neutral rating when it comes to income statement.
Well, yes, income statement has a neutral rating, but
Varsha, the balance sheet numbers, those numbers, if you look at the borrowings, you spoke about acquisitions, but you could see net, the borrowings are not very high. And when we speak about a company which is going into a massive expansion, we would be wondering whether debt would be there on the books or not. But if you look at it, the borrowings, it's very less. It's almost only 14 crores. It seems it's like a working capital kind of a debt coming in. And just have a look, 79 odd crores in FY23. So debt reduction has also happened. Book value numbers are largely stable, not much to look at. But interestingly, cash and bank balance, that's still, at sizable 49 odd crore rupees. It's not that they are doing acquisitions and entire cash balances is going off. Still, you could say internal accruals is being maintained. That means decent liquidity ratios are there for the company. So from my side, balance sheet will receive a thumbs up.
Talking about the cash flow statement, let's see what that parameter is. So overall, we have given a neutral rating, but nothing dramatic over here. But good thing is the operating cash flow, if you see year on year, it has increased, though a little bit subdued when it comes to FY25. But overall, a good number when it comes to cash flow. The net cash flow negative number that you're seeing is because of the a lot of investments that the company has been doing through acquisitions or opening stores, and one of the reasons why the net cash flow is negative. But overall, a neutral rating, when it comes to cash flow statement.
Well, that's pretty interesting. But return ratios, they are also a function of, the expenditures which happen. And the ROCE numbers, you look at the numbers, that's been on the higher side. That was 29%. Now that fell to almost 21 odd %. And it's going past the 18% mark, below the 18% mark for FY24. Now, there are 2-3 reasons for it where the ROCE numbers on the lower side. First of all, of course, the acquisitions which we are talking about, that is hurting the liquidity numbers also. And because of that, the ROCE numbers, they are coming down on the lower side. Also looking at it, this entire trend which is on a falling space, there is a commoditization also happening in the industry. And from the overall, if you look at the long-term picture of the last 4 to 5 odd years, much hasn't happened. Of course, a lot of acquisitions are there and they are baking in a lot of future prospects. But net, the numbers are on the lower side. So I'll give a thumbs down for return ratios.
Well, talking about the shareholding pattern, let's see what that metric is. Overall, a thumbs up. Why? Because if you see, the promoter holding has not gone down. It's like mere 49%. Though FII's holding has gone down, but if you see the DIIs, they've increased their stake, and quite a decent one, from 25% to 33%. So not much, negative happening when it comes to shareholding pattern, and hence we have given a thumbs up for this metric.
And looking at the street cred, not much to the returns coming in for the shareholders. 1 month has just been flat. 6 months is the only time where 22% returns have been there, and that's also back on the buying coming in from domestic institutions and the acquisition announcements. But for the long-term investors, there's nothing the stock has given. In 5-year performance, just 5% gain. So from my side, it is, you could say, a neutral impact. For long term, it has been on the negative side. Short term, medium term positional bets, 6 months, a good return has come in. So a neutral impact for the street cred.
Talking about valuations, Sharad, if you see overall, if I were to compare it with peers, the valuations are quite, I won't say it is cheap. It's, tuning with when it comes to Dr. Lalpath and Thyrocare. Now, why Vijaya, has got a premium valuation? One of the reasons is, if you see the EBITDA margin for Vijaya and compare it with Metropolis and Dr. Lal, the Vijaya margins are very high. Now, of course, because of their, high radiology segment that they have, or high radiology contribution that the company has, you have a good exposure to radiology, your margins will be higher, but of course, the return ratio will suppress considering the high capex involved in radiology. But overall, considering with Dr. Lalpath and Thyrocare, the valuations are in par with some of the peers. So we would give a neutral rating when it comes to valuations.
That's pretty interesting. But looking at the outlook, Varsha, it's largely all of them are future driven, and that is being baked in the stock. Over the last 6 months, we saw in the stock prices as well. Not much in the earnings perspective, that was largely in line. But let's look at the outlook, the acquisition pipeline. That's where the street is asking, will there be more inorganic growth opportunities coming in? And now they have changed the definition of what was earlier B2B and B2C business. Now, post that, how the accounting reportage will happen, that is also something which the street will be watching out for. And the organic business strategy will be expanding, the North Indian part, that's also strong comments came in Q2 numbers as well. So company of course is much more focused in Western India. So how their expansion happens, especially in the northern belt, that is something the street will be watching out for. And lastly, potential of any new offerings. There are certain new areas which have been picked up, that is genomic AI testing. Of course, these are very niche, but in the future, what's the potential? That's the question we'll be actually wondering and asking. But let's just give the entire ratings, how it's actually panned out one by one. Let's just get all of these parameters in. Income statement, Varsha had spoken about earlier, largely neutral, balance sheet strong. Cash flows has been neutral, return ratios on the negative side on acquisitions, shareholding again getting a thumbs up, while street cred and valuations, a very neutral impact coming in when it comes to stock price movement. But the outlook, that is something to watch out for in the street. That's really good. But overall, Varsha, 5 out of 8. That's pretty good.
That's pretty good.
For their company in their industry, the KYC rating, that comes in at 5 out of 8. But now let's get in more details from the management, and joining us is Surendran Chemen Kotil. He's the Managing Director at Metropolis Healthcare. A very good afternoon to you, sir, and season's greetings to the entire team. The first question, of course, is from our side, is the acquisition front. This company has been in the news for so many acquisitions coming in. And if you could just give us a pipeline, a timeline, like how much acquisitions have taken place and which is the time where the incremental benefits will start coming in. So we start with that, and then of course Varsha will ask questions on the earnings also. But first we just want to give a small taste on the acquisitions front.
Very good morning, and good morning to your viewers. So the acquisition, we have done 4 acquisitions in the last 6-7 months. If I start from March onwards, if I look at it, we have done 4 acquisitions, and all the 4 acquisitions put together is contributing to around additional 10-11% of our revenue growth. So we are growing at 23% this year on first half of the year. So, the 11% of the revenue growth out of the 23% is coming because of the acquisitions. Now, acquisition pipeline, see, when we do an acquisition, it takes a lot of efforts to get the companies integrated into Metropolis processes and scheme of things. So maybe the rest of the year, we will leave it to getting these entities that we already acquired into get integrated. And then maybe the new acquisition may be deferred to sometime next year. Now, that's what the current thought process is.
Hello, Mr. Chemen Kotil. Varsha this side. Pleasure to have you at NDTV Profit. Talking about the acquisitions, the core diagnostics EBITDA margin increased from low single digit to high single digit this quarter. Just wanted to know what's the outlook there, where you want to take these margins to, and when this will be aligned to Metropolis margin.
Well, so when we acquired Core Diagnostic Workshop, we were at a break even. That's quarter 4 of last financial year. And quarter 1, we got into low single digit margins, and quarter 2, we are at high single digit margins. And by the time we exit this year, we expect to see this close to a double digit margin. So that's what this year's plan. But in about 3 years' time, of 3 years of acquisition, we will be bringing it closer to the company levels of margins. That's the overall plan that we are carrying.
Sir, on the margin front, if I would want to continue, so overall now for next 2 quarters also you will be seeing improvement when it comes to core diagnostics margin, and that will be integrating into Metropolis margins as a whole. So where do you see this EBITDA margin for FY26?
For a full year basis, I think we should come close to a 2-digit number, very high single digit for a full year basis. If I look at for the financial year 26, that could be the projections.
That's pretty interesting, Mr. Chemen Kotil, about the margins front. For FY26, it's been stated it will be close to double digit. But for next 3 years, that's very interesting that the acquisition margins will be equal to the company's margin, and of course we are talking about the blended margins. But let's ask about the target contribution coming out for the True Health segment. True Health segment is the bundling of the services, which has been announced by the company. It's a new product category for our viewers who are tuning in. But Mr. Chairman Kotal, what would be the growth outlook for this True Health segments, and currently inquiries, how are they actually pacing for these bundled products?
Well, good question. So, as far as True Health is concerned, the definition is illness bundle and the wellness bundle. For example, if a patient walks into my center and asking for, let's say, 2 fever tests, I will offer him a fever panel, which is all, chikungunya, dengue, and any other viral fever, etc. And the consumer chose to accept that as a testing level because he doesn't have to give his sample if the first test say comes negative, and you have to check first for dengue and then for chikungunya. Multiple levels of sample is not required, and that's a benefit the customer gets it apart from the commercial benefit. And then of course a lot of wellness bundles in the last 2-3 quarters. We also bundled a whole lot of vital checking and doctor consultations and a basic radiology, etc. into the True Health packages. That's the reason the True Health packages and the bundle portfolio, you are seeing that the growth of about 21-22% in the first half of the year. And I would believe that, the growth in True Health will continue to be 20% plus for the rest of the year as well.
Right. And sir, overall on a blended basis, if I were to ask about considering the expansions that you are doing, and the acquisitions that you are doing, we've seen that subdued growth when it comes to overall at a company level. When can you see that mid-teens type of revenue growth? Maybe in FY27 or 28, any target that you have, the Metropolis will be back to that mid-teens level of growth?
Well, I think at a group level, we are at 23% growth this year, which I believe is a very good momentum that we have picked up, in the first half of the year. And if you are specifically talking about the organic business, which is at 12.5% in the H1 first half of the year. And our estimate for the rest of the year, it would lie around 12 to 13%. And then maybe, we'll start stepping this up as we go forward.
That's pretty interesting, Mr. Chairman Kotal. We spoke about the overall margin setup and how the integrations of the acquisitions are happening. But one more question is there. Of course, the outlook on core diagnostics. This was the recent acquisition coming in as well. You had spoken earlier about a delay in the integration of one of these acquisitions. Is it that acquisition, core diagnostics, or is it different? And just give us more light on core diagnostics.
See, Core Diagnostics is a big company and, operating across the country. And, the integration would ideally take about 3 to 4 quarters, and we are on course. There is no delay in the acquisition of Core. And maybe towards the end of this year, by the time we get next 2 more quarters, the entire processes, people, system, pricing, etc., everything would have been integrated by the time we close this year.
And also, sir, when it comes to the B2C revenue, which grew almost 11%, can we call this as a soft growth? Because, you used to grow more than 11% in the past that I've seen.
You're right. Actually, quarter 2, the B2C growth could have been better. But I think this year, if you have seen across the industry, not only for Metropolis, you have seen that the fever-related diseases, the vector-borne diseases were far lower than the previous years in quarter 2, which is normally a illness season. Maybe a lot of efforts done by the various state governments in terms of improving the sanitization, etc. The overall health scenario got better, which is in fact the good news as a matter of fact. But I think it have a slight impact on our business. So that's the only reason in quarter 2 you will see a little bit of softness on the B2C revenue. And I think the walk-ins will continue to happen in the coming quarters, and the B2C will continue to be stronger for us.
Interestingly, Mr. Chairman Kotal, the B2C business, just for both B2B and B2C business, you give the guidance, but hold on to that thought. I also have one more question, because there has been a delay in the monsoon, and we are seeing in a lot of western regions, monsoon is still prevalent and cases are coming, of weather changes. Are you seeing the B2C inquiries actually, showing strength in the third quarter as well? What are the channel checks suggesting, for the last 1.5 months to 2 odd months? I'm sure some B2C inquiries must have increased.
You see, that's what I said. The rains are there, good rains and continue to be raining in some part of the country. But the vector-borne diseases are not as, high as what we used to see in the past. Hence, at the end of the day, for diagnostic industries and medical companies, when somebody falls ill, sick, then only the revenues will start coming in, right? Until he's doing a health checkup. So as the vector-borne diseases are dropping this year, and that has got a little bit of impact on the B2C.
And Mr. Chairman Kotil, what would be your guidance for both these businesses, B2B as well as B2C businesses, going ahead?
Well, I think I've given an overall estimate about 12 to 13%, which is a mix for us. Both the engines B2C and B2B are growing almost the similar levels of the company's estimates, about 12 to 13%. Maybe B2C could be a percentage or two higher than the overall company level, and B2B could be a percentage or two lower than the company level.
Also, sir, wanted to ask you about the radiology contribution overall to the business, and is company planning to allocate capex when it comes to radiology, or establishing companies' own diagnostic centers when it comes to radiology? So any thoughts on that?
So for us, currently the radiology revenue is relatively very small, and we have about 5 cities in which we operate full radiology, which is X-ray, ultrasound, ECG, 2D echo, etc. And only 5 cities with about 35 centers. And for ECG is concerned, we operate across the country. So we have made a very small but very strong beginning. But going forward, we'll definitely want to strengthen this portfolio.
That's pretty interesting on that. But pricing strategies, that is something which we are looking out for. Any kind of price hikes on the cards? I remember there was a lull period around 2 to 3 odd years when last year the price hikes started coming in. On a blended consolidated basis, are we looking at any price hikes? Also, we are at the start of the year in 2026 in the next 1.5 months odd. So we can expect that?
No, well, I think we did the last price increase in January 2025. And I do not see any price increase happening for rest of the financial year for sure.
Right. On to the last question. What is the volume growth expected, sir?
So on an organic basis, I think we have done 6% volume growth in the first half of the year, despite the fever related diseases being lower. So I think the volume growth could be better than these numbers for the rest of the year.
Understood. So 6 to 8%, can we assume a volume growth for FY26?
Around 7% is what we wanted to do. 6-7% is what we thought we could do.
All right. Well, thank you, Mr. Chairman Kotil, for answering all the questions, and all the best for the business.
Thank you very much. Appreciate it.
Well, 6 to 8% of volume growth.
And no price hikes.
And no price hikes. And also, radiology also, they are, gonna do capex.
It's small, but yes. Yeah. But let's just get the management key takeaways coming in. There is a kind of a delay in integration of one of the acquisitions. The management had not stated earlier which is the exact company. But yes, there happens. A lot of acquisitions happen. Next 3 years, acquisitions margin will come close to the core business. I think Varsha, he spoke about a double digit also for FY26.
For FY26.
So that means there's an outlook for bullishness when it comes to margins.
So maybe H2 would be much better than H1 when it comes to overall Metropolis, we would say that.
All right. And of course, True Health business, we spoke about a bullish criteria coming in as well. But net positive outlook coming in. Management seems upbeat, and so does our KYC rating. That's enough for the day. Stay tuned to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Hello and welcome. You've joined us on Markets at 12. I'm Nisha Podar, and the new debut on Dalal Street, the new listing that we are talking about is Okla India, the brand of MTR. And Sanjay Sharma, MD and CEO of Okla India, is right here with us. Mr. Sharma, many congratulations on your listing. But now that you have new set of investors and the set of investors who take care of the company, who watch the company and the stock price on a regular basis, what is the outlook for growth which will give them confidence to stay invested?
I think first I must tell you that, and I've spoken to all investors in all the roadshow meetings that we have done, that we as a company, if you look at our performance over a longer period of time, we have always reflected a good double-digit growth development. We have consistently grown. We have a very good profitability profile, and our margins are robust and very, very attractive. So I think over the last 18 years that we've been present in India, we've really built a strong, robust business. As I said, our brands are heritage brands. Our brands have touched the lives of millions of consumers and continue to touch the lives of millions of consumers every day. So having said that, I must tell you that we have a strong growth runway ahead of us. I want the investors to know that to be with us in the long term, we will always deliver great value. I think our brands have always delighted you. Today, if you are our investor, I'm sure that we will continue to give you the same delight that our brands have given to you.
All right, so the brand recall is huge, Sanjay Sharma, but your margins had been eaten up. It had dropped between FY23 to 25. Now, what are the levers which have eaten into the margins, and what is the margin picture going forward is going to improve?
Yeah, I think the story lies in the details of the numbers that you are talking about. And I've seen there's been a lot of chatter about our PAT dropping from FY23 to FY25. And if you read the details on this, what actually happened out there is a one-time effect of about 150 crores in FY23 of tax effects that came, a positive tax effect that came into our books. That was on account of deferred tax credits which we gained due to the Eastern merger with MTR. And therefore, I think that if you look at the PBT level and if you look at the PBT performance from FY23 to FY25, you will see that we have delivered a growth of about 17.6% over the last 3 years. So I think we are sitting on a very, very strong margin growth path, as well as a very strong margin profile. I think you look at our FY26 margin profile, we are sitting at roughly 16.6%, and then you look at our Q1 results that we have delivered, we have continued to improve on that margin profile. Now again, the beauty there are details out here, and I don't want to paint a very rosy picture out here. The gains and margins that have happened on two counts. Half of the gains that have happened on account of raw materials, because we have spices has been the only category that has deflated when India has faced severe food inflation over the last 3 years. So if you look at prices of spices, and let me just contextualize that for you. The chili that we were buying at 120 to 150 rupees a kilo actually dropped to 100 to 110, and then has subsequently dropped to roughly 70 to 90. So we've seen a very, very sharp deflation in 2 consecutive years as far as spices is concerned. So that has led to margin expansion, and therefore I'm saying that half that expansion in margin that you see in our numbers is on account of raw material, and that will get normalized over a period of time. And the other half of margin expansion we feel is a more sustainable margin expansion on account of several initiatives that we have taken in terms of improving the operational efficiency in the organization.
All right, operational efficiency and a key eye on the raw material prices and their inflation will be an important lever. But what about your concentration of market in South India? Is that a concern, Sanjay Sharma?
Yeah, I think, when you look at our current profile of business, 70% of our sales comes out of South. Many people think that going national could be a great space for us. MTR is such a popular brand, everyone knows about it. But let me just clarify this to you, that we have been national. We are present all across India. So our products are distributed. I mean, if you go to Ladakh, or you go to Delhi, or you go to Gujarat, our products are available everywhere. And therefore, then the question comes up is therefore why 70% of the revenue out of South? And that comes back to what I personally believe is our business model. And I just want to keep reiterating that to you. You must understand that, you look at India as one country and one market, but we look at India as 28 different markets. You know that our country every state has different languages, different cultures, different cuisines, And given this, food changes from one state to another, and the taste changes from one state to another. Gujarati food is very, very different from Maharashtrian food, which is very, very different from the Kannadiga food or the Malayali food or the Tamil food. Now, if food is different, how can you go and build a generic portfolio across India? What is the Indian taste? And therefore, I think our business model and our approach in India has been very, very different from any other large company's approach. We choose to build brands regionally, and our brands and our products not only understand the culture and the local cuisine very well, but through our products, we deliver to that cuisine and build deep relationships. So our focus is always going to be continue to build South, continue to build the core markets that we are focused on, and continue to grow our categories. Here I would like to defer to a very simple and another very good perspective that is there, which is, do local brands have the capacity to grow? And when you look at us in Karnataka, today our per capita sales in Karnataka is about 110 rupees per person, right? And what it represents is just, if you take sambar as the largest selling product that we have, what it represents is just 12 consumption occasions out of 360 consumption occasions of sambar in the market. So you look at the headroom that we have for growth. So our belief is about building our business in our core markets by going deep and building more and more sales out of our consumers, which is driving penetration, driving frequency, driving range, and driving value out of our consumers.
So the strategy is to focus on your core market of South India further, which you understand very well. But Sanjay Sharma, the company generates about 300-400 crores of cash every year. Now, can you clearly state your dividend policy going forward now that it's a listed company? And what was the need of a big dividend payout to your Norwegian parent just ahead of the IPO?
This has been a question which has been asked to us several times in the past. Let me start by saying that, in the 18-year presence that we've had in India, of Orkla having invested in India, we have never taken a single rupee of dividend out for 17 of those years, right? We have been a cash generating company. We have always looked at investing all the cash that we were generating back into the business for driving value creation. When we came to listing discussions, and I'm going to roll back in time about 12 to 18 months when we first started discussing about it, we were advised that the cash is not really going to get valued in the market. So we were advised to take out some cash as dividend, and that's why that one-time dividend was paid out of about 43 rupees per share, which was paid out in March of 2025. Having said that, our intention was never to strip the balance sheet out. We have left the balance sheet well capitalized. Today, our balance sheet continues to have about 350 crores. As you rightly said, we generate 300 to 400 crores. I can assure all the investors who will watch this show that there will not be any impact on shareholder value creation in the future for lack of money with us. I think we have enough money with us, and our focus will always be to drive shareholder value creation. On regard to dividend policy, I think we have laid out a very, very clear dividend policy as part of our RHP, which we have filed and which is there in the public domain. And I think any decisions to give dividend are the decisions that are going to be taken by the board of directors of Orkla India.
All right, Sanjay Sharma, many congratulations on your listing today, and thank you so much for joining us on NDTV Profit. That new debut on the Lal Street today, it did open with a slight uptick to the issue price on the higher end of the price band, and right now almost flattish to positive. in trade at the moment. All right, swiftly moving to a big earnings, an important set of earnings there, Syngene International, and that particular counter is down 4.5%. The company has seen a profit dip of almost 37%, and therefore the stock is getting punished in trade today. Peter Bains, the MD and CEO of Syngene International, joins us now. Peter, the first question, the reported EBITDA margins that you have shown has dropped steeply on account of the anticipated inventory correction in the biologics manufacturing. Has the entire correction been taken up and now has it bottomed out? And what is the way forward? Is it going to now improve from here on?
So Vasya, you're correct. The EBITDA decline is in part due to that inventory correction. And of course, it's also a reflection of our continued investment in operational capabilities, particularly in our people and behind some of the exciting new modalities. With regard to the inventory correction in large molecule manufacturing, we'll have to see how that plays out. This is related to a customer and a product, and we'll have to see how that plays out over time. But the performance in Q2, where we did record growth of 2% on the quarter, 4% sequential and 6% at the half-year mark, reflects, I think, our ability to absorb this inventory correction through the sustained momentum we're seeing in our research services business. That trend, as we look forward, we expect to continue, and Syngene is generally, our second half is stronger than our first half, and on the basis of that, we're maintaining our guidance for the full year.
That was precisely my next question, Mr. Bains. Hi, Varsha, this side. So you're still on track when it comes to the given guidance, because will Q3, and on that, will Q3 and Q4 be much improved, because you've guided almost a mid-single digit revenue growth?
So for Syngene, our second half is generally stronger than our first half. We look at that trend for this fiscal to continue. And on the basis of the growth that we've seen in the first half, that gives us the confidence to maintain our guidance for the full year at revenue and at the EBITDA and PAT.
On that note, Mr. Bains, so the mid-20s EBITDA margin for FY26 still on track?
Yes, it is. We're maintaining that guidance. As I said, it's a reflection of the first half, where we're in line with our expectations, as we'd anticipated, absorbing the inventory adjustment through the underlying strength in momentum in the research services, and we look to see a somewhat stronger second half, which we have seen consistently in Syngene, and that gives us the confidence to underpin the maintenance on guidance.
Also, Mr. Bains, when it comes to US biotech funding, are you seeing improvement there as well?
Yes, we are. In the last quarter, we've seen some improvement, and we're clearly looking at this. It provides venture capital into biotech companies, and Syngene's Y Discovery Services, serves that early stage biotech sector. And so this is an encouraging sign for Syngene, and we look forward to seeing those signs of improvement continue.
On to Mr. Bains, when it comes to US Biosecure Act, which has been revised, just wanted to know your view on the same, and also have you started seeing increased inquiries when it comes to CDMO space?
So we've been seeing the Biosecure Act play out over the last 18 months or so, and clearly from what we're seeing, that the result has been a rebalancing in supply chains, out of China, and India has been a beneficiary of that, and certainly so has Syngene, as we've seen pilot studies come in. And from those pilot studies, we then look to advance them into programs. That the Biosecure Act
Well, the other earnings which is in focus is Sun Pharmaceutical Limited. Saw a good, strong set of numbers. They've also beaten their estimates. I did speak with the CFO, Jayashree Sadgopan at Sun Pharma, listening to the conversation that I had. Sun Pharma is in focus, of course, on the back of Q2 FY26 numbers, where overall a good set of numbers company has posted. Profit did beat estimates. When it comes to EBITDA margin, was in line with estimates. The India formulation business was up 11% year on year. There was a strong beat, when it comes to emerging markets and rest of world. US sales though was down 4.1% year on year. Of course, because of lower sales when it comes to the Revlimid product. But the decline in US generic business was offset by innovative medicines, and US sales overall accounted for 30% to the overall revenue. But to speak more about the numbers, how was the quarter and what lies ahead for the company, I'm here joined by Ms. Jayashree Sadgopan, who is the CFO at Sun Pharma. Well, Ms. Sadgopan, congratulations for a good set of numbers and welcome to NDTV Profit. The specialty portfolio, just wanted to understand the outlook when it comes to this portfolio, considering the launch of Unloxit and the global specialty portfolio, if you see, formed almost 20% to the overall sales mix. Any target that you have in mind?
Thank you, Varsha. The global innovative medicines portfolio is critical in our overall product portfolio. We are expecting a continued growth in the innovative medicine business, both in the US and across the globe.
Understood. On to the outlook when it comes to US business, how should one look at US business for rest of the year, that is FY26 and FY27 as well?
I think the US market provides opportunity for innovative medicines, where they've seen a good growth. The generics continues to face a challenge as it has been in the past. So it's a mix of both of these. We expect the US market to continue to be a prime focus area for Sun, and all efforts would be put to see how we could maximize the opportunities in both the generics and the innovative medicine space.
Any, ma'am, any kind of outlook on the quantitative side, if you could provide us when it comes to the US business?
We do not give specific quantitative inputs. We have given an overall guidance in terms of the growth opportunity for the company, and we would like to remain with that.
Understood. Yeah, the rest of the world segment, if you see, saw strong growth. What led to this? And was there any one-off that you have seen, or this kind of growth is sustainable going forward?
We do not have any one-off in the growth that has happened in the rest of the world. We have seen an uptick in the generic business that has primarily led to the growth. We have also seen that the innovative business in certain markets have registered a good growth compared to the last year. So it's a combination of both.
All right. Also, I believe September was the last quarter where you had meaningful sales of Revlimid. Going forward, the sales are expected to taper down. This was the last quarter where you saw a meaningful contribution from Revlimid?
Yes, you're right.
Okay, understood. On to the Lexilvi, which you have launched in July. When a company will start a meaningful contribution from this product?
All the new products takes a couple of years after launch to scale up. So the current quarter and during this year, the focus is to ensure that the product is well promoted. We are able to engage well with the prescribers, showing the efficacy and the safety data of the product. The payers' adoption has been quite good. So the focus would be on all these activities to see that in the next couple of years that the sales actually ramp up.
Understood. On semaglutide opportunity, ma'am, what are the timelines of approval when it comes to Canada? And first question on that. And second, when it comes to India market, will Sun Pharma be ready for the launch in the first wave?
Yeah, let me take your second question first. When it comes to India, yes, Sun Pharma would be ready to launch the product in the first phase. We have indicated this in the past as well. As far as Canada is concerned, we do not have inputs in terms of the exact timing for approvals and launch. We will be in a position to disclose this at a time closer to the launch.
Understood. Recently we have had announcement on the 100% tariff when it comes to patented or branded drugs. Is this a risk when it comes to Sun Pharma?
Look, the 100% tariff itself is not very clear at this point in time, right? The government had indicated they will go with a 100% tariff. Subsequently, this has been pushed out. So we are waiting for further clarity on this subject. At the same time, the government had issued letters to 17 pharma companies, and they have been engaged with the government on signing up specific contracts with them. At this point in time, we will wait for further clarity on this subject to see what could be the impact for Sun Pharma.
All right, got it. On to the biosimilar strategy, considering a lot of companies are actually going into biosimilar, and recently the US FDA has also launched a new draft guiding to fast track, biosimilar approvals. Any kind of strategy that Sun Pharma has when it comes to, going into biosimilar, if any?
Yeah, this is an interesting area because the FDA has published some guidance which aims at streamlining the costs and the timelines for biosimilars. Doing away with this comparative efficacy study in certain products will definitely help to bring down the cost and will also make the space attractive. However, we will wait and see the details once the final rules come in, and accordingly we will decide on our next steps.
Understood. Also, Sun Pharma already has one facility in US, if I'm not wrong. Are you open to, will company be opening more facilities in US going forward?
We have 3 manufacturing facilities in the US, and these facilities can do both API and formulation. Having said that, there is scope for expanding the capacities and also fully utilizing the capacities in some of these plants. We are exploring those at this point in time.
Understood. And my last question would be, considering the R&D with respect to sales, I think you have guided for 6 to 8% of R&D for FY26. Any kind of changes to that, or you're still on track when it comes to the given guidance for R&D?
I believe we would be in the lower end of the guidance that has been provided.
All right, so that was Sun Pharma results and the management talk for you. All right, it's also an important day when it comes to elections and first phase of polls for Bihar Assembly elections. That's a big one to track. Amitabh Tiwari, political strategist, joins us now. Amitabh, how keenly are you watching and which candidates are you watching? Of course, Bihar elections are very, very important at this particular moment. Tell us, what is the sense you're getting from on the ground with 120 seats at stake today?
Yeah, so essentially the opposition CM face Tejashi Yadav and existing Deputy CM Samrat Chaudhary and Vijay Sinha all are fighting or contesting in this phase. So this phase was largely tied between NDA and Mahagathbandhan on the India bloc in 2020. They both won almost 60 seats each. So in this election, largely you can say the X factors which everybody is looking at is the performance of Jan Swaraj party as to what sort of vote share it achieves and which party it primarily damages. The second is clearly the women vote bank, because women vote bank is becoming increasingly important. And herein the government has transferred some 10,000 rupees to around 1.5 crore women, which is around 40% of the women electoral voter base. So that scheme can also have a huge impact, just like it did in Maharashtra, Madhya Pradesh and Jharkhand, as cash tolls are becoming important. All in all, Nitish Kumar, which is the existing chief minister, is fighting his last battle, you can say, and he remains the X-factor of all X-factors, because despite 20 years of being in power, there is not much anger against him per se. No, there is anger against some of the MLAs who have not performed, and also anger against the ecosystem or the entire government because of lack of creation of jobs, low-level corruption, unemployment and migration. So the performance of JD or Nitish Kumar is crucial for the NDA attaining victory, because last time the JD had not performed very well in terms of strike rate. And on the other side, you have the Congress party, which is fighting on 60 seats, which emerged as the weak links of Mahagathbandhan. So from Mahagathbandhan side also, all eyes are out on how the Congress performs on these 60 seats, because that could well decide the fate of these elections for Mahagathbandhan.
All right. Thank you so much, Amitabh, for giving your sense. It's a hotly contested battle, the battle for the state of Bihar, and it will also have a larger repercussion on how the central dynamics works politically going forward. So all eyes would be on Bihar elections, but completely out of time on Markets at 12. Thanks so much for tuning in.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you...
I just want to ask you, as we are discussing IPOs, and you're probably the first tech company to come to the market now to come and list. Just tell me a little bit about how you stand out in the current market.
हाँ, तो पहली चीज़ तो मुझे लगता है कि वो 14 मिलियन का जो नंबर है वो इस टाइम पे 120 मिलियन हो चुका है। तो क्योंकि आपने एक चैनल लिया,
हाँ जी,
तो हमारे क्लोज टू 200 यूट्यूब चैनल्स हैं जिसके ऊपर टोटल काउंट 12 करोड़ बच्चों का है। सारे सोशल मीडिया हैंडल्स को अगर हम मिला लें, इंस्टाग्राम, टेलीग्राम, स्नैपचैट, तो ये 12 करोड़ की एक बहुत बड़ी स्टूडेंट कम्युनिटी है, और वही कम्युनिटी हमें ड्राइव करती है, वही कम्युनिटी हमें सपोर्ट करती है, और उसी कम्युनिटी के लिए हम सर्व करते हैं। राइट नाउ वी आर टीचिंग क्लोज टू 45 लाख किड्स FY25 के अंदर। 45 लाख बच्चों को हमने पेड पढ़ाया। इसमें से 42 लाख बच्चे हमसे ऑनलाइन पढ़ रहे थे, और इन 42 लाख बच्चों ने हमें 3,600 रुपये दिया था साल भर का एक ऑनलाइन लाइफ लर्निंग कोर्स का, जहां हम उन्हें हाई स्टेक्स कॉम्पिटिटिव एग्जाम्स की तैयारी कराते हैं। IIT हो गया, नीट हो गया, UPSC, CA, कॉमर्स, ऐसे करते हुए 38 डिफरेंट एग्जाम्स की। हम क्यों स्टैंड आउट करते हैं? हमारे पहले जितने भी इस तरह के प्लेयर होते थे एजुकेशन के अंदर, सब ने क्या किया था, 80,000 रुपये का कोर्स, 60,000 रुपये का कोर्स साल भर का रखते थे, और उनकी जो टारगेट ऑडियंस होती थी वो इंडिया का टॉप 3% होता था। अब 80,000 कोर्स को बेचने के लिए आपको बहुत सारी काउंसलिंग कॉल लगती है, कस्टमर एक्विजिशन कॉस्ट, कैक लगता है। हम स्टैंड आउट करते हैं, हम उनसे 1/20th कॉस्ट पे बैठे। साल भर का कोर्स 4,000 रुपए का है, और ये जीरो कैक होता है क्योंकि हमारे पास यूट्यूब है जहां हम फ्री में पढ़ाते हैं, और वहां से बहुत सारा बच्चा हमारे ऐप के ऊपर आता है। सो फर्स्ट थिंग वी स्टैंड आउट इन द अफोर्डेबिलिटी। सेकेंड थिंग हाउ वी स्टैंड आउट इज कि द फाउंडर, जो कि मैं हूँ यहाँ पे, मैं खुद एक टीचर रहा हूँ फॉर अ लॉन्ग पीरियड ऑफ टाइम। मैं आज भी पढ़ा रहा हूँ, मैंने पिछला लेक्चर एक हफ्ते पहले डाला है फिजिक्स का ही, तो मैं आज भी वहाँ टीचिंग के अंदर हूँ। द कोर ऑफ द कंपनी इज नॉट अफोर्डेबिलिटी। अफोर्डेबिलिटी मेरा चॉइस है कि मैं सबसे सस्ता बेचूंगा कोर्स, वो मेरा चॉइस है, बट मेरा कंपल्शन है क्वालिटी, कि मुझे सबसे बेस्ट पढ़ाना है। आज से 3 दिन पहले CA का रिजल्ट आया है। IIT नीट के अंदर तो हम सबसे ज्यादा बच्चे इंडिया के अंदर सेलेक्ट कराते हैं, मैक्सिमम नंबर ऑफ किड्स। अभी CA के अंदर हमने टॉप 50 में टॉप 24 रैंक्स दिए, इंटरमीडिएट में CA फाउंडेशन के अंदर टॉप 20 में से टॉप 9 रैंक्स दिए। UPSC के अंदर आप ये समझ लो कि 1 out of 3 IAS IPS इज फ्रॉम PW UPSC। तो हमारे लिए क्वालिटी मैटर्स मोस्ट। अफोर्डेबिलिटी मेरी चॉइस है, मैं उस कोर्स को कहीं भी प्राइस कर सकता हूं, पर मेरी चॉइस है इसको अफोर्डेबल रखना। क्यों? क्योंकि मेरे लिए वैल्यू ये नहीं करता है कि इंडिया के अंदर रैंक 1 किसकी आई, रैंक 2 किसकी आई, रैंक 30 किसकी आई। मेरे लिए ये वैल्यू करता है एक बच्चा जो पहले कॉम्पिटिटिव एग्जाम की तैयारी नहीं कर सकता था। क्यों नहीं कर सकता था? क्योंकि प्राइस बहुत महंगी थी। मैं उसको कैसे पढ़ा सकता हूँ? मैं जिस बैकग्राउंड से आता हूँ, मेरे पिताजी को घर बेचना पड़ा था मुझे पढ़ाने के लिए। लंबे समय तक हम रेंट के घर पे रहे। कहानी काफी पॉपुलर है, बोलो, कई बार बता चुका हूँ मैं IT की तैयारी नहीं कर पाया क्योंकि मेरे पास 1 लाख 1.5 लाख रुपए नहीं थे, और वो मेरे अंदर एक पीस है, और मैं IT में सेलेक्ट नहीं हुआ। पर मुझे लगता है वो फॉल्ट मेरा नहीं, सिस्टम का फॉल्ट है। फेयर अपॉर्चुनिटी नहीं थी मेरे पास, ऐसा नहीं कि टैलेंट नहीं था, शायद मैं ना सिलेक्ट होता फेयर अपॉर्चुनिटी के बाद भी, पर मुझे फेयर अपॉर्चुनिटी नहीं मिली। आज ऐसे बहुत से बच्चे जिनको फेयर अपॉर्चुनिटी पीडब्ल्यू देता है। मैक्सिमम बच्चे एग्जाम का फॉर्म भरते थे और एग्जाम पे जाके लिख आते थे। आज उन बच्चों को हम अपॉर्चुनिटी देते हैं कि भाई आपको वही एजुकेशन की क्वालिटी मिलेगी जो कोटा के बड़े बड़े क्लासरूम में 1.5 लाख रुपए देके मिलती है, वो आपको 4,000 रुपए कोर्स में मिलेगी।
ओके, फेयर इनफ। आपने 2020 में जो लर्निंग ऐप डिज़ाइन किया, आप दोनों ने साथ में मिलके जो लॉन्च किया था, तो जस्ट टेल मी अ लिटिल बिट अबाउट द एक्सपीरियंस ऑफ ऑनलाइन टीचिंग, बिकॉज I was just looking at your numbers and what 49% roughly is online and 47% is still coming from the offline business. Tell me the journey of starting out as an online presence, as a social media presence, and then eventually spreading out into the offline space.
Thanks for asking this question. Like, tech is very important in the journey of physics. We have created amazing technology, which is itself world class in nature. Like, where thousands of students study from our AI learning, video experience, जहाँ पर टीचर जो है विद फुल एनर्जी इन हज़ारों बच्चों को पढ़ा रहा होता है, बच्चे चैट कर रहे होते हैं, बच्चों का सेंटिमेंट एनालिसिस टीचर को हर समय में पता चलता रहता है कि कितने बच्चों को समझ में आ रहा है, टीचर्स क्लास में पोल कराता है। एट द सेम टाइम बच्चे क्लास में डाउट पूछते हैं विद 88% एक्यूरेसी, 80% डाउट्स आज के टाइम पे AI सॉल्व कर देता है। क्लास में सब्जेक्ट मैटर एक्सपर्ट्स होते हैं जो चैट में लगातार इन रिमेनिंग 20% बच्चों के डाउट सॉल्व करते रहते हैं। तो इट्स वी हैव 600 पीपल टेक टीम विद अस, जिसमें से 100 odd people works on AI pod. AI is a good focus for the company, or it's a very well deep academic systems on top of it जो हमने डिज़ाइन किए हैं, जहाँ पर जो है हर बच्चा टीचर को रेट करता है और टीचर्स की रेटिंग्स, बच्चों के आउटकम्स कंटिन्यूसली मॉनिटर होते हैं, और so that is why we could able to scale very fast in online and offline. ऑफलाइन के अंदर भी हमने टेक इनेबल्ड लर्निंग सेंटर्स बनाए हैं। हर क्लास के अंदर स्मार्ट बोर्ड होता है, क्लास गेट्स रिकॉर्डेड विद वेरी हाई रेजोल्यूशन कैमरा। अगर आप 1 महीने से क्लासेस नहीं भी आ रहे हो, बीमार हो, तो भी आपको सेम टीचर की वीडियो का एक्सेस मिल जाएगा। आप टेस्ट ऐप पे दे सकते हो, आपका रिजल्ट्स, डाउट्स सब ऐप से लिंक्ड है। सो इट्स अ वेरी हाइब्रिड लर्निंग सिस्टम व्हिच वी हैव डिजाइंड।
वो रेवेन्यू स्प्लिट आपने बताया 47-49 ऑनलाइन ऑफलाइन का, पर मेरा स्टूडेंट स्प्लिट बहुत अलग है।
अच्छा,
मेरे 93% बच्चे ऑनलाइन पढ़ते हैं। 45 लाख में से 42 लाख किड्स स्टडी ऑनलाइन। उसमें से 3 लाख बच्चे हैं जो कि ऑफलाइन अफोर्ड कर सकते हैं, तो वो ऑफलाइन के अंदर जाते हैं। हमारा ऑफलाइन खोलने का डिसीजन ये नहीं है कि बहुत सारे लोगों ने ऑफलाइन खोल रखा है तो हम खोलेंगे। हमारा ऑफलाइन खोलने का डिसीजन इस चीज से आता है कि हमारे ऐप पे किस सिटी का बच्चा ज्यादा प्रेजेंट है, उसकी क्या पेइंग कैपेसिटी है, क्या वो किताबें खरीद रहा है, क्या उसकी ऑफलाइन की डिमांड है। तो हमारा ऑफलाइन खोलने का डिसीजन हमारे ऐप के डेटा से ड्रिवन होता है। हमारा जो माऊ है वो 2.5 करोड़ का है, तो 2.5 करोड़ बच्चा हमारे ऐप को 1 महीने में विजिट करता है। हमारा जो डाउ है वो 25 लाख का। ये 25 लाख बच्चा मेरे ऐप पे आके रोज के 2 घंटे बिता रहा है। एवरेज एंगेजमेंट टाइम इज 111 मिनट्स। अनसीन नंबर्स इन एजुकेशन, अनसीन नंबर इन एनी फील्ड। हमारे नंबर्स एंगेजमेंट के कंपेयर करो आप OTT से कर पाओगे, टिकटॉक से कर पाओगे। एक बच्चा जो मेरे साथ 2 घंटे बिताता है, उसके बिहेवियर से मेरे पास बहुत सारी इंफॉर्मेशन होती है, उसके बेसिस में अपने ऑफलाइन सेंटर्स खोलता हूं। तो हमने ऑफलाइन सेंटर ये नहीं किया कि हम कोटा में बड़ा सेंटर खोलेंगे या कहीं बड़ा सेंटर। हमने कहा बच्चे के घर के पास में एक ऑफलाइन सेंटर लेके जाते हैं, क्योंकि मुझे पता है मेरा बच्चा कहां पे एक्टिव है। तो प्रीडोमिनेटली हमारा नॉर्थ इंडियन प्रेजेंस ज्यादा था, सेंट्रल नॉर्थ इंडिया, हमने वहां सेंटर्स खोले। यूपी बिहार के हर शहर में बच्चे के घर के पास में खोले। हमारे ऑफलाइन के जितने एडमिशन हैं 80 to 85% हमारे एडमिशन आज भी ऐप से आते हैं। So it's my app students who decide कि मेरे को कहाँ ऑफलाइन सेंटर खोलना है।
That's going to be an interesting conversation which you'll be able to catch, throughout the day as well. Vishwanath Narayan conversation with Physics Mala, the IPO opens on the 11th of November, and this is the press conference that they've been holding right now. Promoters currently hold little over 40% when it comes to the company, and they've set the price band at 103 to 109, and they are looking at around 3,500 odd crores in terms of the fundraise as well. Apart from this, the other angle that we need to talk about in terms of markets is what's happening. Let's quickly look at Nifty 50 first on the screens and see what Nifty 50 is doing in trade. Metals as a segment is what is cracking. Pretty range bound, and you're just seeing a very flattish move after opening up in the green. It's seen those gyrations, but again in the negative territory. 25,560 is what you're tracking. Let's pull up Bank Nifty on the screens as well and see what Bank Nifty is doing in trade, and then we'll look at the sectoral heat map as well. Bank Nifty within the private and the PSU banking space is crucial. You're seeing some bit of underperformance coming in from Bank Nifty as well. 0.3% lower there. Let's look at the sectoral heat map and then we look at the Nifty 50 heat map to compare that to the broader markets in today's session. Overall, if you see in terms of sectors, IT and auto, these are the only two sectors which are seeing some gains, but it's a sea of green. That's what it comes across. Media is the top losing sector, followed by metals, and I think metals is taking a crackdown with the way Hindalco has come in today. Defense is seeing some profit booking in trade as well. Consumer durables is down in trade as well. Energy trading under pressure, and realty, which was one of the top gaining sectors day before yesterday, is seeing profit booking. Let's look at the Nifty 50 contributors in trade today, and that will give us a picture in terms of the stocks which are contributing. ICICI Bank, Hindalco, Grasim, Eternal, these are the ones which are actually adding on to the cuts. But what's supporting the markets right now is the Reliance Industries, HDFC Bank, Asian Paints, M&M. It's a great combination, Mahima, that we're talking about on either sides right now, right?
Absolutely.
From ICICI, Hindalco, Grasim versus you have a Reliance Industries, HDFC Bank, Asian Paints and an M&M which are contributing to the gain. So that it's even Stevens on both sides. But broader markets also pretty interesting because the moves are absolutely spectacular when it comes to individual stocks, may it be on the negative or the positive side.
Yeah, absolutely. And I think let's try to pull up the BSE 500 to take a look at how stocks are reacting to either news or earnings that have come in. Redington topping that chart on the back of its Q2 numbers, 12.7%. CCL products, both on the back of numbers as well as the acquisition that they've made, up 10.3%. Privy Spec Chem up 9.6%. Bajaj Holding, Astral again on the back of strong numbers. Gujarat Paper also up 5.7% again on the back of numbers. But on the flip side, you have Aditya Birla Fashion, which is down 7.4%, 7.5% on the back of its numbers. Home First, Asahi India Glass, Hindalco, Grasim Industries down by about 6%. And this is, of course, on the back of the news update that has come in. You know, the expectation was, not the expectation, but since the time Rajneet Kohli had resigned from Britannia, the street was expecting a new name as to who will be the CEO of Britannia. And that news did come in. Rakshit Hargave has resigned as the Birla Opus CEO, the paints division, and joined Britannia from immediate effect. So the question really here is whether this will this Grasim's loss be a big win for Britannia or not, because overall he's had a lot of achievements in his entire career. I mean, he's led Birla Opus, disrupting the entire paint space, worked there for around 4 odd years. Of course, resigned post 18 months of the launch of Birla Opus, but he's turned Nivea India into the most successful skincare company. He's introduced 30 minutes guarantee concept in Domino's also. He's a BTech graduate from BHU and an MBA graduate from FMS Delhi. Like I mentioned, he's worked with Beiersdorf as SVP in terms of both Asian and Sub-Sahara Africa region as well, and MD as Nivea as well. Before that, he's also worked with HUL. He's worked with Lakme Lever and Kimberly Clark Lever as well, and also as a chief marketing officer of Domino's India. And also before that, he has had experience working with Nestle as brand manager for 6 odd years. So long journey where he's worked with a lot of FMCG staple names, then moved to a QSR company, then moved to paints, and now, coming back to the FMCG staple pace.
He's going to play from the home ground, it seems,
Yes.
right now. And that's what is putting pressure on Grasim, because the street is completely ignoring the kind of numbers that Grasim reported, because they looked at a 76% jump in the consolidated profit in this quarter. The revenues also saw a jump of around 17%. But I think street is completely ignoring that aspect and seeing the resignation when it comes to Birla Opus. The losses of Grasim probably are the wins when it comes to Britannia, which is seeing gains of 2.5% in trade. But moving on, you have Indigo that is in focus as well. In fact, CEO Peter Elbers says that the company is investing in its own maintenance facilities in Delhi and Bangalore, a move aimed at control over costs and operational reliability as well. The stock's seeing gains of 2.5% post numbers. Let's quickly listen in to what he had to say.
I think there's a lot of cost, and especially on a global scale, we see with the shortage of supply chain that some of the maintenance costs, for example, of bringing fleet to outside India are rising. That's exactly why we have taken a strategic decision to start building our own MRO facility, our own maintenance facility here in India itself. We have 2 hangars today, one in Delhi, the other one in Bangalore, and we have acquired a significant piece of land in Bangalore to start building our own facility. We're going to invest a whole lot of money to build our facility there, and that should help us both from a cost basis as well as to have more influence on the MRO part of our business.
Okay, so that's with regards to where Indigo goes. But moving on, Hindalco, that's a stock which is in focus, the top loser on Nifty 50 as well. And that's because the US arm Novelis, which has reported its Q2 numbers, where the management has indicated that they seem to have negative guidance on the third quarter EBITDA. And this is mainly on the back of the fire that broke out in September at one of their units. Vansh is with us to give us the breakdown of what are the things that have not really worked for a Hindalco, because that is having an impact on the entire metal sector as a whole as well. Vansh, over to you.
Well, thank you for that, Hiral. As you rightly mentioned, now the numbers were pretty decent from Novelis. However, it was the management commentary that is disappointing the street. If we look at the key takeaways from the earnings, we saw a decent Q2 results. However, it was the capex escalation and the impact of fire at the New York facility which has led to a disappointment for the street as well. If we look at the Q2 segments, we saw higher automotive shipments offsetting that lower beverage packaging shipments as well. The net profit was aided by local market aluminium prices, and if we talk about the net tariff hit, it was of 54 million on the EBITDA for Q2, which was much lesser, which was slightly lesser than the earlier guidance of $60 million a quarter. Also, if we look at the impact of the fire at New York plant may impact FY26 EBITDA of by 100 to $150 million as well. Also, if we look at the capex plans, now there BAME India's project's capex has been revised to $5 billion versus from the earlier $4.1 billion. Now, this increase is on the back of the increase in the capex outlays due to the inflation, labor and cost overrun by the company as well. If you look at the financials, revenue was up by 0.5% and the net profit stood at $163 million versus $96 million. If we look at the management commentary, they are expecting Q3 to have a significant hit on the EBITDA due to the fire at the New York plant, and they're expecting scrap spreads to improve, and this will be partially offset by the fire impact in second half of FY26 as well.
Thank you so much for that. In fact, you know, the entire metal pack Mahima has been trading under pressure, and whether it's the impact of a Hindalco or not is what we need to see, because you see any of the counters from a Hindalco, Hind Copper, JSPL, Welspun, NMDC, Nalco, JSW Steel, all literally under pressure with cuts of 1.5% to almost 6.5%.
Absolutely, and I think let's discuss this with Aditya Velekar, who's a senior research analyst at Axis Securities, joining us now on Trax Metals very closely. Aditya, hi, a very good afternoon to you, and thank you so much for taking out the time and speaking with us. We were just talking about how the metal counters are cracking in trade today, and one of the reasons could be the kind of earnings that Novelis has come with, and the commentary especially with the fire breaking out and capex guidance. Overall, just want to get a sense that we've seen a significant amount of rally in the metal index in the last week or so. Then we've seen profit booking as well. How are you viewing the index as a whole at present, and if somebody is already invested in some of these names, how should he or she look at it?
Yeah, good afternoon. So I will not extrapolate what happened to Hindalco and its news flow with the entire metals pack. So as you said, after the rally, there is a profit booking, and there are a couple of reasons. So number one is the ADP jobs data, which has come from US at 42,000 against a forecast of 25,000. So that is slight positive surprise. And that is actually a negative read through from metals, because the US Fed rate cut outlook gets complicated because of that. And earlier, Powell has also indicated that the next Fed cut may not be as, it will be data dependent. So earlier we were expecting that the Fed cut trajectory will continue, and that will be in turn is positive for commodities and metal in particular. So that clear leeway is now lacking. So that is number one. So that is from the macro perspective why the metals we are seeing a profit booking. And now coming to the earnings season. So earnings seasons have been mixed. Hindalco, Novelis is a specific event where that has happened, and in steel names we have seen decent earnings. But I don't think one can take a call based on the earnings in the long term. We may see a short-term correction in the stocks, but most of these companies have a good expansion projects lined up. So in the long term, I think one can stay invested, and for fresh positions, one has to take a buy on dips kind of approach.
Okay, that's interesting, Aditya. Good afternoon, Hiral. On this side, buy on dips should be the strategy according to you. Secondly, the takeaway right now, what I see is that someone who's already invested in metals should not worry. Now, from the uptick that we've seen, the index is up nearly 20% in the last 6 months. Now, in the last 5 trading sessions itself, you have the metal index, which has seen a downtick of around 5%. Apart from the macro indicators, when you talk about from the US and China, the data that is coming in, and the profit booking that's happening right now, which are the segments or which are the companies that would you advise investors to look at from a buy on dips perspective?
Yeah, so I will suggest for metals, if you divide it into steel and non-ferrous. So in the steel, we have seen that the prices are not picking up, and prices are even after the festival season, the prices are at a lower levels. So there are a couple of reasons. In China, China is now entering into off-peak season post-October. So the weakness in prices is there in India. But as I said, means all these companies, Steel Authority of India, that is SAIL, Tata Steel, JSW Steel and Jindal Steel and Power, they are all are expanding their capacities. So the short-term volatility in metal index we cannot rule it out. That will always be there. But one has to keep a view of long-term, and all these expansion projects, once they contribute to volumes, so the volume trigger and the operating leverage trigger will kick in next 1 year and 2 years, so depending upon the specific stocks. So the expansion projects is one of the driver where we get a confidence that one can stay invested. Obviously, commodity prices will remain volatile depending upon the evolving news flow on tariffs, China-US trade deal, and all that stuff. But the downside to steel prices seems limited because of the 12% safeguard duty. Already the steel prices are much lower, and the further downside doesn't look visible at this point of time. For non-ferrous, aluminium prices have stood strong, and they are currently trading at very strong level of $2,800 per ton, which is a significant price to generate cash for the smelters. So Hindalco, we have seen this negative news flow because of the capex escalation at its Bay Minette plant, which is slightly negative in the short term, and they have also said that because of that, the internal rate of return on that project will come down to single digit, which is slightly a negative read-through. But in the long term, means the stock will be under pressure. We might see some correction. But in the longer term, means 2 to 3 years down the line, they have expansion plans of smelters and alumina refinery and copper smelter. So from that perspective, one can stay invested. Nalco, also we can see some correction in the stock price because of these macro events, but one can stay invested because one of its alumina refineries is also going for an expansion.
Okay, Aditya, quick picks in the metal space. I mean, we've seen the kind of uptick that Hiral was mentioning, about 20%, in the past 6 months, but 5% down already. So buy on the dips should be the strategy, and if yes, what counters would that be?
Yeah, so I think one can look for Nalco as a stable bait for a buy on dips, and then in steel names, Jindal Steel and Power and JSW remains a buy on dip kind of play.
Got it. So JSPL buy on dips, Nalco buy on dips. Thank you, Aditya, so much for joining us on the show. So clearly, the word that is coming in, it's mainly the macros, the US jobs data, etc., which is coming, which is causing some bit of uncertainty and a crackdown when it comes to metals. But it's not time to worry when it comes to the metal space. There could be times of uncertainties from here on. Buy on dips should be the strategy that one should be adopting when it comes to metals, and it's a good long-term play that one should be watching out for? GSPL, NALCO, a few of the top picks that Aditya Velekar has given investors on NDTV Profit. But let's quickly slip into a short break. We'll be right back with the management of Chalet Hotels joining in to talk to us about the second quarter numbers. Please stay tuned to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
सोनू निगम के लिए जोरदार तालियां.
Welcome back. You you're watching Profit Buzzers. The stock that we're putting spotlight on right now is Chalet Hotels. Now, if you take a look at the numbers, overall revenue has seen a great growth of around 95%, EBITDA up 99% as well. So both grown in double digits. But I think it's the occupancy ratio that has come in slightly lower is what the street is concerned about. And you know, to talk about this and to take this conversation ahead, we're joined by Shwetang Singh, who's the Executive Director at Chalet Hotels, joining us now. Shwetang, hi, a very good afternoon to you and thank you so much for taking out the time. Mahima this side. My first question to you is with regards to where occupancy stands. You know, I think this has been the case for a lot of hotel chains who have reported the numbers so far. Occupancies have taken a hit. Just want to understand as to when do you see this normalizing? What is cost to this kind of dip? Because that's almost a dip of 7 percentage point. And you know, once this improves, what is the kind of ARR steady state of target that you're aiming at?
Hi, good afternoon. Thank you for having me on the show, Mahima. Actually, your question is in various parts, so let me take one part at a time. You know, each portfolio is different. While in general the market has reported lower occupancies year on year, I'll try and explain what has happened to our portfolio. So if you see our portfolio, it can be broken up in two parts. There is the leisure segment, which is at the resorts, and we have two resorts, one in the Himalayas and one Aravali in Rishikesh. I'm not considering Dukes in this in conversation because it's largely been under refurbishment and with the inventory only coming into play more recently. And in general, the resorts have taken a beating, particularly in the north. There were 2 or 3 big reasons. One was adverse weather conditions, particularly in the Himalayas. The rains were above average by about 57% long-term average against the long-term average. So it did take a beating from that perspective, and so was the case in Delhi, where 10 to 15 days we had severe disruptions because of rain. The second issue clearly was coming in the resorts, in particularly because of the auspicious dates. The auspicious dates in this particular quarter, there were no auspicious dates, unlike last year where we had 4 or 5 of them. But the good thing is that the number of auspicious dates generally in a year tends to stay stable. So what you will get is a deferment of those auspicious dates in the second half of the year, and that will make that half stronger. The third reason is just long weekends. As against last year, we've had fewer longer weekends, and therefore we didn't get the upside of that, particularly in the resorts. If I see our business hotels, Hyderabad, Bangalore have been fantastic stories. You do see a dip in occupancy in Bangalore for us, but that's because we added an additional 130 rooms that are still stabilizing, and that was only done in the last quarter. So that will take some time for the occupancies to come up. But during this period, we have grown rates very steadily, and the overall revenue in Bangalore has grown massively in this period. The MMR or Mumbai metropolitan region has been softer in terms of occupancy, but that's also because we are situated, and the micro market in Andheri has seen about 1,000 new rooms supply. They are not necessarily all in our category, but they do take away the compression on days when occupancies tend to be higher. In Powai, the overflow of the airport region and normally tends to go into Powai on days where there is compression, and on those days the newer supply seems to actually is picking up that compression, so that overflow is not going to Powai. So that's been another reason why Powai has seen a slightly slower growth. But the good news is that during this period we have still ended up growing our market share in most of our hotels despite the softness of the larger market.
Shwetang, interesting point. This is Hiral on this side. What I want to ask you is, you mentioned about your Bangalore project stabilizing soon. Now, if you have to look at the, growth in the room inventory that you've seen in Bangalore, which is nearly, 10%, how do you estimate it will take in terms of time for the new inventory to stabilize and actually reach your portfolio average occupancy and, RevPAR?
So it's not 10%, it's higher than that. Okay. We have grown 130 rooms on about 400 rooms, about 30% higher. Normally new inventory, if it is a brand new hotels hotel takes about 3 to 4 years to stabilize depending on which market you are in. But since we are part of a larger hotel and we are already well-known name in the micro market, I see it stabilizing over the next 6 to 9 months itself. As I said, the good news is that MICE is picking up, corporate movement is picking up, foreign travel is picking up as well. So, the expats coming into these markets, particularly around IT and ITES is going. GCCs are being set up in both of these micro markets. So I don't see more than 6 to 9 months of period that will be required to stabilize this new inventory.
No, well, absolutely, Shwetank. This is Shreyansi as well joining in the conversation. I wanted to get a sense of what you think about your management commentary, because that in fact is quite optimistic, right? So I wanted to get a sense of what is making this particular commentary for the second half of financial year 26 upbeat on your end.
So seasonality anyways in hospitality is about 45-55. So 45% for half one and 55% for half two. And that's always traditionally been the case. Typically, weather helps you. Then again, the fact that there is social or SIRE dates or auspicious dates that I spoke about, that is moving into the second half as well. So there is clear movement on that, and therefore we expect that to be strong. There is also business on books that we see. November, for example, what we are going through right now is a very clear month, and November and February are typically the two highest performing months, and February, despite just having 28 or 29 days, depending on which year you are in. So typically second half will be strong, but the tailwinds are also very visible. Social date movements, corporate movements, they are all showing much better trends than before. And most importantly, direct flights are coming in from international destinations, and therefore the expat movement is coming back to pre-pandemic levels almost, and that's also starting to contribute. And the good thing about expat movement is not only do they give you better ADRs, they also have much better F&B consumptions and other ancillary consumption. Therefore, overall revenue gets impacted positive.
Understood. Shwetank, just want to get a sense on your capex number. I think I just want to ask you, of course, from the last time that you guided for a capex for FY27, that was around 2,000 crores, if I'm not wrong. Has there been a revision in that? Has that been raised to that 2,500 crore mark? And if yes, how is this going to be done? Will it be entirely via internal accruals? And then what is the kind of ROC that you're targeting?
So CAPEX for us is an ongoing agenda. We have multiple options from where we can raise it. Of course, the first port of call is internal accruals, and internal accruals always are going to contribute to the CAPEX. Then, of course, there is the debt that is available to us. Today, just as an example, all our debt servicing is happening purely from the lease rental that we are getting in. And that's a great situation to be in, because that actually practically frees up all the cash that is coming from the hospitality business for us to be able to take more debt. So we have enough headroom to grow. We are not at all worried on the CAPEX side. The number on the CAPEX keep getting revised on two counts. One is on new projects that we'll keep announcing, and the fact that there will be projects that will get released and sort of move away from the CAPEX bucket into a capitalized state, and therefore moving into the P&L and depreciation of individual assets. So there is a plus and a minus going on in that at all times. Right now, just to give you a sense, our debt levels are at about 2,100 crores, and we are very comfortable when we look at a debt to EBITDA percentage, and a debt to EBITDA multiple. And typically, we are very happy between 3 and 3.5 of 1 year forward EBITDA. And we are at this stage at about 2.8 or something. So we have some headroom to grow.
Some headroom to grow and some headroom for expansion, Shwetank. Shwetank, the last conversation I had with Sanjay as well, our question to him was what happens with regards to succession and, et cetera, et cetera. I would want to carry forward that question with you as well, because your immediate strategic priorities for the next, say, 12 to 18 months, building upon the foundation that, Dr. Sanjay Sethi has left behind for you right now. How are you looking at that transition? How are you looking at strategic moves, etc.?
First of all, I hope you're not worried.
I'm not worried at all. And I want to make sure investors are not worried.
There's no reason to be. There's no reason to be. I think the company that Sanjay is handing over is in a great shape. The fundamentals are all in place, and just because there is a change, there is no reason to mend what's not broken. I think I just need to carry that legacy forward. There is, of course, when you grow in size, you end up changing some of the ways you work, and a very centralized decision-making process, which could work when you're a smaller entity, then has to be broken up, and the decision-making needs to be moved down the line so that the leadership team has more time available for strategic thinking and thinking forward, etc. So that's I suppose is the only minor tweak that will have to be brought in the way we work, so that everything is not rolling up to the leadership team. But other than that, as I said, we are in very good shape. We have the industry is in the tailwinds are brilliant. The larger macro is growing. There is entrepreneurial will to grow, and most importantly, we have a team that is poised to take over and sort of take it to the next level. So we are in very, very good shape overall.
I think Sanjay has handed over a good kid to Shwetank as well to nurture from here on. But thank you, Shwetank, so much for joining us on the show. Always a pleasure to speak to you, and we'll be glad to speak to you more often, apart from the earnings conversations as well. So that's
you will hear a lot from me as well.
Always happy to. Thank you so much. So that's the management of Chalet Hotels, clearly laying out, what Sanjay said he left behind for Shwetank Singh right now, and the way the transitioning is happening, and the kind of strategies that will come at play as well. The stocks seeing pressure though in today's session on the back of earnings, 4% downtick coming in there. But very quickly, we need to address this one story wherein SBI, the board has approved the IPO when it comes to SBI Funds Management, and that's a big story in the development right now. They've said that the bank will be selling their 6.3% stake through an IPO. And SBI Funds Management is the asset management arm of SBI. In fact, this is it's a joint venture between Amundi Asset Management and the bank. And this is a major development where we'll be getting my colleague Vishwanath to join in as well. But overall, let's just pull up the stock of SBI and see what SBI is doing in trade, because this conversation was something which was probably in the works as well. The stock seeing some bit of pressure right now, trading pretty much on the borderline. But clearly over here, what we're talking about is where SBI, the board has approved the possibility of an IPO for its subsidiary, which is SBI's fund management. And this was done actually back then in December 2021. That's when the board had gone ahead and approved it. However, the recent reports were indicating that the IPO currently was off the table, but now that SBI has come out and said it officially that the IPO will be going on, this was SBI's long-term plan to go ahead and list their mutual fund arm, and it was a potential IPO. And at that point in time, we were hearing of probably valuations of 100, or something.
1 lakh crore.
Yeah, 1 lakh crore at that point in time. And it would be completed when it talks about listing by March 2026. These were conversations that were happening in the past. But the developing story right now is where the SEBI's board has also had approved the exploring a potential IPO to offload that 6% stake in SBI Funds Management, which is a joint venture with a French asset manager, which is Amundi and SBI. Just to reiterate, the board has approved the IPO of SBI Funds Management. They will be selling 6.3% stake through the IPO. And this is the asset management arm of SBI. And it's a joint venture with Amundi Asset Management. The conversation over here is going to be, Mahima, in terms of the valuation that we're talking about, that was spoken about in the past. 1 lakh crore, it's going to be one of the largest, is what I think. I have Vishwanath Nar, my colleague, who's in the studio with us. Vishwanath, this is an interesting development. It's back on the cards now and it's official.
Yeah, so the announcement was expected at some point in time this year, and it's coming in now, of course, just a day after the bank announces results on Tuesday. Now on Thursday, they've come out with the announcement that the board has cleared the IPO for SBI Funds Management. SBI Funds Management, just for our viewers' reference, is a joint venture that State Bank of India has with Amundi Asset Management, which is a French asset management company. This IPO was widely expected because the SBI chairman has on many occasions said that there are two businesses which are IPO ready. One is, of course, the asset management company, as has come out now, and separately the general insurance business. Now, what NDTV Profit has found out is that the general insurance IPO might be a little later, but with this new IPO coming in for SBI Funds Management, that's big news for State Bank of India, because SBI is also in the process of unlocking value in its entire business. As far as its results are concerned, the bank has crossed 100 lakh crore in business assets plus deposits together. So that was a big milestone that they crossed just on Tuesday. And now, of course, they're coming in and saying that further value unlocking is going to happen at State Bank of India with the listing of SBI Funds Management. 1 lakh crore was the number that we reported in our story in September. Of course, the final valuation, all of that will take some time because the process has just started. So application to the regulators, specifically SEBI, as well as the RBI, all of these regulatory approvals, once they come in, that's when we'll get a fairer sense of where exactly the valuation of this company stands.
Vishy, you know what's interesting over here is, one, when you're talking about a 1 lakh crore valuation, how big is it going to be? Because I think this would be the largest ever an asset management company would list with in terms of valuation in India, is my read, number one. And two, if I'm not mistaken, SBI Funds Management, it's a joint venture between SBI, which currently holds little over 60%, whereas Amundi holds around 36% right?
Yeah.
So SBI is going to look at offloading around 6% stake.
6.3.
So which will still be where majority will stay with an SBI in totality as well, right?
That's right. So it'll be interesting to see, because as you said, it's going to be the largest ever asset management company valuation on the market. Now, of course, remember that this 1 lakh crore number is on the basis of what people internally at State Bank of India as well as their bankers are expecting. We still need to see, what the final valuation that they actually arrive at and at what valuation they actually go out to list, because of course there's a lot of interest in SBI Funds Management simply because they're also one of the largest distributors of that mini SIP product that SEBI came out with, the 250 rupees. So they were one of the earliest sort of people who had come out with that kind of small quantity SIP. That way they can reach out to a larger base of customers, and India is expanding in retail mutual fund SIPs already. So we'll watch out for what exactly the number comes out at, but either way, even if it is in 1 lakh crore, this is still a very massive development for a State Bank of India.
Another follow-up I have from a regulatory aspect for you. Do you think that the company may need to actually seek an exemption from SEBI as well when it comes to the minimum shareholding MPS rule? Because the current shareholder agreement might limit the public float to less than the required 25% initially. Is that a potential approval that they will need as well?
I am currently unsure about that, Hiral, but it's an important question to answer, because if that kind of an exemption is needed, then that will be another step in this entire process. One could also think about Amundi actually selling out a significant part of their stake as part of this IPO. So all of these are currently moving parts, and as and when we get the final sort of direction in which this listing will go, we'll report that to our viewers.
Absolutely. Thank you so much for that. And those questions are just to highlight right now as to what could be the potential questions that need to be answered. What are the possibilities? And I'm sure Vishy will be getting us answers to all of these questions during the day as well. But that's a big development that's happening when you talk about the asset management company, where the IPO finally has been announced right now. I mean, the approval has come in, I would say, from SBI. A 6% stake is what they would be looking to sell as well. Further developments will be something that will be awaited. The stock not see any major reaction, but still trading pretty much at the borderline. But moving...
Absolutely, and Hiral, what's really interesting is that when you take a look at some of the commentary that we've also recently received from CS Setty as well, that is also along the lines of speaking on the listing of subsidiaries as well, mutual fund and insurance arms. He's also said that, they are good candidates for the listing as well. So that's also something that is important to note here.
Absolutely. So interesting to see what developments happen from here on. But moving on, a couple of stocks which are reacting to numbers. You have Astral, Redington, GPPL, all of them seeing some good positive reaction in trade today. Let me head across to my colleague Puneet to let us know what has really worked for them. Puneet, over to you.
Well, thank you for that. It's definitely a strong quarter for Astral, to say the least. Valuations aren't cheap for the stock. but a strong revenue growth. Margins at 16.3% were a key positive as well. And when you look at the strong volume growth, 21% YOY is very strong in this particular quarter because PVC prices have corrected again by 10% on a YOY basis. Despite that, margins intact at 16.3%. Anti-dumping duty will be the other key trigger that we will be watching out for. Management is affirming that you could see some action before the 12th of November itself. So because of the expiry of the due date and some government notification will be needed. So if that comes in, it will be very key. And finally, in terms of growth guidance as well, double-digit volume growth is what the management is maintaining. And with piping margins of 16 to 18%, they did 19% this quarter. So that will be something to watch. Second stock on my radar is Redington. 29,000 crores of revenue done in just this single quarter is the highest ever in a quarter, almost a 17% YOY growth. They mentioned that when you look at the geographical expansion, Singapore, India as well as Southeast Asia has grown up 22%, while the rest of the world part of the business has grown just 11%. So this high growth, high margin business continues to grow, with Apple now at 31% of the consolidated revenue in this particular quarter versus almost 29%. Final stock on my radar is Gujarat Pipavav Port. Again, a decent set of numbers from the company. Revenue was higher by 32% in this particular quarter. A key highlight was that the higher bulk and higher volume of RORA, as they call it, but it's essentially the OEM revenues, and that'll be something to watch if it continues in quarter 3, should, based on the automobile growth outlook. And the dry bulk volume was up 124% on a YOY basis, with the profits also had a slight bump up because of the insurance money coming in. So overall, these three counters on the back of strong results in focus today.
And those are a bunch of counters that Puneet was looking at. But tell you what, Hiral, I don't think it would in fact be an understatement if I were to say that there's a bunch of earnings that we're going to be looking at. Time now to take a look at some more earnings buzzers as well. In fact, Jasmeet is joining in with that entire list. Jasmeet, I believe Solara Active, MediAssist as well make it to your list. Which are the counters that you're looking at then?
Well, right, thank you for that. Starting off with Solara Active. While it's been a negative quarter for the company, if you look at the revenue, they are down. Profits have turned negative in this quarter, and even the margins have contracted sharply. Now, what exactly has happened with the company is the top line was impacted due to delay in deliveries, and delay in delivery comes on the back of reduced volume, which comes on the back of plant shutdown in Mangalore. While the operational shutdown in Mangalore has impacted the major business of the company, impacting the top line as well as the margins. But the management remains focused on the high-growing margin segment as well as on the long-term or cost optimization goals of that. If you look at the next one, I have MediAssist. We see the revenue uptick, but the profits are down sharply, and even the margins have contracted despite the EBIT growth of an EBITDA. Now, what has worked for the company is the employee expenses is nearly up 37%, is dragging down the margins and impacting. While in terms of the other things that are impacting the margins would be the integration cost of the recent acquisition of Paramount, which is impacting the margins by roughly 100 basis points. And in terms of the other aspects, the company has been adopted by 19 insurers in the H1, which is up by 2, given that was 17 in H1 of FY25. In terms of other aspect, the claim size for the management is considerably lower compared to the industry standards, which stands at roughly 4.4% versus the standard of 10 to 12%. So here's the benefit for the company. The next one is FDC. We said revenue and profits have declined sharply, while the EBITDA nearly halved. In terms of margin, the margin stand at 7.1% versus 13.1%. We see an impact on margins as well. Well, this thing comes given that the top line has been flat and the costs have remained the same, are impacting and dragging down the margins. In terms of the other expenses, they're nearly up 28% in this quarter. If we look at my fourth quarter, that's Home First Financials. It's been a strong quarter for the company. We see an uptick in terms of NII as well as the net profits. Now, what's impacting would be the AUM, which also grew at 26% YY basis, while the 30 basis point impact coming from the cost of borrowing, which has lowered. And further next, there's 30 additional days impacting on the company, given that the asset quality is something to watch out for as the management remains cautious on the environment and the macros. Now, in terms of lastly, the ROE has become lower, weakened, given that management has done a fundraise, and compared to what it was prior to fundraise, the ROE has reduced, where we see a negative reaction on the stock. But lastly, I have Ashai India. Well, they report a flat revenue and the costs remain elevated. If we look at the margins, they have been impacted. They're standing at 16.4% versus 18.4%. All in all, the finance cost and depreciation impacting the top line and the margins for the company.
Thank you so much, Puneet, for helping us out with the update when it comes to this one. But tell you what, with that, we're completely timed out on this edition of Profit Buzzer. Thank you so much for tuning in.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोर.
Hello and welcome to NDTV Profit. My name is Varsha. Well, it's a pharma day today, I would say, and Piramal Pharma is on focus. This is on the back of Q2 FY26 numbers, wherein the revenue impact that you're seeing is because of the inventory destocking by one of the customer in one large CDMO order. The EBITDA, though, was partly offset due to cost optimization strategies that the company had. To speak more about the numbers, how was the quarter and what lies ahead, I'm here joined by Nandini Piramal, who's the chairman at Piramal Pharma. Well, welcome, Nandini. Great to have you on the show. My first question would be the loss of demand from the concerned CDMO customer that you've seen. Is this temporary, or will this have a long-term impact?
So we still have a very good relationship with the customer. We have other products and other sites with them, and we are kind of green on all of their dashboards. So we fully expect that this to be temporary because they had loaded up on supplies for their pre-launch, and we expect that this we should see a resumption at next year.
Also, Nandini, if I'm not wrong, by FY30, you were expecting the CDMO revenues to reach almost $1.2 billion with 25% of EBITDA margin. Are you still on track on that number?
We still believe the business fundamentals are in place, and we are still sticking by our FY30 guidance for a company overall where we expect to double revenue, and we expect to increase EBITDA 3 times while reducing our net debt to EBITDA to 1. So we are still sticking by that.
All right. And for FY26, Nandini, the guidance have been revised from mid-single digit revenue growth to flat. And just wanted to have an understanding, any rationale behind this?
So in the past 6 months, I'd say there has been a lot of uncertainty across the business. Now, biopharma funding, for example, was subdued. What we have seen, though, is in September and October, there has been a pickup in biopharma funding. There have also been a resumption of M&A and deal activity. So with that, I'd say there's more optimism for H2 going forward. But any sales that you do now will show up in the next year, in the next financial year. So that's why we're moderating our guidance. But I think we believe that the business fundamentals are in place, and we do think that we want to stand by our FY30 guidance.
Understood. So on that note, Nandini, will H2 be stronger? Will H2 be stronger than H1? Because we've seen subdued growth in H1, and considering the flat guidance that you've given, H2 should be on a stronger note.
Exactly. H2 in this business is always stronger than H1. It is a seasonal and cyclical business by that. So we do expect a pickup in both revenue and EBITDA for H2.
Understood. And what is the margin target that you've set yourself when it comes to FY26? EBITDA margin?
We've said the EBITDA will be about 10%.
Okay, EBITDA would be around 10%. Got it. On the revised US Biosecure Act, Nandini, just wanted to have your views on that. And are you seeing, increased inquiries on the back of Biosecure Act?
I think the Biosecure Act, we'll see if it gets passed. But I think what we are seeing is that there are certain customers that want to move back to the states and do onshoring. So we are seeing a very good interest in RFPs and RFQs in the US and our sites of Riverview, Sellersville, and Lexington. And we have existing capacity and are available to do tech transfers, and we are seeing good interest there.
Got that point. Also, with respect to this entry of a new Chinese player when it comes to isoflurane market, I think that's a key product for you as well. Can you just provide some color on how this is going to impact you or impact any of the market share that you have on that particular product?
So isoflurane is a smaller size product than sevoflurane. It's also been generic for a long time, so there has been competition. I think we don't expect that the Chinese competition will have too much impact on pricing and market share at the moment.
Understood. And onto the ADCs, what kind of investment so far has gone into these ADCs assets? And if you could give the opportunity size also for this particular segment.
So I think ADCs is something that we're very excited about. We've been in this business in conjugation for the last 20 years, so we've got a very good track record of taking molecules to commercial. We also then invested in the payload linker at Riverview, as well as we're expanding our fill finish capability at Lexington. So again, this is something that we're very excited about. We've seen a very good pickup in terms of, again, requests for proposals and quotes. And I think I can't actually give you a number, the opportunity, because I think it's a very, very fast growing opportunity.
Understood. And Nandini, considering the CDMO volumes and the compliance cost keeps on shifting when it comes to CDMO, just wanted to understand from your perspective, how are you planning to protect your margins? And we all know there are many companies which are into this CDMO sector, so just want to understand that moat and that unique advantage that Piramal Pharma has when it comes to overall this sector.
So I think the basic first, is quality and safety. Our quality record is second to none. We've had no OAIs in our entire history. And we focus a lot on safety and making sure that the people that work with us come home safe. The other big benefit, I think, to us is our network. Let me give you one example. We announced this investment with New Amsterdam Pharma and our Sellersville site. We've done the development in Ahmedabad because that's where they could get the speed and quality of work. And we dual sourced it, and we have put the product in our Pithampur site in Madhya Pradesh as well as Sellersville in the US. So this, for the client, it helped balance both the speed, proximity to market as well as value. And I think that's the benefit that the network gives for everybody.
Understood. Also, Nandini, for FY26, the revenue would be flat, that's clear. What about FY27? Any internal target? Yeah, please go ahead.
We're going to, I'll say that we're going to stick to our FY30 guidance. FY27 will come at a later date.
Understood. And lastly, Nandini, just wanted to understand the products in pipeline that you have, for rest of the year, 26, and of course for 27, if you have any.
I think across the board, whether we're looking at invest in co-licensing and investment in co-development for products for the critical care business, for the consumer health business, we're continuing to launch new products and SKUs. And so I think that's going to be part of the business going forward.
Understood. Well, thank you so much, Nandini, for answering all the questions, and all the best for the business.
Thank you.
That was the management of Piramal Pharma. But if you look at the markets, Anushri, the Nifty seems to be flat, but the pain is much more when it comes to the broader market. The Nifty mid cap is down around 0.7%. Nifty small cap has slipped nearly 1% in trade. And among sectoral indices, Nifty metal, which is down nearly 2%, largely because of the sharp drop that we have seen in Hindalco.
Yeah, absolutely. So if you just see the broader markets, it pull out the advanced decline ratio also largely in favor of declines is what we are seeing. In fact, the ratio is skewed. Somewhere between 1:3 is the kind of ratio that we are looking at if we just take the current numbers in picture. In fact, what Somit was speaking about, mid-cap 150, about 0.7% of a downtake. Small cap 250 also, we are seeing more than a 1% of a downside. A couple of stocks in focus, BSE 500 also, we are seeing some of that pain coming from a lot of these counters. But, let's take stock of the derivative space as well. So before we do that, let's go with the management in focus. Canterville Retail posted a healthy set of numbers in terms of the second quarter performance, and this continues to expand its presence. It added 25 stores in this quarter. In fact, Shivendra Nigam, CFO of Canterville Retail India, joins us with more. So first of all, welcome to the show, Mr. Nigam. I just want to start off by understanding the second quarter numbers that we are looking at. You posted a 16% of a revenue growth. You added 25 stores in the quarter. What's the kind of H2 that we'll be looking forward, considering now we'll be looking at healthy set of demand trends also for the industry? So just want to get your perspective.
So first of all, thank you for having me on the show. Yes, the demand is coming up very nicely from 22nd of September. So quarter two is slightly on a lean side for us or for the industry overall as a whole. But we did what the target we have. In fact, the growth is there. But from 22nd of September, the day GST relaxation has been there, we are completely passing it on to the customer. Consumer has actually came up to the market. And October also, we have a very good double-digit growth. The sentiments are positive. Government is also looking at it. So a lot of cash in hand has been given to the customer. So we are looking forward to a very good long-term numbers now. It's not about only for this financial year or next financial year. It looks like going forward, next 4-5 years, the retail is going to boom, no doubt.
So I'm just looking at the Vision 2027 that you've given. So if you take the current margins in account, it's anywhere between 22 to 24% of range that we are looking at. You're aiming for a 28 to 30% of a mark going forward. Along with that, you're also planning a store count of around 725. So just want to understand these key metrics. What would lead to this growth going forward?
So as we mentioned earlier as well, that this year by 20% growth would be there, and by FY27 with this growth, 20%, 20 plus growth, 1,000 crore revenue mark would have been there. And as you mentioned, 725 stores would be there. So we have a trajectory to how to complete it. So there are 2-3 sections for this. Number one, obviously in last 1 year, we have added approximately 1.5 lakh square feet of area. Right, 75 stores we are opening. Now we are opening bigger stores for last 2 years, 1,600, 1,700 square feet of stores. Earlier our average size was 1,100, which now come up to 1,350 square feet. With this expansion, and we are looking for a good same store sales growth as well now. So but the target is to achieve it 7-8% of the same store sales growth, which will on the mark as of now and going forward also. Plus e-commerce would come up. So these are the 3 main levers: retail expansion, continuous retail expansion, same store sales growth of in the range of 6-8%, and e-commerce is going up. So this will definitely lead it to the 1,000 crore. It's a very clear visibility for 1,000 crore now.
But sir, how do you plan to balance this store expansion plan and increasing the same store sales growth? Because both won't actually go hand in hand. So how do you plan to balance that?
So our new stores focus is not being deviating from our existing store parameters. We are completely basic KPI driven company. We are continuously marking our basket size, our average bill size. Probably we are leading in the industry, 4,400 plus odd we are supposed to end up with this financial year. So these are not, reflecting any other. So the same store sales growth team and basic parameters are set. So that we are expecting with the same, with the expansion. So there is no contradiction in if we are opening the more stores, planning to have a 60-70 to take it to 100 stores in next 3-4 years, right? So there is no contradiction in that. The same store sales growth team is working on this, existing team completely every day on day basis. Operations team is monitoring the KPIs. So same store sales growth is on the mark as well as expansion. So all this will lead to have a 20+% growth going forward.
Aim of to reach the 725 store mark, how are you going to split this? How much will be focused towards tier 1, how much in tier 2, how much in tier 3?
So basically tier 1, like we are in a Delhi NCR based company. So tier 1 is hardly 8 cities, 8 big cities, capital cities of the, big Delhi, Mumbai, Bangalore, Pune. So already we are there. So going forward, the expansion would mainly be tier 2 and tier 3 cities. As of now, we have a split like 25% in tier 1, Delhi NCR having. And going forward, so the basic larger expansion would be in tier 2 and tier 3 city, and beyond that, and anywhere gap is there in tier 1 city, that would have been filled.
Shivendra, for giving the views on Canterbill and its outlook going ahead. But the action moves from small cap space to the FNO segment. BSE is a FNO segment. If you look at it, let's pull up the Sensex heat chart and see how the market is actually trying to move around, and if you could just get those numbers in, that would be pretty interesting. Almost you could say it's even Stevens. There's a recovery coming on the last 20 minutes of trade for Sensex as well. Of course, Asian Paints, at the higher side of almost 5% but Eternal and Power Grid, that's where we are seeing the cuts happening as well. Let's pull up the Sensex active futures charts, and of course we are looking at the trading happening in the premium segment, and open interest has actually gone up from almost you could say around 10 to 15% since the last BSE FNO check we had done. Let's look at the active contracts where the congestion numbers are on the higher side. Both this data is suggesting that there will be a period of consolidation in the next 10 to 15 odd minutes. Largely you could say 83,700, that's the level where we are seeing most congestion happening. But on the lower side for the put, this is ranging between 83,200 to 83,300. Let's pull up the BankX, how that has been performing. That is also trying to make a recovery here, but SBI, that's the only counter which is actually holding up the PSU segment, and it's still in the green as well. These are the important BankX top trades which we are looking at. But going ahead, apart from these BankX top trades, we see the HDFC Bank counter that has picked up. That's almost 0.4%, and that's one of the reasons why we are seeing a recovery in the initial part of the day. And now we could see that the BankX, is trying to make a strong attempt. BankX, the most active calls coming in, that's on the higher side. That is roughly, you could say 67,500, 66,500. On the lower side, put options, not much action here, but between 65 to 62,660. But let's look at the important stocks which are very important. And the key longs, that is something which you'll be looking out for. The key longs, they include stocks such as Astral, Asian Paints, which would be there in focus. And also, if you look at it, apart from the long options, let's look at the key shorts also, which are there. We can see these are the stocks which are coming in. Astral is there, that's up 6% in the trade. And Paytm Britannia, they also make it to the list, which are key longs. Key shorts, Delivery, Hindalco, which we were discussing earlier. On the metal space, we are seeing an important sell happening, while Grasim and Indian Hotels also make it to the list. Let's look at the long unwinding stocks. These include Syngene, IIFL Finance and Inox Wind going ahead. And lastly, I would like to also point out the short covering stocks which would be in focus, and they include Piramal Pharma and Novama. So this is the entire check in the F&O segment for the BSE.
Thank you, Sharad, for that extensive F&O check that we have on BSE F&O side. Moving on, MV Photovoltaic is the new kid on the block. The company is looking to raise close to 2,900 crore rupees, of which 2,100 will be an offer for sale. The price band at which they are offering these shares is now 206 to 217. Now, earlier we spoke to the management on their growth plan. Listen to what they had to say. The new company on the block, or the new company that will be coming out with its IPO, is MV Photovoltaic. They are looking to raise close to 2,900 crore rupees. Of this, 2,140 crore will be a fresh issue, while the remaining amount will be an offer for sale. Now, this IPO will open on November 11th and will remain open till November 13th. The company is looking to raise funds at a price band of 206 to 217. And the market capitalization that the company is aiming post-listing is close to 15,000 crore rupees. Now, to understand the way forward for this company, we are joined today by Manjunatha DV, the Chairman and Managing Director, and Suhas Manjunatha, the Whole-Time Director, President and the Chief Executive Officer of MV Photovoltaic. Sir, firstly to start off with, around 2,100 crore is what you're looking to raise via fresh issue. How do you plan to use the proceeds?
So thank you, sir. Thank you for inviting us onto this channel. And so as MV, we have about 2007, we have started about 18 years old of the company. We have expanded our capacity in many times. And for that, we have also availed a few term loans, which is under running, which on the fresh issue, whatever we are doing on 2,150 crores, in that we are going to repay the existing debt of 1,600 crores approximately, and remaining we are using the corpus fund, sir.
Right. And debt repayment will of around 1,600 crore rupees, I believe. By how much will your interest cost go down, and by how much will your net profit increase because of this debt repayment? If you could share some insights on that front.
Sir, basically today, we have a capacity of 7.8 gigawatt and of module capacity, and 2.9 gigawatt of cell capacity, making us one of the largest pure play solar cell and module manufacturers. So with that, we also have a large growth plans. Right, so we are expanding our capacities to like 16.3 gigawatt of module and 8.9 gigawatt of cell. So typically, like there is also some debt that is going to come back into the balance sheet for the new expansion. But as you have seen the tremendous performance that the company has done over the past many years now, and build the strength in its balance sheet as well.
So the incremental debt that would come in, will it be more than 1,600 crore rupees? Any detail on that front?
Sir, this whatever we are going to repay this present debt, which is with that after your question to the earlier one, which definitely will going to save about around 9% of the profit will going to be added to the further repayment. And then the incremental debt which we are going to have about 3,300 crores, which is going to be come in the balance sheet of 2028 onwards, sir.
Okay, so that's a new IPO that we should be watching out for. But apart from that, another counter which is in focus is Mafatlal Industries. Now, if you look at the second quarter numbers for you, we are looking at a 3% of a revenue uptick, while margins stood at about 3.4% in comparison with 3.2% last year. And PAT also saw about 11% growth. But to discuss about the quarter gone by and the outlook forward, we are joined in by MB Raghunath, CEO of the company. Welcome to the show, Mr. Raghunath. Let me first start off with the numbers that we are looking at. So you've posted a healthy set of numbers is what we are seeing. Just want to get your overall assessment of the quarters, about the segments also in which you operate. What's the kind of outlook that we should be building forward for FY26, considering the second half which is there?
Oh yeah, I mean, good morning and thank you for having me here. And we have done the quarter one and the quarter two extremely well. And our year-on-year growth on quarter one and quarter two and half-yearly growth is also significant. We are operating into the textile segment that mostly we are concentrating on the uniform market segment, because that's a niche we have developed that is growing very well. And we are into digital infrastructure, especially for the education industry. We are into health and hygiene, and we are into consumable products. So our consumable sales, mostly we do it with the government projects, which has done extremely well. That's why our top line has grown significantly. Biggest contributor is textiles and the consumer durables.
So, if you look at the digital infra segment, that contributes nearly 35% to the top line. How scalable is this business, and what are the margin potentials you see in this segment?
No, actually, this is one area which we are concentrating more, because that's a future. Because the digital infrastructure development in the educational industry has just started. So there is a long-term perspective in this segment. And we are one of the largest system integrator in this segment. And we are working with private schools and government schools and many institution-run schools everywhere. And there is a very good margin in this business being a system integrator. The margin revenue in this is better than the textile what we see from the past.
Okay, so just want to get a sense in terms of these three segments that we are looking at. While consumer durables, we've seen a healthy growth in terms of how the first half has fared out. Second quarter, there was a certain downtick which was there. Just want to understand what happened in this quarter.
No, second quarter normally, because the textile segment comes down a little bit because of the season. It's a seasonal change in textiles across all the textile companies. So what happened in the second quarter, the sales of the textile segment is which has pulled a little behind. Otherwise, it is normal. Always the second quarter and the third quarter, the textile sales comes down lower. The first quarter and the last quarter, it's always peaks.
And for the second half and FY27, if you could give us some guidance on how are you looking at the overall margins to be for the company?
See, actually, we are concentrating on improvement of the profit after tax, because certain projects being very large, we are certain business being large, we have to really calculate on the future profitability index that how we'll work on. But I'm sure our next year budget and the next year profitability budget, both are significantly higher than this financial year.
Okay, so considering these targets that you have in mind and subsequent ramp up of the segments also that you're seeing, what's the kind of top line growth that we should see in the next 2 years? If you can give us guidance for that, along with how the margins would shape up.
I think the growth in the top line will be anything between 20 to 25% is what we are expecting. But we are trying to increase significantly the margins of the PAT margin we are increasing. That we are looking at almost at the 20-25% increase next year and the year after.
Well, thank you so much for joining and sharing that outlook on the company. But viewers, that's all the time that we had on this edition of Small Cap Buzzers. Do stay tuned. India Market Close coming up next.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank. Well, that's very sweet of you. Thank you. I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
और रहमान
सोनू निगम के लिए जोरदार तालियां.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV
welcome. You're watching India Market Close here at NDTV Profit. I'm Mahima Vachhajani and with me is Sharad Dubey. I think one thing that the markets don't like is probably a midday holiday. As much as we like it, I think the markets don't like it, and that's why we've seen the kind of downtick in the markets, on Tuesday as well, and today also we're seeing Nifty down by about 0.2%. And Sharad was pointing out the kind of gap between the Sensex and the Nifty. We don't find this very often, right? The Sensex is almost flat as we speak, around 0.05%, 0.04% down, but the Nifty 50 is down by about 0.2%, and that's probably the expiry playing its part here. But the Nifty Bank also under pressure, down by about 0.3%. The Nifty 50, in fact, down below that 25,600 levels as well, and we'll have to see as to how much of a further bottoming out can be expected from Nifty 50. We'll ask our technical analyst also that question. But moving on to the Nifty 50 heat map. It's a very divergent heat map if you take a look at the stock specific action that's happening there. There's Asian Paints, which is up 4.5% on the back of the Nomura upgrade, or maybe some sentiment coming in on the Grasim Paints resignation as well. Interglobe Aviation on the back of earnings up 1.5%. There's M&M also holding up very well, up 1.2%. Reliance also doing very well in trade today, up around 1.3% as well. You have some IT names like TCS, Wipro up by about 0.8%. But on the flip side, if you take a look at something like the Grasim Industries, down by about 6%. Hindalco down 5.7%. This is of course on the back of resignation, though numbers were not that bad, but resignation has caused that kind of downtick in the overall sentiment. Hindalco down 5.7% on the back of the numbers that has come in, Novelis numbers that have come in. You have your Power Grid, Eternal, NTPC, Bajaj Finance, JSW Steel, Tata Steel, Eicher Motors, as well as counters like BL and Geo Finance, all down by about 1% each. Let's try to pull up quickly the sectoral heat map and see as to how sectors are doing. Only the Nifty Auto and the Nifty IT in the green. Otherwise, it's red across that map. You have your media down 2.5%, metal down 2.17%, India Defence also down 1.7%, consumer durable down 1.5%, Nifty Realty also seeing profit booking down by about 1.3%. Let's try to pull up the advanced decline ratio, and that chart will give us a picture as to how wide that gap is. Look at that. It's narrowed a tad bit, but still you have around 1871 odd declines versus that of 500 odd advances. So over that 3:1 ratio where bears have taken the charge at present. Let's try to pull up the mid cap and the small cap index, because the pressure is real in the broader end of spectrum as well. The mid cap 150 down by about 0.8%. The small cap 250 also down by about 1.3%. And BSE 500, lastly, quickly before I go on to Sharad, for the trading strategies, you have very stock specific names coming in. Delivery on the back of its numbers doing fairly on the back of its numbers, down by about 7.5%. Aditya Birla Fashion also down 6.8%. Home First Finance, Grasim, Sheela Foam, FDC, some counters in the red. But on the flip side, you have CCL products on the back of numbers and acquisition up 11%, Reddington up 13%, something like a previous SpecChem, Easy Trip and Astral all seeing gains anywhere between 6 to 9 odd percent. But Sharad, what is the kind of trading strategy that you're looking at right now in the markets?
Well, 10 minutes ago I had a different trading strategy, and the volatility of the market has actually forced me to change the strategy itself. And of course, there's a massive reversals happening. Nifty has, of course, gone below the 25,600 mark. A recovery attempt was made, and just 7 or 8 minutes ago, we saw a sharp downtick coming in. The Nifty key support levels still 25,500 levels currently, and the key resistance not so much to expect. That's roughly 25,650 odd levels, and Nifty was trying to make a better recovery than Nifty Bank, but both of them you could say reversed in the last 7 to 8 odd minutes. The recovery attempt was made by Reliance as well. Nifty Bank near the 57,700 levels, support coming in at 56,600. A very short range I have given this time. Resistance levels also suggesting a 57,900 mark currently. But both of them, the fall is actually increasing, and European markets, when I checked, it was initially showing a green setup in the beginning, but then it turned into red, and that's a significant sell-off happening in the European market also, especially DAX and FTSE, and that is where we are seeing Indian markets are also taking the cues already in the last 5 trading sessions. 4 sessions have been in the red. Strong selling seen in the metal counters, and that has expanded also. We'll be getting you all the details. One should be giving us important views on this segment and the broader indices. Mahima had pointed out earlier, A weak set of numbers, both of them near the day's low level, and the options data currently are suggesting there would be a consolidation of 1-2 trading hour sessions unless some major announcements happen post-market hours as well. But it's volatile, volatile, volatile. These three are the words which are determining the markets today.
Absolutely, and I think that's fairly reflected in the kind of market moves also that we're seeing right now. But with that, let's also welcome in Kush Bora, founder of kushbora.com, joining us now. Kush, hi, good afternoon to you. I think Sharad summed it up by saying volatile, volatile, volatile is what we're seeing on the benchmarks today, as well as the broader markets, right? What's the next support and resistance that you are seeing on the chart specifically for the Nifty 50? And, again, buy on the dips should be the strategy?
Hey, hi, Mahima. I have to give it to both of you guys. I think optimism is the name of the game for both of you. Buy on dips when the markets have been down over, 600% from the highs. And Sharad is being euphemistic when he says volatile, volatile, volatile. It is actually negative, negative, negative right now. So yes, I think, the optimism, I think the street could use a little bit more of that. Sadly, I don't think I'll be the one to provide that today. Now, the reason for that is while the 25,500 support zone that, we've spoken of multiple times last week, and we did say that, that could perhaps be tested in this downturn, and we're seeing that. Nifty is below the 20-day moving average today. Now, a couple of silver linings. Wix is down, and we've seen the Nifty rebound from the 20-day moving average around 3 times in the last 1 month. So if it happens, well and good, you could see another 250 points of bump up from here. But if it doesn't, then the index has a tendency of slipping about the same magnitude, 250 to 300 points on the downside. So if we don't reconquer the 20-day moving average, which comes close to the 25,600 mark, by the way, then you could see another 200 to 300 points of fall from here. So 25, 200, 250, that's the next level of support that I am looking at. PCR is also fairly okay, close to the oversold territories, but at 0.83, there's some more cushion. And hence, I wouldn't rule out some more downside. So yes, there could be short covering bounce that could come about, but is it a buy on dips market? At the moment, I wouldn't say so. Also, because the strongest sector that was in the last few days, which is the banking space, is also starting to see pressure, and today the bank Nifty is also testing the 20-day moving average at the low point of the day. So yes, some caution. I don't want to be the first one to go out and buy, but if I were to take a buy trade, it would be on bank Nifty, and even there I'm a little circumspect. So I would wait, let the slide settle, and then perhaps we'll get a day to buy, not today.
Pretty interesting. 20 DMA for both the indices which we are looking at, and if these levels are not maintained, at least in the closing levels, then we can see further sell-off coming in as well. But Kush, what would be your picks in this market? And I'm sure these picks will also have a sell, or you could say a buy call, because the markets is divergent, so your calls can also be divergent.
Indeed, Sharad. And in fact, that's how the structure has been for my calls, right? For the last 1 week or so, I've maintained a mix of a long and a short. No different today. On the long side, as you would guess, it's M&M. The stock's actually done rather well. In the last 6 months, you've seen the stock touch the 50-day moving average and rebound from there. So that's the support zone for M&M. In this rally also, if you see, the stock has rebounded from the 50-day moving average. Good momentum, healthy volumes, and I'm sure there are a couple of fundamental factors also supporting this move. So on the upside, 37.50, 38.50 are your targets. 35.50 is where you keep that stop loss. On the short side, I have got HUL as a continuation of the short trade that we've discussed last week. 24.30 was the first target, 2400 the second target. The first target's been hit. So now you can take this as a continuation trade where 2400, 2370 are your targets on the downside. And the initiation price of 2460 now becomes your stop loss. So M&M is a buy and HUL on the sell side.
Interesting. M&M and HUL, both divergent calls coming in, and that's what Kush has been recommending over the last 1 week. M&M on the upside. This market, it's holding its gains. That's very interesting. And let's pull up HUL chart as well to see where the movement is happening. So HUL is down, and see the significant downtick which I was talking about last 10 minutes where the fall is there. It's at day's low. UPL, let's pull up that chart in. The earnings con call is going on, and we're seeing a slight correction in the stock, but it's volatile. They have revised the EBITDA growth guidance to 12 to 16% versus 10 to 14%. So that is a positive news flow coming in, and they have reiterated the revenue guidance of 4 to 8%. Now, recently the broking houses are also bullish, especially in the Brazilian markets, where we could expect that a larger kind of an up move could be expected in terms of demand and pricing coming back to the counter. The stock over the last 6 months to 1 year, if you can just pull up the long-term chart for UPL, we will show you how the movement has happened. And you see there has been, you could say, a volatile movement coming in last 6 months, not much returns coming to the shareholders. But UPL current levels, how is it looking, Kush?
Yeah, once bitten, twice shy. The stock actually has a tendency of moving higher and then, just probably giving exit to investors who held on to it for the last 2 years and then giving way. Right now, the stocks had a fairly decent rally from a medium-term perspective. But as you rightly pointed out, it's not been a steady one-way rally. It's been fairly volatile, So I wouldn't really buy too much into the move that you're seeing. Anyway, there's a major supply zone and a resistance at the 740 mark. So from these levels, is there a big upside? At least not technically in the near term. If I were to really pick something from the space, I would actually look at PI Industries. The stock's seen a fair degree of correction and starting to rebound. So maybe as a turnaround story, at least on the technical front, PI Industries seems better placed than UPL.
I mean, numbers don't seem very bad, right, Sharad? The overall revenue uptick of around 8.4%, net profit, although there's a one-time gain, but still, around 450 odd crore of profit versus a loss of around 443 crores, and margins also improving at around 16.6%. But moving on to our stock of the day segment, and today's focus, of course, has to be on the top Nifty 50 loser, that is Hindalco. Not the top, of course, Grasim is kind of in the race along with Hindalco, but as the stock is facing pressure, this is from the Novelis weak outlook, plus there was a plant fire and a tariff impact. My colleague Vansh joins us with more details as to what's worrying investors in Hindalco. Vansh?
Well, thank you for that, Mahima. In fact, if we look at the stock, we have seen a decline of about 7% in intraday, and this is the biggest intraday fall for for Hindalco since 7th of April 2025. Now, let's understand the reasons behind this pressure. Now, this is on the back of the negative commentary that is coming in from Novelis. Now, Novelis is the US arm of Hindalco, and in fact, Novelis accounts for 60% of revenue of Hindalco as of FY25 as well. Now, let's also understand what's not working for Novelis as well. So the fire at New York plant in September 2025 had a negative impact on the earnings. In fact, if you look at the guidance now, the Q3 will be having a significant EBITDA impact on the back of fire. In terms of FY26, the estimated EBITDA impact stands at about $100 to $150 million. And lastly, if you look at the cash flow impact, it also stands at about $550 to $650 million as of second half of FY26. If we look at the capex plans, now there has been an increase in the capex allocation for the Bay Minette mine, and the project capex has been revised to $5 billion from the earlier capex of $4.1 billion. Now this was on the back of due to inflation, labor and cost of overrun that the company has incurred as well. Lastly, if we look at the tariff scenarios, 50% tariffs remain in place. They have guided that they have already commented that $54 million of EBITDA hit that they have already witnessed in Q2. They expect the tariffs to somewhat improve in the second half of FY26, and they also believe that the second half of FY26 will price in all the negatives, and we can expect some momentum to pick up in FY27 as well. Lastly, if you look at the analyst recommendations, we have 15 buys, 6 sell calls with a return potential of about 1.8%. So this is how the overall picture is panning out for Hindalco.
Okay, Vansh, thank you so much for bringing us all those details on Hindalco. Kush, quickly, your view on the charts for something like a Hindalco. I mean, fundamental analysts have, an average return potential of around 1.8%, but do charts look constructive?
Charts look slightly more constructive than that. If you'd asked me some time ago, whether to buy Hindalco, I would have been a little cautious because weekly and daily charts were showing overheated zones. The fall is obviously much bigger than what anyone would have anticipated. But at the current levels, does it become a buy? Yes, it's got a good risk-reward ratio. So I would keep a stop loss at the 760 mark. And, on the upside, you are looking at 810 and about 835 kind of levels, perhaps even this gap that was created, to be filled in weeks to come. So I remain constructive on Hindalco, and this dip could well be a buying opportunity.
Well, buy the dip opportunity coming in for Hindalco. But let's move on to management conversations. Joining us, Parvat Srinivas Reddy, Managing Director at MTA Tech, joining us on Q2 numbers. And just to put the things in perspective, the revenue saw a downtick of 29% on year-on-year basis. Margins also took a sharp cut, and EBITDA was also down, net profit also being impacted. And decoding these numbers, we are having Mr. Reddy with us. Good afternoon, Mr. Reddy. First of all, I'd like to ask you about the question on the revenue front. There was a significant degrowth coming in. That's roughly 29% year-on-year basis. What's the reason for this revenue? Is there a revenue recognition issue which has happened, or you're expecting some lumpiness in the third quarter to kick in?
Absolutely. We are really not worried about Q2 at all. If you look at our Q3 and Q4, we are going to have 2x of sales in the second half of the year. So, in fact, we had given a revenue guidance of 25% year-on-year, which we have revised today to 30 to 35%. So, we're looking at close to about 600 crores plus revenues coming in the second half of the year. So the Q2 was aberration, basically because of we had to negotiate and discuss with our customers in terms of tariffs and various other things, which it took some time. And we also had to ensure that we don't compromise on tariffs issue at all, because we are a technology company and we, in order to maintain our margins as well. So we'll be back on track very comfortably in Q3 and Q4 and even beat the revenue guidance what we had given earlier.
Okay. Mr. Reddy, hi. Mahima also joining in. Just want to get a sense with regards to where your guidance stands. Overall, if we take a look at your first half of numbers, there has been a slight degrowth in terms of where revenue growth stands. But you've changed your guidance to 30 to 35% on higher order inflows. Just want to get a sense as to what is bringing this optimism. First thing, what will be the segments that will drive this key growth? And overall, how will the guidance change across key segments?
So basically, the guidance, improved guidance is coming in from the fuel cell sector, from clean energy, where we have received substantial orders. In fact, our closing order book is 1,296 crores as of Q2. And post Q2, we have received further 480 crores of orders in the last 1 month. So the closing order book for this year, after executing the second half of the year, will be around 2,800 crores, which is the highest in IMFA till date. And that's the reason why I said we are definitely going to maintain our overall margins of 21% with a revenue growth close to about 900 crores, which should be about 30 to 35% revenue guidance. And the growth is coming not only from clean energy, but also from aerospace sectors, where again, we are exporting most of it to United States and other countries. So it took us some time to regroup during the Q2 process of the tariffs and all those issues. But we are back to normal right now, and with additional orders kicking in, which is a proof in the whole stuff that so many of orders we have received in the last 1 month itself is an indication that where we're going to head over the next 2 quarters.
So, Mr. Reddy, then just want to understand in terms of your overall guidance and order book across segments, how will that change? Considering that the outlook for aerospace and defense is with a target of making 100 crore by FY26, how does that shape up?
That is on track. The aerospace is definitely on track. We are doing pretty well with our customers in terms of development of new products and also the volume production as well. And the key driver is also going to be the clean energy in terms of more shipments happening in Q3 and Q4 to United States in spite of the tariffs, without compromising on any kind of margins or any other issues. So I don't think, and all these orders are already received by the company and we are executing it right now. So we should be there around the revenue of about 900 crores plus, as I mentioned earlier, without any issue.
Pretty interesting on that, Mr. Reddy, but let's go a bit specific, especially on the nuclear front. What's the update on the new facility for your civil nuclear projects? Of course, the government has been announcing private sector participation in this sector, and the capex requirement is roughly 1,000 crore or so, which company had earlier announced. Stand me if I'm corrected. Does this stand now, or you'll revise these numbers, because there would be much more capex numbers being announced because of the sheer size of the industry, even if you call it the civil nuclear space? So what would be the overall capex plan for this segment, and what kind of timelines we can expect?
See, the first thing is we have enough capex or capacities in the company. We are dealing with nuclear division for the last 40 years. Now we have enough capex to handle the orders coming in. So coming to your point, we are expecting close to about 500 crores approximately worth of orders this month from the nuclear side of the story, mostly from Kaiga 5 and 6, and another 300 odd crores depending on when the tenders are going to get opened during the course of this year, by another 300 to 350 crores of orders, mostly I would say conservatively 300 crores additional during the course of this year. So that's this kind of orders flowing in has happened for the first time, and it's on the upward trend. And with this, we should also have a good exponential growth in the nuclear division as well.
Understood. Mr. Reddy, correct me if I'm wrong here. Working capital days guidance was at 200 days for FY26. But if we take a look at the presentation, total working capital days have increased to around 274 versus that of 267 in June 25. What has led to that? And is there a coming back from those levels?
Yes, we will be coming back from those levels by end of March because we have the inventory pile up in order to get into the growth of the next 2 quarters, which are substantial. And also we're looking at the future quarters as well. So it should come down to about 220 days by end of the year.
All right. Mr. Reddy, thank you so much for giving us those insights and, of course, taking out the time and speaking with us at NDTV Profit. That's MTAR Tech's management for you viewers. Let's try to pull up the stock and see as to how it's doing in trade. And, of course, a slightly longer term perspective chart also, if you can try to pull up the 3 months chart and the 6 months chart to see as to how the counter has done. Down 5.7%, but overall in the past 3 months it's given a return of around 53%. But quickly, your view on MTAR Tech?
Yeah, not a bad setup at all. As you rightly said, the stocks actually zoomed up in the last month or last couple of months. So some profit booking was par for the course. There was some mild negative asset divergences, which were also suggesting some profit booking around the corner. But I think stock has a good, strong supports at the 22.75 mark from where it's rebounded today as well. So yes, if you do get a decline again closer to those levels, you'd be better off buying. And maybe you could start nibbling into it at these levels also. So all in all, a good setup for MTAR Tech. If I did buy, I'd keep a positional stop at the 21.50 mark.
Okay, all right. Good setup for MTAR Tech is what the charts are indicating. But moving on, the big story that we're tracking today is SBI board approving IPO of SBI Funds Management. The bank will sell 6.3% stake through this IPO. Vishy joins us with more details. Vishy?
So State Bank of India is going to go on this value unlocking spree essentially. It's 6.3% stake that it has in SBI Funds will be sold through the IPO. Alongside that, its partner, the French asset management company Amundi Asset Management, they will also sell about 3.77% stake. At this point in time, analysts are valuing SBI Funds Management at close to 1.2 lakh crore in terms of the overall valuation of the company. SBI Funds Management is a 38-year-old firm with a lot of experience in asset management. It's also a joint venture, as I said earlier, between SBI and Amundi. SBI owns about 61.9%, while Amundi Asset Management owns 36.36%. The rest is owned by a clutch of other investors. The company is, of course, the second most valued subsidiary of State Bank of India after SBI Life. While the IPO will see about 10% stake being sold to investors, eventually, as a listed company, 25% public float will be a requirement that SEBI has. But of course, for companies that are valued over, with a market cap of over 50,000 crore, they have about 3 to 5 years to actually achieve that 25% number. So as of now, this looks like a great step for State Bank of India to unlock the valuation that it has in its subsidiaries. Just remember that on an SOTP basis or sum of the parts basis, SBI Funds Management contributes about 8% of SBI's value, and that's why it's a significant sort of value unlocking for State Bank of India. Actually, on Tuesday, when the bank announced its quarterly results, we did ask this question to the SBI chairman, C.S. Sethi. Let's listen to what Mr. Sethi had to say about this. There was a lot of expectation that the mutual fund business will come to the market this year. I'm not sure where you are on that decision-making front. Then there's the insurance company, which is also, at a size where you can think about listing. Any decision, any plans at this point?
These two companies are good candidates for listing from our stable. I think this repeatedly we have said that. We have not decided on the timing, neither on the sequence. I think a lot of speculation goes on that. But definitely we have intention and we have plans to list them, and boards will take appropriate.
Right. So that was C.S. Setty, the chairman of State Bank of India, who spoke about the fact that they didn't have a sequence or a clear timeline. But of course, just a little over 48 hours later, that announcement has come in. I have with me on the phone line Mr. Dinesh Khara, the former chairman of State Bank of India. Mr. Khara, welcome to this conversation. Unlocking value at State Bank of India and improving its valuation in the market was one of your stated agendas as well during your tenure as the chairman of the bank. How are you feeling now that the announcement for the mutual fund business has come in?
Yeah, in fact, as far as mutual fund is concerned, this happens to be the largest mutual fund in the country in terms of AUM. And when it comes to the quality of resources which they have in terms of the investment team, etc., that is also of a very high order. So I would say that it's a welcome step. And also when it comes to the market which is looking for the quality papers, this will be another quality paper which will be available from the stable of State Bank of India, and maybe the investors can find value in investing this particular scrip. So I think and also when it comes to the joint venture partner Amundi, who are holding significant stake in the company, almost to the extent of about 30% odd. So in fact, for them also it is one of the very important subsidiaries across the globe. So that is something which I can say. So actually rated well by both the parents, SBI as well as Amundi. So I think I'm sure this will be a big value creation for the parents as well as for the investors who can come into this script when it is listed.
Sir, while a lot of people are, part of this entire SBI mutual fund chain, I would say value chain, not a lot of people know a lot about the company itself. If you could just tell us a little bit about the company itself and why this makes it the largest, largest asset management company coming to the market.
See, when it comes to the, as a company, of course, it's not a listed one, but I think when it comes to the AUM, which is actually, it could be somewhere around, I would say it could be around 16, 17 trillion AUM of this company. So that actually speaks volumes in terms of their ability to distribute, their ability to connect with, beyond bank also, they are quite strong in IFA and with the national distributors also. And as I mentioned about the sterling qualities of the investment team, that also goes a long way in terms of creating value for the mutual fund investors who come in through this route. So I would say that it is one of the oldest company when it comes to this. Actually came into existence when the mutual fund industry was opened up for the private sector investment. So this was actually next to UTI when this company came into existence. But yes, of course, it has been doing well all these years. And now, of course, the bank has decided to unlock value in its investment and have thought in terms of taking it to market.
Khara, before I let you go, just a quick question on SBI's valuation itself. I mean, you and your successor both have pointed out that it remains a mystery why the market doesn't value State Bank of India for the immense size of its banking business, but also very large subsidiaries that it has developed over many years. Do you want to tell us something, maybe something to the investors out there?
No, well, when it comes to the bank has demonstrated sterling results quarter after quarter for last so many years. So normally this was one of the concerns on the top of the mind of the investors. And when it comes to the quality of the balance sheet, it is of very high order. And when it comes to the growth also, they are actually the flag bearers when it comes to the growth. And if I may say so, they are the bellwether stock when it comes to the banking. And I think the way digital has become one of the major focus for the bank, naturally it is expected by any of the CEOs that it should be priced in line with what the best of the industry players are being priced at. Unfortunately, at times I believe the ownership is something which is there at the mind of the people. But I would say that irrespective of that, I would rather say that the ownership is very much anybody can be owner. Even Government of India is the owner. That's actually very big support. And the more important is the bank has established trust in the mind of its customers, in the mind of its investors, which actually goes a long way when it comes to any banking institution. So I think, having said that, best of the management, best of the product, very efficient way of operating, adoption of digital, much ahead in terms of technology and also products. So naturally, expectations are that it should be very well received in the market in terms of the valuation multiples. So it was. I think this is something where even I used to comment, and even Mr. Shetty also is also of the view that the bank is not being rewarded by the investors in terms of the multiples. So this is what I would like to mention. And apart from that, it's not merely bank 23,000 plus branches, but also when it comes to the broad basing the product base in terms of life, in terms of AMC, in terms of investment management, in terms of credit card, you name it, the bank and its subsidiaries are present into that domain, which actually means that when it comes to servicing the customers, it's actually a one-stop shop. And naturally, the expectation in terms of valuations are very much there. So hopefully, the investors will see merit in the functioning of the bank and the group, and will reward it appropriately in terms of the multiples.
Sure, Mr. Khara. Thank you so much for taking time out and talking to us about all of this. As always, a pleasure talking to you.
Thank you. Thank you very much.
All right. That was Dinesh Khara, the former chairman of State Bank of India, speaking about SBI MF. Back to you, Sharad, on the show.
Well, thanks, Vishy, for that. Interesting commentary from Dinesh Khara. And SBI Mutual Fund also trades in the unlisted market, and there is a spike from 2,500 odd levels. It's trading at right now at 2,700 to 2,800 rupees. And the only peer you could actually judge this company would be UTI AMC, and perhaps they command lesser valuations as compared to their private peers as well. But moving on, regarding valuations, let's continue our conversation, but this is regarding IPOs. Amid concerns over high valuations in recent IPOs, SEBI chairman Tuhin Kanta Pandey, on the sidelines of the 10th annual Corporate Governance Summit, made it clear that the capital markets regulator will not intervene in the aspect. As we slip into a short break, listen in to what he had to speak about transparency.
ट्रांसपेरेंसी के बारे में ही सेबी सोचता है, हम डिटरमिन नहीं करते वैल्यूएशन क्या है। ये तो आईज ऑफ द बिहोल्डन है, इन्वेस्टर है, ये स्पेस हम मार्केट में ऐसे इंटरवीन नहीं कर सकते जिसमें हम पुराने सिस्टम में कंट्रोलर ऑफ कैपिटल इश्यूज में ये डिटरमिन करने लग जाएं कि शेयर की कितनी प्राइस होगी। शेयर की प्राइस मार्केट तय करेगी डिपेंडिंग अपॉन द अपॉर्चुनिटीज, और उसमें सब कुछ फ्री है। तो हमारा सेबी का जो मेन रोल है कि उसमें डिस्क्लोजर जो है वो रोबस्ट होने चाहिए, और हमने तो फॉन्ट साइज तक तय किया हुआ है कि कितने में आप फॉन्ट में बताएं और कंपैरेटिव्स दें। तो इंफॉर्मेशन एंड डिस्क्लोजर पे हमारा जोर है, बाकी की डिटर्मिनेशन मार्केट है। सी कैपिटल मार्केट हैज टू डिटर्मिन व्हाट्स द प्राइसेस।
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया, आपका काम क्या, आपके तो नाम में प्रॉफिट लगा हुआ भाई।
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something.
Welcome back. You're watching India Market Close, and it's turning out to be an exciting day of trade, not at the benchmark level, but individual stocks. And you have large cap stocks that are moving 5% either one way or the other.
Yeah, and if you see the contributions to Nifty 50, you can actually see the names are pretty much even, Steven, the ones which are contributing versus the ones which are trying to pull the markets lower. So it's very interesting over there. You see a RIL, Asian Paints, M&M and HDFC. Good names which are contributing to the gains. On the losing end, again, ICICI, Hindalco, Grasim, Eternal. Pretty much even Stevens on that front.
Yeah, it's interesting because, and a couple of these stories, right? You talk about the worst performers, the top two losers on the benchmark Nifty 50, and you will see that if you pull up the heat map of the Nifty 50. This is of course the contributors based on weightage, but you will see Grasim as well as Hindalco at the bottom of the list, and on top of the list you have, as Hiral pointed out to you, Reliance Industries, 1.5% gains, not stellar gains to say the
contribution
very least.
is
Contribution is fantastic, but look at Asian Paints. When was the last time you saw a 5% up move for Asian Paints? And it's a very interesting story. We'll bring you that in a bull versus bear, as we normally do on this program, but you'll have to wait just a bit for that.
And I think the question on that one was initially we were talking about a Grasim's loss is a Britannia's gain, but now it seems like Grasim's loss is becoming a Asian Paints gain as well, because strategy, competition, all of that comes at play now.
And it also helps that Berger didn't have the best quarter. Right, so there's a question of, is that dramatic entry of a new player? Is the fight for share? Is that actually
And there was a
playing out?
Nomura upgrade as well on that.
Correct.
And interestingly, Asian Paints has the highest market share in the decorative segment. And the moment we see an urban up move, the biggest beneficiary
Your
would be
festive season
Asian
demand
Paints.
starts playing up.
You know, Astral is one interesting talking point there as well. When you start talking about building materials, and we spoke to the management as well, they were pretty positive about the second half, weren't they?
Yeah, I mean, the management has been positive, and I think you spoke to them
Yes.
as well. So I think that entire gamut is playing out really well today. Whether it continues or not is what we have to see.
Let's find out from Kush Bora, kushbora.com, and Mr. G. Chokalingam as well, joining us from Economics Research. Gentlemen, thanks so much for taking the time as always, and good afternoon to you. Kush, I'll come to you first on some of these very big movers, right? Not every day that you see components of the Nifty 50 moving 5% one way or the other. Would you play any of these names though?
Hey, hi Alex. First, very good afternoon. Hello, Mr. Chokalingam. Asian Paints offers a stellar risk-reward ratio. So let's begin with that, right? So it's not a bad idea if you want to start playing Asian Paints from a medium to a long-term perspective. It's been a very, very long time coming, especially if you've held on to this at higher levels. But yeah, I mean, if you're deploying money afresh, then yes, there are all signs that, the uptick could well continue. You're seeing high delivery markup on the stock for the last few weeks. The momentum also now building up. I still wouldn't play an Asian Paints as a trading bet. But if I am looking at anywhere from 6 to 12 months or slightly longish horizons, yes, for levels of 2,800, 3,000, definitely stop loss around the 2,400 mark, I would consider Asian Paints right now.
Consider Asian Paints right now. Mr. Chokalingam, welcome to the show and a pleasure to speak to you as always. Comment in terms of Asian Paints, Hindalco, Reliance Industries. Would you be buying the ones which are moving or the ones which are actually under pressure today? Where would your bets be?
Basically, I won't see the price momentum to buy and sell. I will go by the fundamentals. So among these three, I would be a buyer of Reliance Industry. Even Asian Paints, from defensive perspective, one can hold or even buy because oil price is still down about 20%, and I think oil price is going to correct a lot. So there could be margin expansion for Asian Paints. Otherwise, I'm not overly bullish on the paint industry. Hindalco, I would stay away. Novels, there's a pressure on its subsidiary. And not only that, the tariff war is certainly going to correct the global growth, and which in turn will impact industrial metals quite significantly in the next 1 year. So I would avoid Hindalco.
Mr. Chokalingam, we were just having a discussion internally. What's the kind of crude price number that you have in mind that you are expecting to see, because you're already in that 60 to 65 kind of a bracket?
Yeah, it is going to correct at least 10% in the next 6 months period. OPEC has again indicated increasing the oil supply. And secondly, very interestingly, according to the global analyst, the oil intensity in global growth is also declining for the last 10 years quite significantly. Third, the renewable space is really getting a big start across the world. And fourth, the economic slowdown definitely would happen in US and China, because these are the two economies which are going to be impacted by the tariff war. US, the cost will increase, imported cost will increase, that will affect. And China would find it maintain the growth momentum in the exports, that would also affect its economy. So the two largest economies are expected to slow down growth. Obviously, oil is highly correlated with these two economies. So because of these 4-5 reasons, I expect minimum 10% correction in the oil, because it has already corrected 20%.
Point well made. Reliance Industries close to the high point of the day, up about 1.4%. But what other stocks are buzzing in trade on account of negative and positive earnings? There are quite a few from the broader markets as well. Puneet joining in with the positive and Jasmeet with the negative. Let's start with Puneet on the positive. Puneet, what are the stocks that are buzzing on account of earnings?
Well, Astral is definitely one of them, and you guys did discuss it a bit. Stellar set of earnings from the company, numbers beating estimates at a time. But there has been some kind of difficulty essentially in showing earnings growth, but it's beaten estimates. It's come at the back of volume growth of over 20% in this particular quarter, and with that has come the margin push of over 16.3% that the company has done. What's also interesting is additional triggers going forward will be, the company has mentioned that anti-dumping duty could come as soon as November 12th, because they are anticipating some form of circular coming from the government, and once that comes in, therein comes in the additional kicker in terms of growth in H2 for the company. Management also reaffirmed double-digit volume growth with piping margins of over 16 to 18%, but it's a key stock to watch on our radar. The second one is Redington, and again a stellar quarter for the company, over 29,000 crores in terms of revenue for Redington. It's also interesting that the CISA region, as they call it, which includes Singapore, India as well as Southeast Asia, has seen a stellar growth of over 22%, while the rest of the world has grown 11% for the company. Apple has reaffirmed its top leadership position in their revenue, almost 31% in terms of the overall revenue, and that continues to be a big benefit for Redington as well. Finally, the Gujarat Pipavav is the third one. Results came in yesterday, a very strong set of numbers for the company. Revenue was up 32%, higher bulk as well as higher volume from the OEM revenue share is what they call it, has done very well in this particular quarter, and the expectation is that Q3 will have similar growth as well. In terms of the net profit, it includes a recovery of 43 crores in terms of insurance. That was an additional kicker in terms of profits, but they've also said that the dry bulk volume was up 124% on a YOY basis and should continue forward. So these are the three earnings tracking on the back of positive commentary as well as seen visibly in the numbers as well.
Yeah, you know what, guys, the saying is that the grass is always greener on the other side. Seemingly, you've decided to wear the opposite colors today. One of them is red and one of them is green. And Jasmeet is talking about the underperformers. He should have been wearing red, but he's wearing green. But anyway, Jasmeet, let's go ahead and talk about the stocks that are losing on account of earnings.
Well, starting off with delivery, we see a good growth in the top line and also the broad-based growth. Brokerages have come forward and upgraded their rating on delivery, but the company has reported a loss of 50 odd crores. Well, this loss comes on the back of integration cost, given the management had reported a profit in the previous quarter, and the loss in this particular quarter has led to the negative sentiments on the street. Well, given the integration cost of the new business to occupy 300 crores roughly by the end of FY26. On the other hand, if you look at the express delivery parcel, they saw a volume growth of 32% on the back of festive season, contributing to top line and the bottom line as well. In terms of the PTL segment, they saw a steady growth given the GST impact was minimum in this particular quarter. In terms of management commentary, they expect a healthy H2 going forward and recovery and cost efficiency in terms impacting the bottom and top line. The second one is Solara Active. While the revenue is down, profit turns negative while the margins contract sharply. Well, this comes on the back of delayed deliveries, and delayed deliveries comes on the back of slow volume, as one of the plants of management was shut as it was under reconstruction, and that led to the impact on the top line, while the costs have remained the same, impacting the bottom line and the margins. If you look at the overall aspect of the management, they continue to focus on high margin segment and cost optimization remains intact. While lastly, I have Medi Assist. While we see the revenue uptake, profits are down sharply, though the EBITDA has grown modestly. The impact on margins are coming on the back of employee costs are nearly up 37%. Being employee cost, the higher expense is something dragging the margins down. In terms of the other aspect of the management, they have adopted.
Just hold on. We have Finance Minister Nirmala Sitharaman who's speaking at the conclave. Let's quickly listen to what she had to say.
Contribution to GDP through various sectors in which MSMEs are present. And also the labor-intensive and traditional strength-carrying textiles and unique for India, underwhelming exploitation which has happened, the area which gives immense potential for employment, and an area which should have been naturally our strength, tourism. So I will look at these broad-based progress in these areas, achieving across these sectors, and here blending traditional sectors, modern technology and innovation-based work. So there is definitely too many variables coming into this calculation for economic Atmanirbharta, but that's the beauty of it, and that's where the Samajik Atmanirbharta, which is also one of the pillars about which I will talk, have a overlap. So in all this, and since it's a gathering of SBI's invited guests, The first thing I would emphasize on is financial inclusion. The more number of people who are brought to the formal financial inclusion process, and the more number of people who are going to benefit in their economic activity through banking extensions, the economy is going to be that much more robust. So for that, we need a robust banking and financial ecosystem. That will be my second emphasis. And the third, above all, which exclusively comes to the state government's domain and the central government's domain, is fiscal prudence. So economic Atmanirbharta will be achieved only when we keep all these factors in our mind. So what efforts have gone? Since I started by saying from 2014 itself, there have been a lot of attempts to do the foundational work for the achievement of Vikasit Bharat. You might have heard these statistics before, but I'm just giving you the nuggets. It tells you where consistency in policy, stability in governance, and pursuing every particular money that is going down to the last post, welfare or infrastructure creating, you are looking at taking the money allocated in the budget to the last point. So infrastructure creation has been our major focus in order that our self-reliance really stands on proper footing. So your economic self-reliance is not going to be realizable without adequate and also proper infrastructure. So look at what has happened in the last decade. The capital expenditure allocation has increased nearly 5 times, where it was closer to 2013-14. It was actually at 2.30 lakh crores. And where is it today? 11.21 lakh crores. So that is the proverbial putting the money where the mouth is. We've actually shown it in the last 10 years. And I closely monitor how much actually gets spent much before my RE numbers are fixed. So it is with that seriousness that allocation is followed till the last post where it has to reach. So national highways therefore grew by 60%, and where it was 11.6 kilometers per day in 2014, it has reached 34 kilometers per day in laying of these national highways. So is the metro rail connectivity. 23 cities in India now have metro. Some of them complete and up and running, a few where the work is still on. So from about 250 kilometers, which was in 2014, today India has 1,000 kilometers of metro lines in operation. So if you look at then port capacity, it doubled to 2,762 MMTPAs. Overall vessel turnaround time, which is very important in terms of trade facilitation, has improved from 93 hours to 49 hours now. So we have undertaken countless path-breaking ease of doing business reforms since 2014. I don't need to remind this August gathering that 1,500 archaic laws have been removed. 45,000 compliances have also been removed. The goods and services tax reforms, new generation GST, is something about which we've spoken severally in the last couple of weeks, essentially focusing on rate reduction, you would think, but I would think rate reduction, yes, but process simplification, classification clarity are also part of this GST next generation reforms. I'm here on the invitation of SBI, so it will be only very proper to say banks have helped in economic Atmanirbharta by aiding financial inclusion and credit creation.
Commentary coming in from Finance Minister Nirmala Sitharaman. But on to our important segment, my colleague Somit Sarkar joins in with all the chatter from the dealing room. Somit, what are you picking up? Which stocks are in focus today?
Sharad, Well, Sharad, if you look at the market, the Nifty might be down just 50, 60 odd points, but the pain is much more when it comes to the broader market. And hence not much of an action is what dealers are indicating on the buying side, at least, or not much of action or not much of a buzz in the dealing room is what dealers have indicated. But few stocks that they have highlighted today, firstly, it's Mankind Pharma and Lupin. What they're indicating is that there's a pair trade that the large HNIs are taking. They are buying Lupin and selling Mankind Pharma. When it comes to RBL Bank, there was a big block deal that happened by M&M. The demand was quite strong, and among buyers' name, in fact, dealers have indicated that anchor buyers were Aditya Birla and HSBC Mutual Fund for RBL Bank block deal that happened today. For PI Industries, dealers have indicated that there are buy flows on institutional desks. Both foreign and domestic institutions have been buying this counter in trade, and that is one of the reasons why the stock is up 2% despite the broader weakness that we are seeing in markets today. When it comes to Petrod LNG, there are sell flows on large HNI desk is what dealers have indicated in trade today, and this is on the back of expectations of weak Q2 numbers. And when you look at Godrej Properties, there are buy flows seen at lower levels. After the second quarter numbers, if you look at the stock is down in trade, but what dealers are indicating that there is some accumulation that they are seeing because they're expecting the commentary to be quite strong that could come in from Godrej Properties. And lastly, Manappuram Finance was part of a segment on November 4th where we did indicate that there are buy flows on institutional desks and dealers are expecting a rebound. And despite today's weakness in the market, Manappuram Finance is up 3.5% in trade.
Very much, Somit, for that. Manappuram Finance, of course, Khabar has been confirmed as well. But let's look into the earnings, which were earlier Puneet and Jasmeet were discussing, especially Astral. That stock has done well on the earnings front as well. Kush, I needed your views on the technical aspect of Astral as well. The medium-term charts, are they suggesting us another up move coming in? And if somebody is already holding the stock positionally, should the person hold the stock more for an up move?
Oh yeah, you could absolutely continue holding on to this one. The stock was consolidating with a positive bias for the last month and a half. And there was a positive bias on the stock. Today you've got a breakout on the back of very strong volumes. Mild resistances around the 1590, 1600 mark. That was the previous swing high in the mid of June. But I think once that is taken out, the stock could see further upside. So risk reward ratio favorable, positive bias turned into a breakout, momentum building up, volumes also on the higher side. I think you should well continue to hold if you have Astral. On the downside, I would suggest a positional stop near the 1480 mark.
Okay, 1480 is the level that you should be tracking pretty closely for an Astral. In fact, Mr. Chokalingam, any view that you have when it comes to Astral or any of the building material side of the business as well? And to add to that, I want your view on Reddington and Gujarat Pipavav ports, because interesting moves on both these counters on the downside today.
Reddington I am not tracking in the recent time, but Gujarat Pipavav, I looked at it. It looks very good, no doubt. One can buy because port business is going to be a perennially growth story in India. As far as Astral is concerned, yes, it's a great company. A lot of impressive growth stories in the recent past. Even now, profit has continued to grow at 15%. But the only concern is that the trading P is around 80 when the profit growth is around 15%. So I'm not that comfortable in giving a PEG ratio of 5 times to the stock. So therefore, I would suggest only the risk-taking investors may continue to hold the stock.
So that's with Astral as well. In fact, I'll just correct myself. I meant the stocks which are on an upside from here on. A quick question when it comes to stocks which are losing out, which actually, Jasmeet took us through. Deliveries trading under pressure. Solara Active seeing major pressure. Medi Assist as well. The profits are down sharply for this company. To add to that, Home First Finance is down and Greaves Cotton. All of these counters seeing cuts in that range of almost 5 to 10-15%. I think we don't have Mr. Chokalingam, but Kush, what are your views on any of these names which are trading under pressure? Are you seeing a reversal coming on any of these names, or the momentum is on the downside?
For sure, the momentum is on the downside, not just today's moves. And if you look at a Home Finance, Home First and Greaves Cotton, the downtrend did start a couple of sessions ago. I'm more keen on the likes of Delivery and Medi Assist for two separate reasons. One is the support zone that Delivery has around the 440 mark. That seems to have been tested today, but the stocks held on to that. So give it one more day, see if it indeed holds above that 440 mark, then it could go sideways and provide an opportunity for accumulation. MEDIAS is fairly similar reason, but it's the 200-day moving average support that kicks in, and also buying support at the 505 mark. So both these stocks could still be kept on the radar. I wouldn't suggest a buy immediately, but in a day or two, if these support levels are held, then the stock could perhaps consolidate and start to move up gradually as they were before the fall came in.
Kush, very quick one on IGI. The stock is at the day's highest levels. Would you still be a buyer?
Oh yeah. The momentum, indicators, despite the kind of up move, haven't really gone into overheated territories. This is a good, smart breakout. I would suggest, a hold. But yes, if you do want to buy, then you could consider with a tight stop loss at the 359 mark. And on the upside, the stock has the potential in this momentum to test 374 and 382 as well. So yes, good momentum building up, far from overheated territories. Could still have further upsides to 382 levels.
Further upside can be a potential. But thank you, Kush, so much for joining us on the show. Always a pleasure to speak to you as well. We'll quickly slip into a short break. On the other side, we'll get to a bull versus bear, where Asian Paints is in focus because it's an interesting counter. A lot of external factors which are probably working in its favor as well. Please stay tuned.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much, you're starting golf. We want to thank
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Mr. Piyush Goyal's visit to New Zealand. Right now he's in Roswell.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience.
Welcome back. You're watching India Market Open. Joining us on this side of the break is Amit Goyal, partner and co-founder of Blue Oak Wealth, as well as Dharmesh Kant of Chola Securities. Gentlemen, thanks so much for taking the time. I will come to you in just a bit, but I want you to pay very close attention to this next piece that my colleague Mahima Vachajani has in store for you and our viewers, which is a bull versus bear case on Asian Paints. And the tagline, of course, is "Har ghar kuch kehta hai." But you know the deal with homes in very dense neighborhoods. There's a lot of rumors, there's a lot of speculation, and sometimes when it comes to corporate India, the changes that are taking place in the corner office has a bearing in your neighbor's company as well. So let's talk about what is at stake here for Asian Paints. Mahima, on the one hand, you have changes in the corner office. On the other hand, you have competitors that are not necessarily doing particularly well.
Yeah.
What's the bull versus bear case?
Absolutely. I think the first bull versus bear, Alex has already mentioned, and that's a nice analysis. In fact, what he's just pointed out. But I think largely the kind of moves that we've seen on the counter today is on account of the upgrade that is coming from Nomura and the kind of commentary that they've given in terms of competition, saying that the competition has not hit the way the markets were expected to hit big players like Asian Paints as well as Berger Paints, and also upgraded the counter. To take a look, they've said that fears of disruption didn't play out the way the street was expecting it to be. And that's one of the reasons as to why, overall, if we take a look at the kind of market share loss also that Asian Paints has seen in the past 3 to 4 odd quarter has not been as much. But on the other side, management has still gone ahead and said that competition is intensifying. This is something that they said in the last con call. This con call, we'll have to wait and watch out for how the commentary fares in terms of where competition stands. Moving on. In terms of, the overall volume recovery that has taken place for Asian Paints in Q1 was quite significant after 3 quarters of a negative volume, or in fact a volume degrowth. They saw a volume uptick of around 3% odd. That was a positive note. This quarter we'll have to see as to how further volume recovers. But on the other side, the net profit was down by around 6% odd at that 1100 odd crores. So this quarter will be interesting to watch out for the kind of trajectory in terms of profit growth as well. Moving on to the segment-wise performance, I think what drove the kind of overall performance was the double-digit growth in auto and in general industrial segment. Home decorative category did see a degrowth and still continues to be under pressure. Now, the brokerage cost that I was talking about, Nomura has gone ahead and said that from here, competition is gradually easing and they're expecting Asian Paints to revert to early to mid-teens of EPS growth going forward. But on the other side, Morgan Stanley, which is the most bearish on Asian Paints, has said that it believes that the competition is here to sustain. So two starking views from different brokerages here. Of course, this is a slightly older note as well. We have to see if Morgan Stanley has also kind of changes its view on Asian Paints or not. But in terms of where the target prices stands for both of these counters, Nomura has upgraded it to buy from a hold and has given a target price of 3,100, which kind of pencils in a growth of around 21% from here on. And for Morgan Stanley, it has given an underweight rating with the least target price amongst all the brokerages at 1909. So this is the overall view of how the bull versus bear case stacks up for Asian Paints. Of course, as Alex was mentioning, a slight sentimental move also coming in because of Grasim CEO resigning, and probably could be slightly beneficial for where Asian Paints stands.
Okay, all right. Thanks so much for that. Dharmesh, so what do you make of this? First to you, on the fundamentals, Asian Paints, a lot of people had patience with this particular counter to their detriment. They waited for years for it to give them something and they have not been rewarded. But at this moment, do you think that it's a good opportunity to get in?
Yeah, good afternoon, Alex. I don't think so, because I think still lots to go, and whether it's comma or semicolon for the competition, time will tell. But the competition is here to stay, and I heard the management of Asian Paints in one of the channels. He was saying that volume growth will be high, value growth will be low. So that statement itself justifies the fact that competition is not allowing you to have the pricing power in place. At the same time, what you are paying for, you are paying 60, 70 times or 50 times multiple on all of these paint companies for a growth where we are talking about mid-teens. That's the best case scenario. Otherwise, if you look at last 10 years trajectory, the CAGR has been 10-11% for Asian Paints only. They were the leaders. That time the competition was low, so this entire story played out. But now it's a commodity, it's a product company. I don't think so. You're going to have a wealth creation kind of a journey, which it did have, a couple of years back for 10 years. But it's, from here on, the valuation and earnings catch up will play out. You can have a pop-up of 5-10%, that can still be there. But to my mind, it's just a pop-up play. If you want to play it for pop-up, not for a trending buy.
Play for a pop-up. Stay with us. In fact, Amit, I'll come to you, but before that, let's just quickly look at the markets. 25,500 is broken on the downside right now, so markets are near the day's lowest levels, or I would say at the day's lowest levels, cuts of 0.4% coming in there. Let's just quickly pull up Bank Nifty. Let's see the private and the PSU banking space, and in terms of individual sectors as well. You still have the likes of a Grasim, which continue to be the top loser, followed by a Hindalco. You have Adani Enterprises, Power Grid, Eternal, Aisha, BEL. These are the ones which are pulling lower. But Asian Paints, Reliance Industries, M&M, these three counters along with the Interglobe Aviation are holding on to today's gains as well. If we can just have the contributor plate, and then we look at the sectoral heat map to see which are the sectors which are actually putting pressure. Look at that. ICICI, Grasim, Hindalco. I think the gains that were coming in from Reliance Industries, Asian Paints, M&M and TCS, they have somewhere remained stable, but the cuts in terms of the other names like ICICI, Grasim, Hindalco, Eternal and the others are the ones which have deepened further, and that's the reason why you're seeing that 173 contribution coming in on Nifty 50. Now it's only IT which is the top losing sector gainer today. Auto was one of the gaining sectors along with IT. That has also turned slightly into the negative, but it's on the borderline. The key over here is the pressure that has continued. Now closure in terms of today's session probably will be pretty on the downside. So 25,500, but it's again trying to make that mark slightly upwards.
Yeah, absolutely. Why don't we get Amit Goel into this conversation? Amit, at the benchmark level then, because Sensex expiry, some adjustments likely on account of that as well, and we're at the low point of the day. How would you trade this right now?
Hi, good afternoon, Alex, and thanks for having me here. See, Nifty, if I look at the derivatives data and the price action data, they kind of give me little contrasting views, because from a derivative standpoint, 26,000 and 25,000 happen to be a broader range on Nifty. Generally, we move in a 500-point range. However, this time around, there is a broader breadth of the range of about 1,000 points. And if you look at the trend, while the secular trend remains up, and we are at a pivotal point of 25,448, which was the previous pivot from where market did give a nice breakout. So I'm expecting an arrest in the current down move around the current levels, and hoping for a reversal from here from Nifty's standpoint. However, the recent trend is down, is weak, and any fresh longs should be with when you see evidence of a reversal on the broad benchmark.
You know what's interesting today though, Sharad and Hiral, is that in the recent past when you've seen declines, you've seen the broader markets keep pace with the benchmark. But today the selling, the selling at the broader end of the spectrum is significantly more. Take a look at the mid-cap index, is down 1% or so. The Nifty Next 50, which is something that is also in the large cap space, is down 1.3%. And the small cap index is currently down about 1.5% at the low point of the day. Let's also pull up the market breadth, because that will likely give you the picture and will likely be at the widest point. There you go. It's borne out. So it's been wide through the session, but we're at the widest point at this moment.
And to add to this, let's just pull up a 5-day chart of Nifty 50 and a 5-day chart of Bank Nifty, or even on 1 month. And that will tell you the story of what's actually happened. There you go. I mean, you know, in between there was bouts of buying that was coming in, and that has now created that pressure right now in terms of selling. So there is some bit of profit booking that is coming in. A couple of points which are still hurting is the US-India trade deal. Now, the delay that is happening on that front is really keeping investors pretty jittery. So what's happening is the moment markets move up, at higher levels, they are looking at selling. And the moment you see a down point, that's when that little buying comes in. So it's an absolute seesaw ride that's happening between markets right now.
And even the FI selling for 5 straight sessions in cash markets, nothing moving much in the shorts, and an exclusive dollar index at 100. That's also a reason why we are seeing, you know, emerging markets not being so attractive, especially for India.
And I think that's going to be an interesting piece that we need to do in terms of the dollar at 100.
Yes. We're at levels on the benchmark that we last saw on the 16th, not 16th, maybe 16th of October. 16th is in fact the number. But you know, one of the constituents of the benchmark, guys, that has dropped quite considerably, and it struck me because I've seen it lose more often than not over the last few sessions, is Eternal. And let's pull up the chart if we can. It's now down about 2.3% or thereabouts. But if you pull up the 1 month chart approximately, you will see what I'm talking about. Because from the high point, which incidentally was on the 15th or the 16th of October, it's down about 13-14%. The question to you, Amit, is where does that stop? Is this presenting an opportunity to get in around those 300 levels, or would you wait for further downside?
So on Eternal, the actual fall has been about 16.5-17%, and the near-term support that I see on this chart, though I was a little bullish on this chart a little while ago, but it has broken through my support levels and is now trending down. So any fresh longs in Eternal should be around the 290-300 levels and not before that, because that is where the technical support stands. And only at signs of reversals should we look at taking fresh longs around 280-290 levels, not before that.
Interesting. It must be said, though, that the drop from the middle of October was from very close to the all-time highs for Eternal. And you cannot argue that the stock is not richly valued. In fact, let's compare the move over the last 1 month between Swiggy and Eternal if we can, while we go to Dharmesh Kant on his opinion on whether or not, and both have moved more or less in tandem. There you go, it's quite interesting. So would you buy into one or the other at these drops? These are the opportunities that people look for, don't they, Dharmesh?
Yeah, unfortunately, yes, but I won't be buying in either of them. See, Alex, what happens normally with this new age concept theory is, as long as you know your revenue is building up and you don't have a profitability, people are willing to give it a price based on sales 10 times, 20 times, 30 times, based on the sales trajectory growth. Once you start delivering the profit, maybe 6 quarters, 7 quarters down the line, then the realization, downsing, what's the actual and the realistic run rate of profitability growth would be. And then you have this valuation, creeping in. It was a classical play with DMart a few years back. So same thing happened, and since 21, the stocks are down 20-25% from their top, and still it has not taken out. I think Eternal is now walking into that zone after giving profit for say 3-4 quarters, and the best margin which you can do in this kind of a segment, which Amazon does in US, is 4 to 5%, and then you have the math time. So to my mind, there can be trading up and down plays, but Eternal more or less is done with his upside trajectory.
Okay. Fair point. Let's talk about Life Insurance Corporation of India. And they're going to release the numbers later today. It's one to watch, right? Because you have the implications of GST 2.0 to factor in. You have various other things that you're looking at. But Vansh joining in to talk about what the key numbers are. Vansh, take it away. What would you be looking forward to?
Well, thank you for that, Alex. As you rightly mentioned, numbers are due post-market today. If we look at some of the key expectations from the numbers, if we look at the annual premium equivalent, that is the reflection of the top line growth. It is expected to fall by 1% at 16,300 odd crores versus 16,465 crores. If we look at the VNB, that is the value of new business. Now, this is a reflection of the profitability of the company. This is expected to fall by 2.5% at 2,800 odd crores versus 2,941 odd crores. And also, if we look at the VNB margin, that reflects the profit margin for the insurance companies, it is expected to fall 26 basis points at 17.6% versus 17.86%. And lastly, if we look at the net profit, it is expected to rise by 4.8% at 8,100 odd crores. If we talk about some of the key factors to watch out for, the annual premium equivalent contribution from the non-par segment and the management commentary on the VNB margins will be some of the key important factors to watch out for.
That's with regards to where LIC goes. Amit, any trade when it comes to LIC or even for that matter, Cummins and ABB, because all the three will be reporting numbers post-market hours. Ahead of that, any momentum play?
No, I don't see any momentum in LIC. In fact, it has been after that initial pop in the end of May, it has been lackluster and given up all the gains and has been sideways. So LIC, I do not really see any pop happening there. Which were the other ones you said? ABB.
ABB and Cummins.
Okay. I do have a view on Reliance and Maruti if that interests you. But in the meantime, I'm pulling up the chart of ABB.
No, we've already spoken about Reliance Industries, but ABB and Cummins would help.
Yeah, I'm trying to pull my chart up.
In the meanwhile, let me go to Sharad, who is here to tell you about the significance of the dollar index moving back above 100 for the first time in nearly 6 months. This is actually an interesting point because you've seen trends of de-dollarization, you've seen various other factors that have led to the weakness in the dollar, but it's actually been moving the other way in the recent past. Could there be more pain for emerging markets because a stronger dollar would lead to flows towards the US? Sharad joining in. Sharad, what are the key data points that you're looking at?
Well, it's very interesting, Alex, and over the last 4 to 5 odd months, we as anchors actually forgot this entire, you could say, this index. Earlier we used to track about it a lot, but there was a de-dollarization and change in how Indian rupee was functioning against the dollar. But now let's just bring back the definition back and why it's important. The index has reclaimed the 100 mark almost 6 months, and this is the first time it has touched the 100 level marks since June 20th. Now let's just decode it simply. Like, this is a tool to access the strength of a dollar with other major currencies. But what is actually dollar index? What it is comprising of? We did some analysis, and overall look at the currency weightage where it stands. 58% is skewed towards euro. Yen, pound, they are there in the mid-teens, you could say 12 to 14 odd %, followed by Canadian dollar, Swedish krona and Swiss franc. This looks theoretical, but it's very important because this helps a lot of fund managers, especially in the emerging markets, to track where the flows go with the currencies as well. Now, why this is important, let's just put that portion out as well. When this index touches the above 100 levels mark, that means dollar has started to strengthen. This goes by the definition. What's the impact on the emerging markets? That's what me and Hiral had discussed earlier. This could trigger the outflow from the emerging markets, and when we speak about emerging markets, India also stands here. But already we are seeing the FIs in the cash market for India. We have taken the numbers in rupees crore. They have not been very strong for India, which has been a significant sell-off in September, August and July. August there was recoveries happening, but still it ended in the close, and November is just the start of it. For the last 5 trading sessions, we have seen sell-off continuing in the FI cash market segment. But now let's look at how the dollar return has been there. If you compare it to the major currencies, and you see Russian ruble, that's up 40% dollar returns. Brazil real, that's 14%. China's renminbi in the positive 2%. But look at Indian rupee, that is still in the negative 3.5% downtick seen when it comes to the dollar moves as well. So this is the entire picture for the dollar index. And of course, Dharmesh, I would also like to, ask you this. Okay, Dharmesh is not there with us. Amit, your technical chart as an analysis, dollar index at 100, we used to talk a lot earlier on this segment, but now is it back? And if yes, how important is it to look at it, and what's the viability for this indicator as a technical chartist? If you could just help us out with that.
Sure. Dollar above 100 would be a red flag for all of us. We are, though it had, as you rightly pointed out, that corrected and has been falling and has also tested the lows of about 96. Right now, close to 100. So what I'm looking at on a technical chart is that it is close to the flip zone of a prior support, now turned into a resistance. So I hope it does not, gather further strength, which will be detrimental for the emerging markets. So I do see that there is some bit of resistance at around 100 levels, and it remains to be seen in the next few trading sessions how this will play out. If there is a breakout over here, and that could, exacerbate the downward momentum in our markets. But if it corrects from here, that would be some good news for our ears.
Yeah, if it corrects, of course, if it moves the other way. But it is nearly closing time, and the question therefore arises, Amit, do you have any buy today, sell tomorrow calls, or the other way, sell today, buy tomorrow?
Yeah, I generally do not like to give sell calls, so I'll refrain from doing that. Already the market has fallen a lot, and most of our retail traders do make money when the markets go up. I'm trying to give a technical reversal call here on Maruti. If you look at the Maruti chart, while it has been correcting and it has corrected since the highs by about 8%, the kind of price action that I'm seeing is a little healthy today, with a technical bullish hammer sort of a formation at the support levels. And if you look at the RSI also around 35, seems to give me some bit of hope that there is some strength, there is some reversal, there's some buying happening here. The volumes are also supportive on this front. So I would want to bet on Maruti with a strict stop loss if it breaks today's low of 15,200 for eventual targets of about 16,000. So if this reversal picks up, one can convert the BTST into a longer or a sort of a swing trade and hold for targets of about 16,000.
Okay, so that's with regards to Maruti Suzuki. Amit, any view when it comes to CCL products? A strong set of numbers that have reported, the stock on a tear right now. Ola is another one. The commentary from the management is absolutely interesting that's coming in there, but the numbers are pretty weak. The stock down nearly 5%. Two divergent candidates right now. What would you do?
So CCL, the kind of sector, the kind of market cap this stock is, and the kind of lackluster returns it has given in the last few months, and this sudden pop on account of results, I'll take it with a pinch of salt. I will not want to join the rally right now because, as you see on the charts also, there has been a lot of profit booking from 1,000 levels, and it is now down by about 30 points from there. Even technically, it is overheated territory. So, I will want to see continued strength in this and probably look to enter only if it crosses 1,000 levels and sustains this momentum. On the other hand, Ola, I mean, this is the management commentary has always been very interesting, right? However, the stock does not perform as per the commentary, and it has faltered to deceive again. From the highs of 70, it is now back to 47 and sub 50 levels. This is a stock one would avoid. Probably it's a good buy around the lows of, the prior lows of about 40 levels for maybe a reversal play. But right now it is really in the middle of nowhere. I would not be trading this stock. It's something that I would avoid for the time being.
Well, pretty interesting view coming in for Ola Electric from Amit. Thank you very much, Amit, for taking out your time and giving your views at NDTV Profit. But let's move on to the closing. We saw significant selling coming across the counters, and today, of course, Sensex expiry also, and not so much fall as compared to Nifty, and that's the reason because of the volatility in the counter. But for a certain moment, it fell below the 25,500 mark, but now it has slightly gone up, so that'll be very important, the closing levels to look at. But now let's look at the heat map for the Nifty index, how it's actually panning out. Largely Asian Paints and Reliance and M&M holding top gains here, but the sea of red over here, especially Eternal Power Grid, Hindalco and Grasim. These are the stocks which we are seeing massive selling happening, and Hindalco is expected to close near this day's lows as well. Let's pull up the sectoral heat map as well as how things are actually panning out. There's nothing much happening. It's a sea of red here, especially defense and metal counters, but the IT, that's the only green sector in the pack which you'll be watching out for. Broader indices, let's pull out the advanced decline ratio. Not much support coming in between the broader indices. If you could just show the advances decline ratio, that's clearly going in the favor of bears, and you see now the ratio stands almost 1:4. Let's pull up the BSE contribution chart to understand where the action is happening in the broader indices. Largely earnings based move coming in Reddington, CCL Products, and even Astral and Gujarat Pipavav, while Asian Paints remains its leadership status. Delivery, AB Fashion, Blue Star, Sterlite and Sheela Foam also reacting on largely earnings. But if you look at the day today, there has been a big sell-off happening in the day, and no major attempt of recovery was made as the broader indices have started bleeding. But now let's look at what's there for tomorrow. What's the preparations like for tomorrow, and the earnings season still continues. Eye on the globe, monetary policies would be there, something which we'll be watching out for. Jobless claims, US, that is something the reactions would happen, especially with Fed having a hawkish tone. IPO opening of Spine Labs, the fintech company, that's where the primary market action would be going ahead. And earnings post-market, you see the larger names coming in, especially the capital goods players, Cummins India, ABB India, earlier L&T came out with their numbers as well. So certain pharma counters and LIC and Apollo Hospitals also make it to the list. So we can see important earnings are there, and Bajaj Auto, Divis Labs, Hindalco, Power Finance, even Trent. So these earnings are also there, which we will be tracking them. So that's it for the India market close, but do stay tuned. We have got a very interesting show of Market Express by Himangshi, and that's it for this show. Stay tuned to NDTV Profit.
Mr. Piyush Goyal's visit to New Zealand. Right now he's in Rotorua.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show and let's see how the markets have fared today. So it was a terrible day on Dalal Street to say the least. The Nifty briefly slipped below 25,500, at the end, and the Sensex also shed over 100 points. Advanced decline ratio was also tilted in the favor of declines. Now, if we talk about the sectors, so that have ended the session in red, with IT and auto remaining resilient. Other than these pockets of resilience, media, metal and defense were the top laggards, down anywhere between 2 to 2.5%. The Board of State Bank of India has officially given the green light for the initial public offering of its highly profitable asset management arm, SBI Funds Management. So this move is expected to be one of the largest IPOs in the financial sector, capitalizing on the booming Indian mutual fund industry. Analysts are already pegging the valuation of SBI Funds Management at a staggering 1.2 lakh crore rupees. So that's a significant number in the current market. Now let's have a look at the key earnings today. So Astral's Q2 results were driven by strong underlying business momentum, particularly in its core segments. So plumbing sales volumes has soared over 20% year on year, driving double-digit revenue growth. Crucially, the company has demonstrated operational resilience by successfully maintaining its margins, holding them steady at approximately 16.3% despite significant volatility in the PVC raw material prices throughout the quarter. So looking ahead, management has reaffirmed its double-digit volume growth guidance for the full year. Investors will be closely watching a key regulatory trigger, the potential implementation of the anti-dumping duty on the PVC imports, which is expected to further stabilize the raw material costs and also provide a considerable boost to the domestic players like Astral. Next up, we have Gujarat Pipavav Port, or GPPL. So shares have surged more than 5% following a robust set of second quarter earnings. So the company has posted a 32% year-on-year jump in the total revenue, and this is driven aggressively by the expansion in the cargo handling. So the standout metric here is the dry bulk segment, which saw volume spike by a massive 124% compared to last year. So growth was further supported by higher throughput from bulk cargo and also increased volumes from the original equipment manufacturers or the OEMs. And while the operating performance was strong, what you should also keep in mind is that the net profit figure includes a one-time gain, which is an insurance recovery of 43 crore rupees. So overall, the quarter underscores, the port operators increasing utilization and also its ability to capture higher cargo traffic across the key segments. Next up, we have Redington, which has also reported its highest ever quarterly revenue, clocking in at 29,118 crore rupees for the second quarter, and this is representing a 17% year-on-year growth. So this record performance was fueled by disproportionate growth in the key, CISA region covering Singapore, India and South Asia. So where revenue has jumped by 22%, significantly outpacing the 11% growth seen in the rest of the world. This success actually means that the CISA segment now accounts for a commanding 66% of the company's half-year EBITDA share. So a crucial growth driver remains the Apple portfolio, which has increased its share of Redington's revenue to 31%, which is up from 29% year-on-year in the first half of the fiscal year. So the strategic focus on high growth geographies and premium partnership continues to drive the company's strong financial momentum. Next up, we have Manganese Ore, India, and it has achieved an impressive set of production milestones, reinforcing its position as the country's largest manganese ore producer. So the company has posted its best ever October production since its inception, with manganese ore output surging by 9.1% year-on-year. So this upward trend is sustained, with production for the April to October period also up by a strong 8.5% compared to last year. Crucially, MOIL is not just focused on the current output, it is aggressively investing in its future. The company also registered its highest ever exploratory core drilling, reaching 57,275 meters during the first 7 months of the fiscal year. Turning now to the hospitality sector, where Indian Hotels Company, that is the IHCL, has reported robust growth for its second quarter. The company has seen its consolidated net profit soar by a significant 48.6%, which is nearly 49% year over year, hitting 285 crore rupees. So this was supported by an 11.8% rise in the revenue to 2,041 crore rupees. EBITDA has also showed strength, growing by 13.7% to 570 crore rupees, leading to a marginal but positive expansion in the margins to 27.9%. However, the core hotel segment has reported a more muted 7% growth. So revenue per available room, or RevPAR, contracted slightly, which the management has attributed to lower average room rates during this period. So the international portfolio also posted a mixed performance. Looking ahead, management has guided for a strong quarter, noting solid demand visibility for November and also the overall third quarter, indicating continued optimism for the peak travel season. Jubilant Pharmova is facing scrutiny today following a regulatory disclosure concerning its international manufacturing operations. So the US Food and Drug Administration, that is the US FDA, has concluded its audit of the company's Jubilant Hollister Tier General Partnership Contract Manufacturing Facility in Montreal, Canada. So the audit, which concluded on November 3, resulted in the FDA issuing 9 observations on Form 483. Now, while the company has yet to provide some specific details on the nature of the findings, a count of 9 observations is generally viewed as significant by the market, indicating potential deficiencies in adherence to good manufacturing practices. So, Montreal facility is a crucial unit, particularly within the company's sterile injectables and also contract manufacturing portfolio, serving the regulated, US market. Next up, we have Tata Consultancy, which has expanded its 18-year partnership with global electrification and automation leader ABB. Now, this new multi-year collaboration is centered on modernizing ABB's digital infrastructure worldwide, with a strong focus on leveraging artificial intelligence. Crucially, TCS will operationalize ABB's new future hosting model, a next-generation modular IT infrastructure. So this model is designed to streamline systems and also introduce an AI-powered zero OPS framework. So this means that more predictive operations, faster service of restoration, and also continuous security assurance. So all with minimal human intervention. Turning now to the FMCG sector, where Britannia Industries has posted strong Q2 results, significantly beating the analyst estimates on the bottom line. So the company's net profit has jumped an impressive 23.1% year-on-year to 654 crore rupees. So this robust profitability was driven by exceptional operational gains, with EBITDA rising 21.8%, which is nearly 22%. So this performance has expanded the operating margin to 19.7%, which is up substantially from 16.8% last year. And this marks a 5-quarter high for gross margins at 40.6%. So the top line showed steady, disciplined growth, with revenue rising 3.7% despite the residual impact of the GST implementation. Now, in corporate news, the company also, made a significant announcement appointing Rakshit Hargave, who's an industry veteran with experience at companies like HUL and Nestle, to a key leadership position as well. Now, we have Engineers India in focus after the company is set to deepen its global footprint with fresh orders and also strong momentum from the international markets. Ahead of its Q2 results next week, we spoke to Vartika Shukla, Chairman and Managing Director at Engineers India, on growing overseas order book and also expansion outlook. Let's have a look.
Especially with the Indian businesses coming globally, now the first question remains is for the industry as well. How are the inquiries coming in? Of course, we know that the Middle East is looking at renewable, non-renewable and the entire ecosystem as well. But what is the channel checks, what the ground is suggesting?
So we are very upbeat in Engineers India Limited, and we are part of the ADIPEC, which is an annual event held here to showcase both the technologies, the potential of the conventional oil and gas sector, as well as technologies for a sustainable tomorrow. So we see a lot of traction here in looking at existing assets, looking for modernizing those, as well as new investments happening all across the value chain of hydrocarbons. We, as Engineers India, have an office here in Abu Dhabi. We work very closely with ADNOC and other stakeholders around the region, providing our engineering services. So it's a bright spot for us in terms of the potential it holds, and we have a sizable business and a sizable volume which we've grown over the last few years in this region.
That's pretty interesting, Vartika ma'am. First question is, of course, the international business. Now, how much of that, international business in terms of revenue is coming? If you break down the total revenue pie chart, and interestingly, for these international businesses, the company has gone there. Of course, we are expecting some good major oil and gas order announcements as well. So I would need your views on both of these questions.
Sure. So if you see our revenue for the last financial year, we did about 10% of our revenue from international operations, which is, and in absolute terms, it was the highest ever, sitting at about 371 crores. This year, if we look at the order inflow, which is about close to 4,000 crores in the first half of the year, in comparison to 8,200 for the last complete financial year, the inflow of this year's order is almost 40% from international operations. So we believe, and we have worked relentlessly towards growing the pillar of geographical outreach as one of our strategies for growth in the conventional space as well as other spaces. And these numbers actually showcase that we've done very well on positioning ourselves not just here, but in other geographies all over the globe.
Well, that's pretty interesting. Are we looking at any major announcements coming with Engineers India and ADNOC going ahead? Because I think there is already an existing relationship.
Yes. So we are here for about 30 years, but the last few years have been significant, very exciting, and very upbeat. We have positioned ourselves in a very, strong manner in terms of offering our services. More so, last year we were upgraded to Tier 1 consultants, which is the top consultants on a global footprint. And we are in receipt, and we are already working on some projects in that, enhanced category of offering services. There are a lot of action happening in terms of engagements for other businesses as well. And as and when they come, we will definitely share with you.
That's pretty interesting. And what's the outlook for the domestic business overall? How's the client confidence looking like? Because India itself is going through a change in the oil and gas infra space as well, because of modernization kicking in. So what is the outlook looking like for the domestic business?
So insofar as Engineers India goes for the domestic sector, we are very well poised. We are looking at the petrochemical expansions for most of our clients. And we see that refinery and petrochemicals are going to integrate more and more as we go, because standalone, with the limitations of products and, several other factors, it becomes challenging to make such investments. So we are there in 2 propane dehydrogenation plants, which are coming up for the first time in the country. We are there in mega complexes for BPCL, for Indian Oil, for HRRL, looking at refinery and petrochemical integration. Some of the new technologies are getting commissioned. One was biofuels, one is residue upgradation. These are all very first kind of plants which have come up in India. So for Engineers India, on the domestic front, we are very excited, and we are very much in the thick of all investments. As we see going forward, the momentum of growth in the country is bound to happen. We see upward of 7% GDP growth. In petrochemical space, something like a 10% growth is definitely going to be there to meet the needs and the aspirations of our country. And we do see a lot of investments happening in the conventional space. But the notable thing about our organization in the last few years is we have not just looked at the refinery and petrochemicals. We have also looked at fertilizers. We've also looked in the space of chemicals. And we've also looked in the space of infrastructure. And today, we have the inflow of order from the conventional hydrocarbon space in this financial year, close to about 36%, while we have about 40% order inflow from infrastructure and about 15% from the fertilizer sector. So we've very well diversified our orders such that we are very well poised, and we are very much in the growth spurt that we are going to see in the near future.
Mr. Piyush Goyal's visit to New Zealand. Right now he's in Rotorua.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
Hello and a very warm welcome. Polling in Bihar has begun, and the question in minds, not just in this crucial battleground state which loves its politics like very few states do, but also across the country, is who is likely to win on the 14th of November, and what are the critical issues that are playing themselves out on the ground here. To get a sense, we're at the Belghati village in Purnia, and I'm joined by 5 leading experts who've spent the last several days traveling the length and breadth of this state. I want to introduce first Dr. Surjit Bhalla, one of India's leading economists, member of the Prime Minister's Economic Advisory Council, has been at the International Monetary Fund. He's been traveling, looking at it from a political and economic lens.
Welcome. Thank you, sir. We have Amitabh Tiwari. Amitabh Tiwari is a former investment banker, comes from the state of Bihar, loves his politics, given up his suit, put on a kurta pajama. Welcome, Amitabh. We have Sanjeev Srivastava, one of India's most renowned political journalists, has traveled the length and breadth of this country, covering elections over 4 decades. We have Ajit Jha, who's a consulting editor at NDTV, comes from the state of Bihar and therefore is not just looking at it from a research perspective, but also very, very passionate about what's happening in his home state. And since immigration and migration are such critical issues in this election, I have Dr. Neeraj Kaushal. She is a leading expert at the Columbia Population Center on migration, population and immigration, which really has been at the core of this election. I want to start by asking Dr. Bhalla about, this 10,000 rupee Jivika scheme that the Nitish Kumar government came up with in the run-up to this election. We were speaking to women in Purnia and elsewhere, and they're obviously very happy with the fact that they've got this money. Do you believe that this could potentially be a game changer, and is this the right way to do it? Give a grant of 10,000 rupee in the hope that you'll get their votes?
Well, first, could this be a game changer? No. Second, is this the right way to buy votes? No. Third, this has been the practice forever. So they have formalized the cash transfer, which is in many ways a more efficient system than of giving saris or computers or whatever you have. So in kind is not. But I think, we have to we as Indians and the government, etc., has to come to some kind of resolution, broad thinking on, this whole business of freebies has really gone too far, in my opinion. It's not the most efficient way to help the poor or to bring about development or even to bring about a change in your vote share. Now, I will conclude with that look, I don't think, and that was my first response, that this 10,000 is going to affect the vote. In other words, I think whatever would have been in its absence will happen now. And perhaps we can discuss.
You don't think it's a game changer? Because Amitabh Tiwari, we spoke to a lot of women who are sowing seeds for the winter crop in a farm in Purnia, and they were mighty chuffed with the fact that they'd got this 10,000 rupee. Some had bought sewing machines, some had bought some goats. They were very happy. And I asked them, will this impact your decision to vote? And they said, yes, we are being taken good care of. Women, Nari Shakti, seems to be at the core of the appeal of Chief Minister Nitish Kumar.
Yeah, essentially because when we ask that vote vibe, if you get the money, will you switch your vote from others or a Jan Suraj or a Mahagathbandhan to India, to NDA? 5.8% of voters said yes.
That's it.
So 6% is a big swing in an election when the margins were only 12,000 votes between the two alliances. And this 10,000 rupees is a series of steps which Nitish Kumar has taken. It's not come out of the blue. So you have had a cycle distribution scheme, you had a scholarship scheme, you have 28% of women in police in Bihar. The national average is 12 to 13%. You have 50% panchayats, you have a reservation for women. Correct. So this is seen as a series of steps in his attempt to empower women of the state of Bihar. That's one. Second is it's also tied to a hope of getting rupees 2 lakh in the future. Because if you have a good business plan, that's what the government is promising, then they will be facilitating a 2 lakh rupee worth loan from other banks. And when we asked questions as to what you have done with this money, this we asked when the money was transferred in the accounts of the people, 58% said we have started some kind of a small business. Correct? So, and to be fair to Nitish Kumar, he has not fallen in the trap of a Maharashtra or a MP or a Delhi or a Karnataka kind of model wherein you have to give a cash dole every month.
No, but Ajit Jha, the state simply can't afford a monthly cash dole. Even here, the math suggests that the amount of payment that will be required for
a monthly cash toll. Delhi announced it, they haven't implemented it. The state of Bihar, impoverished as it is, simply can't afford it. But you were speaking to women as well, and you saw those who received the money seem quite happy. And the contemporary wisdom out on the political street in Bihar at the moment seems to be that this potentially could be the singular biggest game changer, even though Professor Bhalla doesn't agree.
You know, I think as far as women are concerned, I have never seen such a big gender gap anywhere, wherever I have covered elections, in favor of the incumbent, and that also after 20 years, right? And most of the women I spoke to, and these women were basically from Dalit, extremely backward castes in different parts of Bihar. Most of them came out with a word, Nitish ji to hame swabhalambi bana diye. So the whole idea is that economically they have become independent, and most of these money was given in form of loan to start small businesses, chudi ka, to badi ka, so you know whatever small little businesses, and with 1% interest. And I heard that various assessments that they always return the money back to the banks where they take the money from. And the rate of it's a very good sort of return policy, and it has worked wonders. Whether it is as Amitabh was pointing out, the young women vote, the school goers, you know, the cycle scheme that was started, if you remember, in his first term, and those girls have now grown into young women, and most of them, all of them seem completely. They find Nitish ji adorable and Prime Minister Modi, which is very interesting. So it's a jugalbandi between the two.
After 20 years, one would imagine that there'd be a certain level of anti-incumbency amongst voters, especially around the incumbent. But amongst women in particular, despite his ill health, Nitish Kumar seems to tower above everybody else. Is it also to do just with the fact that women in particular are concerned that if the RJD comes back to power, then there could be a return of Jungle Raj?
It's actually very interesting. In any other country, I mean, we saw elections in the United States where Biden was in ill health and he lost the election. And I was very surprised to see that here, Nitish ji's poor health, everybody is saying you can't leave an older person just because their health is poor. I have some things to say about this 10,000 rupees plan. I think from my perspective, if you look at the long-term view of things, it's so impressive to see that they've been given a very large sum, which is much more than, which is like 4 times the amount that was given in Maharashtra for a poorer state.
No, but that was monthly. This is a one-time grant.
This is a one-time, but when the women we spoke to, they are saying they have got 10,000. They're not saying they got 8,000 or 5,000 or 4,000. Whoever here and we come across some women who haven't received it partly because they're not eligible or they don't have the paperwork. But whoever has received, so for them in the past, whenever the government gave, like Rajiv Gandhi said that only 15 paisa came. Here, the entire 100% has been transferred. Now, I think it will have, if anything, will have an impact from talking to people. This is something that seems to be a game changer. But is it a good scheme? Will it create entrepreneurs? Research very clearly shows that microfinance, when given to people, it increases the rate of entrepreneurship, businesship, from 5 to 7%. That's a tiny increase. For us to believe that everybody around us is an entrepreneur is kind of a big stretch. On the other hand, these women, it's not a loan. It's very clearly they're saying that it's a seed grant, which means it's a grant. So you take the money, do whatever you feel like with it, and those of you who are entrepreneurial can actually submit a plan, and then the bank will consider it. And, I haven't heard anybody except for one person saying that she will actually prepare a plan. Everybody is thinking of how to use it. So it's an efficient transfer of funds, very efficient transfer of funds.
It's also very templatized.
But it's a bad scheme It also means that what do we expect from the democracy in future? Would the future elections also involve such larger sums? And nobody, absolutely nobody, not even the opposition, is talking about what is the fiscal impact of it.
No, far from. Tejaswi Sanjeev Srivastava is promising 30,000 rupees, that you got 10,000 from Nitish Kumar, I'll give you 30,000 rupees. And Dr. Kaushal makes an important point. This then becomes a templatized SOP. All state elections, all governments just need to do this if this is your route back to power.
Absolutely, Rahul. So it's a very strange situation we are now seeing. So from Haryana, so it started with MP, then Karnataka bids, then Maharashtra was the last example, and now this. So all you have to do is, after 4 or 4.5 years of good governance, indifferent governance, bad governance, whatever, towards the last few weeks, you announce such schemes, and suddenly, and I disagree only on one bit with Surjit Bhalla, that I think it is a game changer. A lot of people, a lot of women, see, women, like Amitabh was saying, since the days of cycle distribution, good education, comparatively good law and order, then prohibition, they have veered towards Nitish over the years. But getting money is the first time for them in this amount, and it has made a change. The only interesting factor is, like Priyanka said, Priyanka Gandhi in one of our public meetings, you paise le lo, vote hame de dena. So, will the traditional RJD India bloc vote of the women, which is minorities and Yadav women, I suspect they will still take the money and vote where they want to.
But for many, this is 10,000 rupees in the hand versus 30,000 in the bush.
No, nobody is believing Tejaswi's job offers or 30,000. I think somewhere they are reconciled that he's just playing competitive populism. So he has to come across as one up on them. But his credibility on these promises right now, I don't think there are many takers on the ground.
Let's come to the second very critical issue, which is to do with the incumbent's health. And we saw how in the United States, the health of President Joe Biden became a knockout blow for him. Surjit Bhalla, here, as Dr. Kaushal touched upon, it seems to be a source of sympathy. He's by and large been okay, nuksan to nahi pahunchaya. It's not his health, his mental capacity, physical ability should really be, at least on the outside, a bigger issue than it is. It's causing a positive sympathy rather than becoming a big negative.
See, if you interpret the fact that I think the NDA is going to score a significant victory in this election. By significant, I mean 2/3 of the seats. Now, we are trying to look at causes, and that's why I said that, the 10,000 isn't even a game changer at all, because they would have got those votes anyway. So what does it mean to say anyway? Elections are basically to look at the alternatives. And I think no matter what you do, in most people's eyes, and that's what I believe, the alternative is not very palatable, is not very appealing. Nitish has got, now coming back to directly, has got a record of actually working, and you mentioned the bicycle scheme, so on and so forth. And, he's considered Uncle Nitish, and he's a good person. Now, the comparison Biden is not really very appropriate, because he was quite, in the case of Nitish, he's staying out of the public eye, making a speech, and he reads a speech, and you know that the decisions are a joint decision between Nitish and the BJP. So, and I think the BJP will end up getting more seats than Nitish. So that's just to prove, from my point of view, empirically, that it is neither the scheme of 10,000 rupees or Nitish's health is really at issue here. What is at issue here is what's the alternative,
So
and I think the alternative...
Can I just make one statement?
Yeah, Sanjay.
If Biden had a BJP apparatus backing him, it wouldn't have been an issue in US also. See, and the opposition here is also equally ineffective in making this an issue, because they are not sure whether it will be counterproductive, it will boomerang on them. But more than that, it is the way the BJP manages. the entire ecosystem. I'll take this as my turn and complete this bit. See, so we were there at a Nitish rally at Triveniganj a couple of days back. I was pretty impressed the way he spoke, made people raise their hands and everything. But it was all so monitored. Once he got down on the stage, we shouted his name. One of my fellow travelers who knew him very well, he looked, there was a faint glint of recognition also, but he didn't stop. So this kind of management, no taking of phone calls, no speaking to anybody, even the manifesto release, 30 seconds, open, come, shut the gates and go back. So nothing. So who could have done that in US? So, and again, the Republicans just hounded here, both Congress, RGD, everybody is a little tentative. कि भाई संस्कारों के खिलाफ नहीं जाए.
It's a very uniquely Indian construct, Amitabh Tiwari, the fact that you've got somebody who's clearly not all there. Yet it is true he's doing 4 or 5 sabhas, he reads out from a script, but this is not the Nitish Kumar that all of us know from 20 years ago. And yet his health is not attacked because there's a concern, which seems to be true, that this may actually generate sympathy. The Indian culture of not disrespecting someone who's now unwell and actually saying, एक बार और इतने साल किया एक मौका देके देखते हैं. Amitabh.
Yeah, see, essentially, he's been here for 20 years and he's done good work, significant good work. Correct? When people compare Lalu's era with Nitish Kumar's era, even
no, but good work is relative. Good work is relative to where Bihar began from as a base.
Correct.
When you compare Bihar at the moment with other states, it has the lowest per capita income even at this moment.
Correct.
Yeah.
That's always been there. So people make two comparisons. One, what other states have become and what Bihar was 20 years back. So when they compare with other states, of course, there is still a lot to be done. When they compare with Bihar of 2005, a lot has been achieved. See, again, what we are discussing is that he is now a senior citizen, comparatively. Correct. Also, the number of youth population is high, but the number of youth voting population is lower because 0 to 18 cannot vote. So 30 plus voters who have seen his work, have sympathy for him, and the youth who have not seen his work perhaps, or have not seen the earlier work and have no other base to compare, may be looking for change, but their numbers are smaller. They're only 25% of the voting population. 30 plus is 75% of the voting population. This culture thing. And the RJD Congress are not attacking because I think somewhere in their mind, their only hope now is that Nitish is not made the CM by BJP and Nitish again comes back to Mahagathbandhan to become CM.
Do you think that's possible? We were with Pappu Yadav yesterday, Ajija, and he said that there's an open offer, aap dekh lena, ye banayenge nahi CM, Nitish Kumar will come back with the RJD. Far from thinking of him as a liability, they're still trying to woo him and win him over to their side. It's the most fascinating business of political somersaults, which don't seem to have a negative rub-on this guy.
Yeah, that's a good point, what you pointed out, that the fact that he's a Dalbadlu Chacha, as everyone calls him, is not seen as negative. The idea is कि Nitish रहेंगे तो बिहार का विकास होगा. That is associated with him, number one. Number two, the fact that we did not mention, when Nitish came, the first thing that he did, just like Yogi Adityanath in UP, the crime rate just fell down. So for women, that thing, that security, कि 6 बजे के बाद जब अंधेरा होता है, तो I can go out and nothing happens to me. That sort of, makes him, that's why he's big favorite for women. And the third I found out, which was very funny, a lot of people told me, Bharat mein, so the typical thing is जब बेटा बाप को गाली देता है तो people start hating the बेटा कि भाई आपके लिए इतना किए. So Prashant Kishore, he's the one who's attacking Nitish left, right and center. So many of the people told me घर में रखते थे इसको नीतीश कुमार और अब ये जो है रोज गाली देता है उनको. ये कोई तमीज है बात करने का?
This would typically be a knockout blow in any other state. I mean, especially in a country like the United States where you're based at the moment, if this was to happen, it would not even lead to the candidate being allowed to stand. Here, it's actually creating sympathy for the incumbent chief minister.
Yeah, part of it is also, imagine a situation where BJP was in the opposition and not an ally of Nitish. It would have been a very different scenario. They would have talked about his health. They would have talked about his mental health. So I think there is a cultural difference, but there is also that BJP would have gone really against.
So why do you think RJD is not doing it?
RJD is not doing it, but another thing that that Nitish Kumar has done, he has created this very fine balance in this state. For instance, he has kept the BJP's communal politics at bay, and he has kept RJD's caste politics at bay. So in that sense, many people actually think that he's bringing that balance. So there is a sympathy for him on many counts. One of this being, the balance that he's created, the law and order thing that they have. And RJD is probably not very well equipped. They are not very well, they haven't planned this very well. They have, their response, BJP's response to this 10,000 scheme might have been another Revdi. Like, PM Modi has said, Revdi nahi, he was against Revdis for a very long time. This 10,000 scheme, it looks like a Revdi, it tastes like a Revdi, it is presented as a Revdi, and it is also accepted as a Revdi. But no, there's a competitive welfareism that we see. So it's kind of very sad that, people of Bihar look at politics now as what are they going to get from various political parties. Earlier, Nitish had started this conversation, which was about, he'll create roads and bring electricity and education. But now seems to be the focus in terms of what are you going to get personally.
Sure. Let's spend a moment on why the opposition hasn't made a bigger fight for it. For a long time, it seemed in the 2020 election that there was anti-incumbents. You could feel it on the surface. This is COVID, migrants coming back, Ajija. This time, A, on the surface, the anti-incumbency seems lesser. And B, the Mahagathbandhan battle never really came together. Very few joint appearances. Rahul Gandhi staying out of it after his Vote Adhikar Yatra for a long time during the holiday season. Tejasvi campaigning, but he's a one-man show. For some reason, they simply haven't been able to bring the opposition campaign together and take it to a climax at the right time.
Yeah, absolutely. The Jugalbandi that you have between Prime Minister Modi and Nitish Kumar, you see that completely missing in the Mahagathbandhan. During the Voter Adhikar rally, all of us were surprised, and there was a buzz all around that not only Tejashwi and, Rahul Gandhi, but also Dipankar Bhattacharya, Mukesh Sahni were going around. But after that, Rahul Gandhi totally absent from the campaign. He only came back recently, number one. And number two, the fight between the two sides. The friendly fights are still going on in 12 constituencies, when last time they had lost with only 12,700 votes. So if you have 12 seats, straight away you give the 12 seats to the NDA, number one. Number two, not even once have they campaigned together after the Vote Adhikar rally, seriously. Whereas, if you remember Amit Shah's, he took a meeting with the BJP leaders. He pointed out, इस बार हम BJP के लिए campaign नहीं कर रहे हैं, हम campaign कर रहे हैं NDA के लिए. That, I think, in a coalition sends a very positive signal, which these people have not.
No, but look at how Prashant Kishore has made a fight for it. Now, no matter what he gets, Amitabh Tiwari at the end of it, that's a different matter. His is a new party. But he's really, over the last 3 years, slogged physical effort, mental effort. For some reason, Tejaswi, who's got everything to win and nothing to lose, hasn't put in the same kind of physical effort. He hasn't done the yards in the way that a complete outsider like Prashant Kishore has.
Because Tejaswi is a typical politician. He became active only 3 to 6 months before, or he becomes active only 3 to 6 months before the elections. Actually, if you see, whatever the Mahagathbandhan is raising as issues, some of those issues have been raised vociferously by Prashant Kishore's party, and they have copied it from Prashant Kishore. The issues on corruption with regard to ministers in NDA government has been raised by Prashant Kishore. The Mahagathbandhan has not raised it. The issues on education, health, unemployment, migration. So somehow the opposition is playing typical politics of staying away from hardcore door-to-door politics for 4.5 years, coming on the scene when the elections arrive. And of course, there is a lack of coherence in the campaign. Even 3 months ago, when I was here in August end and September, NDA had one poster, common poster across Bihar. Left Nitish, right Prime Minister Modi, some slogan, and NDA Sarkar. Rozgar Lagatar, NDA Sarkar. Across Bihar, even today, you will get Tejasvi Sarkar as posters of Mahagathbandhan. There is no Mahagathbandhan Sarkar poster. So there is a complete lack of coherence in the campaign and significant research. When unemployment is an issue, migration is an issue, how will you solve it? When there is a serious question about the credibility of Lalu Yadav's family as having solutions to problems or being able to take Bihar to a new level, you need actual tangible solutions.
No, but Sanjeev Srivastava, it was said that in 2020, Tejasvi was too early for him. He wasn't fully baked. In terms of his political cycle and journey, this is when he's fully baked, or he should be fully baked, and far from having progressed. Political wisdom at this moment suggests he's actually regressed as a leader. How can that even be possible, and why is it happening in your view?
So that's Tejasvi's personality also, to some extent we should understand. He is, while I don't agree to the BJP description of him as a dynast, but the fact of the matter is that he is a dynast. He has been brought up in comfort and certain easy life. So that kind of hunger, despite his best efforts, he's addressing 15 rallies, but somewhere he has his pat. He knows if he doesn't become the chief minister, he'll become leader of the opposition. So he'll be one pole of the power always in Bihar, at least in near future and now. So, and also you have to sympathize with him. While on the one side you have a galaxy of Mr. Modi to Amit Shah to Nitish Kumar to Lallan Singh to Samrat Chaudhary to Kushwaha and Chirag Paswan, here it's virtually, except for Mukesh Sahni.
I don't buy that. Look at Hemant Soren in Jharkhand. A one-man army gave a mighty machine a run for its money.
Akhilesh, a one-man army virtually. But still, the face of the campaign here, whether we like it or not, has willy-nilly become Tejasvi with no support from Rahul. Even Rahul's support wouldn't have mattered much. It's nice to criticize for the lack of it. But in the end, it is the simple, if you take a paper, just jot down all the casts, do the maths, numbers, we know the outcome.
No, also one is just the cast and the and the numbers. Neeraj Kaushal, the other fact is that it's an uneven contest. I was, on a flight when I was coming in. C.R. Patil and his people were on the flight, and he's a very senior union minister. He's been given one particular area, a few constituencies. He's camping there just to make them win. The Delhi CM is here. They're all coming in. It's a mighty machine, arguably the strongest election machine ever assembled in this country, up against a ragtag coalition that can't seem to come together.
I think that's the real problem. Again and again we see that the India coalition, while they have a lot of groups, they are never able to come together, and they're not able to actually put their entire machinery behind one person, support behind one person. Caste politics no doubt dominates the state, but I think economics and progress matters. That's what we've seen since 2005. Somehow or the other, the voters in this state have been able to keep the extreme forces out. And my hope is that these, although I don't like the 10,000 rupees that is given, instead of which I think will be taking away money from other schemes. One thing about universal scheme, which in a way it is that it goes beyond caste politics. So it seems like Nitish has kind of created a constituency across caste groups among women. And so that seems to me the only redeeming factor in these elections. And
Surjit Valla wants to make a point.
No, I want to come back to this dynastic politics, which I think is an important X factor, if you will, whatever you want to call it, in behind the scenes. So who, not only is he a dynast, his partner is the biggest dynast. And I think we will underestimate what's happening in India if we don't recognize that days of dynastic politics are over. People don't like it. So when you have, in the Mahagathbandhan, the two leading dynasts in the country, people rebel and revolt. So therefore, that is why, forget this 10,000. I really think it's a red herring. It's really,
So aapke liye 10,000 rupees is pocket change, but for the poor people, it seems to really make a material difference.
This was so I'll answer the following way. All the time there is, including on this trip, the caste system in Bihar leading this, that. And I keep asking, look, every politician knows that caste is important. So what they do, they will field the person of the caste over there and they will appeal to caste. So everybody's doing it. So therefore it means nothing. People are not voting on the basis of caste. If that was so simple, then you would have the results a very different way. And you're forgetting that the in-between, the non-caste people are much more. In the olden days, maybe it was important, but 2025, with drones flying around, and you think, and people know about this, don't underestimate, there's no longer an uneducated younger population, okay? So they all know what's going on.
So
and therefore,
I would disagree.
Harping on caste,
with all
I think
respect to Surjit, on three things. See, just like Nitish's health is an issue amongst chattering classes and political pundits, on the ground I have not seen one voter during last 1 week talking about Nitish's health. Similarly, I have not met one voter talking about, I described Tejasvi as a dynast in terms of his personality traits and why he's not giving it maybe his 100%. But not one voter we have met, not just in this trip, but in most of our trips who talk about dynasts, whether it's Akhilesh or Tejasvi or Rahul or whoever. But the chattering classes, and there may be some resentment, it doesn't come to certain. So, and the caste system is like, again, Surjit feels very strongly on this, but I think the caste system in reference to Bihar is really cast in stone. It is the final moment of reckoning, just when they enter the polling booth. I think suddenly उनको अपना गोत्र की सारी कास्ट और सारी गणित याद आ जाएगी. I'm just hoping the younger lot doesn't.
I completely disagree with that.
Please, you know better, obviously, about Bihar. That's my perception.
Let's take Nitish Kumar, right? He comes from the Kurmi caste, whose vote percentage is 2.49%, and he's been chief minister for 20 years. Jai Prakash Narayan, who created the biggest revolution in Bihar, came from the Kainst community, whose vote percentage is less than 2%. People like Madhu Leme and George Fernandes used to win and beat Bhumiyars in Muzaffarpur and areas like that. So I think this caste factor is made too much of. This election, Rahul, is basically around two different axes.
They were supported by powerful castes. All these examples.
No, but
JP never won an election.
Let me just make a point. This election is around two different axes. The generational axis, the older voters versus the younger voters, and the gender axis, the male versus the female. And this whole election, I feel, why the NDA has a little advantage is that the gender axis sort of neutralizes the anti-incumbency created by the generational axis.
See, essentially, on 105 seats out of 243, the same caste community has been winning the last three elections. 105. On 113 more seats, the same caste community has won 2 of the last 3 elections. So on 218 out of 243 seats, एक ही कास्ट का वर्चस्व है, irrespective of party. तो कास्ट का एक रोल है, क्योंकि एक ही कास्ट 218 सीटों पे डोमिनेट करता है, irrespective of party.
Okay, I want to now segue towards the issue of migration. A lot of people, young people working in other parts of the country, have come back at this moment to Bihar because of the Chhath Puja. Many are staying back. Tejasvi and Prashant Kishore hope that these are people who have seen what's happening elsewhere they will go back to their families and explain that things in Bihar are not the way they are elsewhere, and therefore vote beyond caste lines? Is the opposition being too optimistic that outsiders will go back to their villages and play a role in mobilizing public opinion?
I think they will mobilize public opinion, but they are optimistic in the sense that it will be in favor of them. I think they're going to be more in favor of BJP, because they think that the contrast, some of the states that they're coming from, or the national narrative of India doing so well, so they attribute a lot of them to the BJP, and therefore they would influence in support of the
How
BJP.
do you suggest the polity should try and deal with the issue of migration? I mean, there is a lack of employment opportunities, scarcity of industries, which is why these young people travel outside. How should the government, whichever one gets sworn in, be dealing with this?
This is the best thing that has happened to this state, migration of workers, for several reasons.
It's the best thing or the worst thing?
I think it's the best thing.
Why?
Because one, remittances, which is you earn double the money outside of the state and send remittances. So what we don't see in the GDP and other figures is the remittances that come that improves the level of living. But much beyond that is that you have exposure to another culture, another place, another level of development. How do you copy the systems? Bihar does not have to reinvent the wheel. They can actually copy other states, what has worked in other places, the value of education. So there's a lot of research that shows that migrant workers actually is not just the remittances, but how they change attitudes. They change attitudes towards politics, they change attitudes toward healthcare, education, political awareness. So the range of things that they do, governments will have to probably worry about why are so many migrants going, but for the people of Bihar, this is really the best thing that is happening, that they are bringing a lot of energy from outside.
Amitabh Tiwari, is there any hope of migrants acting as a youth bulge on polling day, or do you think this is just fanciful notions that look good on a strategy deck but not necessarily on the ground?
No, see, essentially, if you see the Jan Swaraj party, there is I would say an undercurrent which is very, very difficult to measure, especially amongst the youth and the migrants, these two categories of people. And many migrants have come back with this hope and desire that they are going to vote for Jan Swaraj, because they might not then need to go out of state and work. Ma'am is right in the sense that when you go out, you get a better perspective, and it's like learning from the best practices across the state, and when you come back, you try to imbibe that in the society you are living. Now these two are going to be the big game change or big king makers sort of voters, and very, very difficult to gauge which way these two.
Ajit, does Prashant Kishore have a hope? He says arsh or farsh, either the ceiling or the floor. Is it more likely the ceiling or the floor, you think?
I don't know in terms of number of seats, I can never figure out, but I think he's going to get a certain percentage of vote that is going to be critical, because the fact is that his party is the only party which is contesting in almost all the seats -4, right? So as a result, he's going to get. Number two, the social media campaign, he is number one, and therefore, जो migrants आ रहे हैं, most of the migrants I have talked to, they told me they are either going to vote for Prashant Kishore, or among the Muslim migrants, I found a lot of migrants pointed out they have come all the way from Panipat and places like that, and they want to vote for Owaisi, which I found very interesting. And some of them told me कि हम वोट देंगे तेज रफ्तार को. So I said तेज रफ्तार कौन है? So they meant Tejaswi. So among the migrants, you get a different kind of sort of profile.
But as I was speaking, Sanjeev, to some young people, they described themselves an interesting dynamic playing out. They've come from outside, they have their own ideas on what they think the state needs. They go back and they talk to their parents, and their elders tell them, nahi, yahan pe to aise padta hai, which is essentially that along the lines of caste. And they're saying, we're trying to convince our elders, the elders are trying to convince them. That's happening in the build-up to polling. It'll be interesting to see on the day of polling which way that dynamic ultimately pans out.
You are absolutely right. It will be the polling day and the results day when we'll truly understand the impact of Prashant Kishore. Like I said, I saw nobody talking about the health of Nitish Kumar. Nobody talking about Danest. I haven't frankly come across in my last 6-7 days people talking much about Prashant Kishore. Maybe we are talking to the wrong set of people. Maybe we are in the wrong region. But again, from a distance, Prashant Kishore looked much bigger than while we are coming closer and seeing things. He doesn't.
He looks big on social media, you think? Not so much on the ground, because the digital impressions are way out. Interviews with him or his reels, videos, off the charts. The question is, will it translate into votes?
Not in this election, not many votes, but I do think that he might end up getting upwards of 10 seats. So
How many?
Upwards of 10. His ceiling is 10, or I'm out, or whatever. But I think it's very, look, all of us know Prashant Kishore. He's been a major election player. I will reveal, one commentator said, one interviewee said that, listen, he knows more about the election, politics, and economy than anybody else, which I happen to agree with, certainly in this election. Second, to what extent is Prashant playing the long game?
But he's an impatient man. He's in a hurry to get
but
things
he's
done.
also young.
Of course.
And especially since we were talking about how age might be playing a part in this. So, 5 years is not that big a distance. So I think that's his motivation. He's certainly now not an election strategist. He is a politician running for election. And I think regardless of how well or badly the media describes him, his performance, I think he's a player. And
But do you think him not contesting himself was a big disservice? Because every client he advised as a consultant, he said, fight, you have to fight. It's the 101, without this there's no hope. And when it came to making the choice for himself, he opted out.
Yeah, I've thought about that just like you have, as to why. Now, part of it could be that he's really wanting to create a party, not a one-person party. So that's what often happens, and we've seen that.
They all say this, and then we end up with Kejriwal.
Yes, and I was going to mention, Kejriwal wanted to create a party, created a party, but really was quite obsessed with himself. This Prashant Kishore doesn't want to fall into that part. So
You're being very charitable towards him.
So I think, he's an election strategist. He studied elections. So I think I'm not speaking on this with as much conviction as I speak on caste not being a factor. So I think, but it is intriguing. I will give him the benefit of the doubt.
What I feel that Prashant Kishore has a major impact in this election in terms of the agenda of the election. He's the one who created the jobs, the migration, the corruption, decline in education and decline in health. These 5 issues he's hammered for the last several months. Tejaswi has picked it up, and now you find even the NDA is picking it up and finding out ways. For example, in their manifesto, they have 1 crore, right? Let's say in terms of government jobs. Then they talk about
1 crore is employment.
Yeah, so jobs, because unemployment is an agenda, therefore they are saying they'll create 1 crore employment. So in terms of agenda, he had a big impact.
But I'm very intrigued by the fact, sorry.
Yeah, no, go ahead.
By the fact that the Jan Swaraj party does not have a manifesto of its own. But how many jobs it's going to create? How it is going to create? First of all, is not contested. He could have contested from any seat.
You're a strategist also. Why do you think he didn't contest?
He is caught between his image of a politician and a strategist. He wants to get something out of this election, either as a politician or as a strategist. So, arsh pe ya farsh pe, 0 to 125, correct? Nitish will not be CM, JDU will not get 25 seats. So, he hopes that one of his
Punch comes out to be true.
Comes out to
and
be
then
true.
He says, I told you so.
Caught between these 2 images.
Okay.
And he wants to keep both the images alive.
We've had a very high quality discussion. Lots of interesting insights also gleaned through travel, which is always better and more robust than just sitting and typing away on a keypad by looking at Excel sheets. I thank all of you for having taken out the time and joining us on NDTV Battleground. Really appreciate you joining us in this rustic village setting. It's very green. You know, the fact that it's so green, and in those makhana farms, people jumping in, you know, pulling out the makhanas, you actually get a sense of how there's very little else happening. I mean, there is no industry. The only, while of course you can build it out as a super...
Contrast it with the AQI of Delhi.
हाँ यही बेटर है सर, यही रह जाते हैं मंजी पे सो जाते हैं. So much better than going back to polluted Delhi. Thank you so much for joining us. Really appreciate your time. I hope you enjoyed this broadcast. Lots of sharp insights. We'll slip into a break. We'll come back on the other side. Stay with us for our continuing coverage of NDTV Election Battleground.
Mr. Piyush Goyal's visit to New Zealand. Right now he is in Rosswell.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank.
Well, that's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Meeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is a correct advice, correct information, and in a right way.
Mr. Piyush Goyal's visit to New Zealand. Right now he's in Roswell.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Ajay Srivastava, MD of Dimensions Corporate Finance Services, with us on the show. Ajay, great having you as always. Thanks so much for joining in. You know, it's been a barrage of corporate conversations today because the earnings season is thick and fast. But I think the key point that both Tamanna and me think, Ajay, is that the earnings season is not panning out half as bad as people feared. If anything, it's actually turning out to be slightly better for most analysts. For you as well?
I think by and large, yes. Most of the companies have done decently well. I wouldn't say exceptionally well, but decently well in terms of what they have achieved. But, you know, the key point to take away from here is a singular lack of investment by the Indian corporates. You know, if you look at the cash flows of them, look at the capex and all, just see the trajectory is a horribly low number of capex out there. So yes, everybody's trying to cut costs, the advertising budgets are down, everybody is trying to see where we can put the margins in. So yes, cost compression has been a huge activity. It's not so much of sales, but what is visible is the sheer lack of investment by the Indian companies and for expansion, new areas and acquisition. I think that is standing out more and more if you look at the cash flows which come every 6 months. And you see the capex budget versus depreciation, in fact, even lower than depreciation. So you're not even replacing your assets, forget growth. So I think there's a very big concern flagging out is, yes, they can do this all temporarily, but are they really planning for any growth? And that doesn't show up in any of the cash flows.
That's a fair point, Ajay. Very good morning, Tamanna here as well.
Good morning, Tamanna.
Do you think that, and frankly, results maybe is a bit of a mixed bag. You have some which are complete dunces today and some which are doing great. But do you think that the FII inflows and the lack thereon is going to be a continuing pain point till this tariff issue is resolved?
it's not a pain point. I think it's a significant pointer to where the market should be and is right now. So, don't take it negatively that, okay, India's market cap is what? Less than 7% of the global market cap. So we shouldn't be expecting large sums of money either ways. But the fact remains that we are very good for PE investors because we allow them to come into very easily, which is a great thing for the country. So let's not just look at the FI investment. Let's look at the PE investment as well, which is sizable in this country. But the pointer is Ps are taking money out. The other bigger guys are taking money out. Institutional money is going out. We are the domestic buyers in it. So are we setting ourselves up for a continuous 2 to 3 years of underperformance? There can be spikes and ups and downs, but we already done 1.5 years of bad performance. Are we setting ourselves at a base which is so high that we will not make adequate returns to compensate our equity risk? I think that's a challenge here. More than the sheer number of investment, flows can go up and down. It's a sheer pointer that it's a one-way street at this point of time.
What do you think has given some comfort when you've looked at the corporate results so far, Ajay? And because most of it is out, especially the large caps and all of the sectors, do you think consumption has been the bright spot? Is it banks? What have you liked?
I think autos have been exceptional. Okay. Definitely. They got the biggest boost from, of course, GST. Yeah. So autos has been absolutely exceptional in terms of their performance. And they're good companies by and large. So one shouldn't worry about them. And auto ancillary as well are doing reasonably well. Most of the companies are doing reasonably well. So I think auto as a segment has done remarkably well. Some of the new age companies are doing reasonably well in terms of getting their act together, of getting the profitability. So whether it's a delivery commerce company, whether it's other kind of companies, you're seeing very clear focus on profitability. So I think there we are seeing a very clear plus sign in terms of what's happening out there. Some of the newer companies have come up in engineering space, defense space. They have done very, very well, and I think growth is coming out of there. More importantly, I think some of the pharma companies, which are CDMO companies, which have been with the PE investors, they have done reasonably well. Their performance is exemplary, and 2 or 3 examples are very clear. So they had a long capex cycle. They're coming out of it. So I think buying this segments has been pretty good. So it's been a pretty decent bunch of returns, as I say, for select bunch of companies. But the broader, older Indian corporate, I think that's the one which is looking like so scared to do any investment altogether.
Thank you so much.
You have a good day.
Mr. Piyush Goyal visit to New Zealand. Right now he's in Roswell.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment, one administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much, you're starting golf. We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, in the equity markets, the IPO market is something that has garnered a lot of attention recently, not least of which because a few eye-watering valuations have been proposed, and they've found buyers. In fact, some have gone so far as to say that you might need to check your glasses. But then be that as it may, the question is, if you are looking to invest in a company, what should the approach be? And if you are subscribing to these IPOs, what should your thought process be? Because you may not necessarily have all of the information that other people do, or maybe you're not spending enough time looking at that information. This is going to be an attempt to tell you what to look at, because there's a treasure trove of information available out there. Sameer Dalal of Natvarlal and Sons Stockbrokers is joining me now. He's a regular on the markets leg of the content that we bring you through the day. Sameer, thanks so much for taking the time. Let me ask you this. First of all, IPOs seemingly in India and everywhere in the world, but particularly in India, go through seasonality or cycles. Is that true? And what have you witnessed over the last many years?
Yeah, Alex. So thanks for having me on the show. And you're absolutely right. There is some amount of seasonality and cyclicality when it comes to IPOs, because IPOs generally come out when the markets are hot. And the reason for that is that the promoters then get good value, or the selling shareholders get good value for the stock that is being sold. Now, generally, IPOs are good for companies because it gives them capital to grow. But you know what's happening in the current situation is it's not a lot of growth capital that's being raised, but it's more of selling existing shareholders. Because in India now, the private equity market has become so big that a lot of these companies are getting their growth capital from private equity. And then what's happening is we are getting to buy these much later when a lot of the growth is captured already by these private equity investors. So I think that is something that is very important that we should look at, is something that who is the seller? Why are they selling? Is the money going to the company for growth? Is it going for debt repayment? Is it going for, just an exit of a promoter or existing shareholder? All of those things need to be looked at. And that is why I think there is something that we need to look at in IPOs in more detail than what we do look at. And the cyclicality will obviously be there given the fact that the markets are hot right now.
Okay, that's fair. And you've talked about a few things that I want to discuss over the course of this conversation. But Samir, just to draw a parallel that I think a lot of people will understand, would you say that it's kind of like a sugar cane that is going through the grinder, and when you're at the IPO level as a retail shareholder, what you're getting is perhaps the third run of the cane that has gone through the grinder? Would that be an apt analogy to make? You're not getting the fresh juice.
Oh, absolutely. I think that's exactly what I discussed, when I said the PE guys put in the money up front, right? Now the question is, are you getting it through the third grinder? Or are you getting it through the first grinder? That is up for debate based on individual companies. You can't just use a single brush and paint all IPOs alike. But largely, yes, that is what we are getting at this point of time. Also, what we are getting is we're getting this crushed cane at a price of, let's say, full price of cane. So, it kind of leaves eventually not a sweet, but a sour taste at, maybe going down the line. So that is something that we do need to look at. But yes, definitely, I agree with your point that we are getting something that has been squeezed out to some extent. But like I said, I can't say third time.
Okay. So one of the reasons why I wanted to have this conversation is because there was this entire debate about the Lenskart IPO. And as we're doing this conversation, we still don't know what the listing price is going to be. Who knows? The grey market premium or the suggestions are that it might just list at a premium. But the question is, are you looking at this from the right lens, Samir? Because these new age companies, because of the times that we're living in, are being pressured to show a profit. And that's what Lenskart did. Though it did not show that profit with organic activity. It sold mutual fund units and there was a fixed deposit that was matured, and that resulted in the profit. And so as soon as there was a profit, Samir, people started using that as as a metric to judge them, to say the price to earnings is exorbitant. But then the argument that was made is that why don't you look at the revenue and use the price as a multiple of revenue? And if you do that, then it's not as expensive as certain other IPOs. How do you judge valuation?
Okay, so let's take Lenskart since we are discussing that. And if I had to just value every company on price to revenue, then the opportunity that would turn up in the market for me to invest in would be far more than what Lenskart stands to offer, right? There are companies that have, I'll just give you an example. Dixon is trading at, their gross net margins are 2.5% net profit margins. So if I were to just purely value him on top line and top line growth, then I think Dixon could probably be a multiplier for here. So that's not the answer to the question that, people are saying that how should we value this company? So there are a couple of metrics that I would like to look at when, let's talk about Lenskart now, that we look at. So top line growth is one of them. Top line growth is coming. Why? Because he's constantly increasing his reach. He's pricing better than a lot of the existing mom and pop stores and stealing some of their business. The market is expanding, yes. But at the moment, the question you got to look at is what is the market expanding at and what you're taking away from, I'll not say unorganized space, but mom and pop stores. Yeah, mom and pop stores are standing to be losers in this bargain. So can you continue this kind of growth endlessly? And even if you continue this growth, at some point, you've got to start upping your prices to be able to make money. Now, I like to say, two factors that I look at in any company, and forget IPO. Across the board, every company that is there listed should have two parameters that everyone looks at. One, obviously, is growth. How much is the market opportunity and what you can do? But second is the ROE, the return on equity. If I am putting 200 crores to work or 500 crores to work or 1,000 crores to work, what am I getting back at the end of the day in that? Today, if someone tells me invest 1,000 crores and I can give you 6% return on that, would you go out and you have to take high risk for that? Would you go out and do that? Probably not, right? So what changes for a company like a Lenskart if he's not able to deliver profitability and he's not able to say that, look, 2 years from today, I will say I will up my pricing so my EBITDAs will improve and my net profit will increase. Now, if you're going to do that and you value him 2 years down, at that point, what ROE will he generate at those higher price points and what will be his PE multiple at that point? So both these factors you got to look at. And I don't think he's going to be able to deliver anything significant. Now, if you just want to keep valuing him on sales, I mean, I believe sales is for vanity and profit is for sanity. So if you want to be on vanity, go for it.
That's a good line. That's a good line. And at 6%, you might as well put it in a fixed deposit, even though the taxation is not going to be as lucrative as the equity market is. But having said that, let's come to the brass tacks of it, Samir, therefore. The other factor to note is when you're going for an IPO, a lot of people go in for that listing pop, which has been harder to come by in the recent past because of the sugarcane analogy that we had. There's not enough juice left. And so from that perspective, you should be willing to hold it for years. But the point is that when you participate in these IPOs, because they're so overbid, you get a very small slice. So is it worth applying for an IPO in the first place? Or should you just wait for an opportunity to purchase these companies down the line whenever the opportunity presents itself?
So Alex, I would like to say I prefer the second strategy where we can buy it at a better price, knowing full well what we're doing and not working on a lottery system kind of thing. But sometimes you may not get that same opportunity again. I'm not saying you will not, but you may not. Now I'll give you, it's still early days, but NSDL, the IPO was at 800 rupees. This is a duopoly business, CDSL, NSDL. The stock is at about 1,120. Now, I would like to say I'd love to buy this stock at 800 rupees or even below, but I'm not sure I may get that opportunity again. So, like I said, you can't paint everything with a single brush. If there are certain companies which you think have great long-term growth, which are difficult to come by, which you may not, even in a market fall, you may not see too much erosion in the stock price because the operating leverages for these companies are very strong. The ROEs are exceptional. Then you go out and make the investment during the IPO time and hope for the allotment. But in general speaking, I think 90% of the IPOs, you could probably follow the second strategy where you wait for a market fall. Look, every few years you have a 10 to 15% correction and every 7 years you have a 40% correction if you go back into history and see. So over a period of time, identify which stocks you want. Wait for those corrections, you will get them, and then that's when you go ahead and buy. So I prefer the second strategy, Alex.
A quick question on ROE, since that's one of the key metrics that you've pointed to, and of course, again, here, there is no one single answer to this. It would depend on the industry and the company. But what would you be comfortable with? And if you can give us broad ranges for, say, a manufacturing company or a commodities company or an IT company or a services company?
So ideally, a 15% ROE would be something ideally that I would say is something I would like, because that means you're getting twice the return against putting your money in an FD, right? So 2x of that, 2x of your risk-free is a very good return. If you are able to generate ahead of that, it's exceptional. Now, ROE to me is something I use to determine what price to earning multiple or price to book value a stock should be assigned. Because the higher the ROE that you can generate, it means that your capital use is fantastic, right? Now, I'm not saying everything can be like Lever gets an ROE of over 100%. And the reason is they don't do a lot of their own manufacturing. A lot of it is contract manufacturing. So they've not put in as much equity or capital, and they keep paying it out and they're making great amount of profit. So you don't assume something like that to trade at 100 times earnings and stuff like that. But yes, should these stocks trade at a premium to others? Absolutely, they should. And for me, 15% is good, 20% is excellent. If somebody is about 25%, now there are companies, you give them a slightly higher value and you assume that these higher valuation multiples could sustain as long as the entry barriers are very strong. Now, in the simple case of what we discussed, NSDL, which came for an IPO recently, entry barriers are very high. ROEs are excellent. This is a counter that one should stay invested in for the next 10 years. I think this could be a multi-bagger even from today. Even though the juice has been squeezed out, I think there's still a lot of juice left in that counter. I think the equity cult in India is only beginning. If you also have your dematerialization of insurance policies, this is going to be huge upside. So everything has to be looked at individually.
Sure. Let's round this conversation off with a rapid fire. You're used to this, Samir. You know me. I like this segment, right? So I'll toss a few questions at you, and hopefully this will be beneficial to my viewers. And I'm just rambling on, right? So, in your opinion, the ideal number of stocks in a portfolio?
25.
The ideal allocation to each of these stocks, maximum?
At time of investment, 4%. But then if the stock does well, it can move up. But I would not like it to cross 10 to 15%.
Stop loss or no stop loss?
So fundamentals doesn't determine stop loss. But if the fundamentals change, exit at a loss.
Okay. How often should you churn your portfolio?
When you find a better idea there, which can generate better longer-term returns than what you are existingly holding.
Okay. Loss-making entity but tremendous revenue growth, is that a deal breaker or an opportunity?
Again, needs to be looked at from the point of how much they can grow and how soon they can turn profitable. So I like QSR restaurants, QSR companies. I think they are not making too much money, but the opportunity ahead is so great, and the profitability that can come is so great. So I would say yes, you look at it, but you look at how long it will take to turn profit.
Okay. All right. Well, thanks so much, Samir, for taking the time. It's been a pleasure having you on this show.
Thank you very much, Alex.
All right, there you go. So that should give you some sense of how to approach the primary market. And as Samir pointed out, the opportunity will always be available to you in the secondary market if you missed the bus when the IPO is ongoing. And that might actually be a good thing for you. Now, moving from the equity market to something else entirely. And this has to do with inheritance from the lens of the woman. It's an important conversation to have, and I'm joined today by Tanya Apachu Kaul, who is lawyer and legal influencer. Tanya, thanks so much for taking the time, and appreciate that you've taken the time to speak to me about this. Do you think
Thank you so much for having me.
My pleasure. It's my pleasure entirely. Do you think that there's a lack of enough awareness about this? And specifically, from a legal perspective, is it important to understand the distinction between male inheritance and female inheritance?
Yes, absolutely. A lot of people are not aware that a male succession happens differently than female succession. And, usually in our culture, families don't really take the trouble to inform their daughters or make their daughters aware of what the law is, but the sons are proactively more aware of things. So I think there's a huge gap in awareness and education for women, especially when it comes to succession, because there is a lot of difference in the way daughters succeed.
About this, because by my understanding, it would depend on which law you would fall under, and that, as things stand right now, because there is no uniform civil code, depends on your religion. Is that correct?
Yes. Absolutely. So succession depends on which religion you're from. Hindus have a codified law, which is the Hindu Succession Act. Muslims have their own personal laws. So Shias and Sunnis will inherit differently, slightly differently. Christians also have their own laws because they have the Indian Succession Act, but some parts like Daman and Diu, Goa, some Tamil Christians and Protestants, they inherit differently. They have their own laws. So it's a broad framework of laws, and it depends entirely on which religion you belong to.
Okay. Let's primarily deal with the Hindu Succession Act as well as the India the broad Succession Act,
Succession
the
Act.
Indian
Yes.
Succession Act. So let's first talk about the Hindu Succession Act. It would depend, by my understanding, Tanya, please correct me if I'm wrong, on whether or not you have an HUF, which is a Hindu undivided family, or not, right? And there are different rules that apply. Can you take us through the salient points?
So HUF is a different entity. Not every family has a HUF. It depends on whether they've created a HUF for their own family. And then we have the concept of ancestral property, which is very unique to Hindus, which is not there in any other law. So ancestral property is any property which is in the fourth generation. So it's come to you from the fourth generation. It has been undivided in your family, and all the family members are jointly enjoying it. There's no partition on paper. So that property is your ancestral property. So I think the biggest confusion, the biggest problem everybody has is they think that maybe their parents or their grandparents' property is their ancestral property, which is absolutely wrong. So that is specific. The HUF is specific, and ancestral property is very specific to Hindus. Also, the most important differentiating factor between the other laws and Hindu Succession Act is the fact that since 2005, daughters inherit as equally as a son. So you have, as a daughter, right to your parents' property, right to your ancestral property equally, just like a son. So I think this is the biggest differentiating factor.
And so that is how it stands right now. From a legal standpoint, therefore, and is that the same for the Indian Succession Act?
No, it's not.
So how does that work? And then we'll get into the nitty-gritties.
So for Christians, the law is such that the wife gets half the property of the husband and the other half goes to the legal heir. So it can be to the children. So here the wife has an upper hand because she gets half the property.
Understood. And how does that work from the Hindu Succession Act standpoint?
So the Hindu Succession Act, the wife, the children and the mother are the legal heirs, the class 1 legal heirs of the husband, of the father. So they inherit